first session, input tax credit. PT Rajiv will take us through this input tax credit. PT Rajiv, fondly called as PTR, is a fellow member of our institute. He ventured into professional practice after successful employment stints in a leading Big Four firm. He is now exclusively practicing in Indian Goods and Services tax law. He is qualified both chartered accountant and a company secretary, and also completed his bachelor degree in business administration with the first rank from the University of Calicut. He also secured a scholarship from ICAI throughout his chartered accountancy course for his merit in academics. He handled the training sessions for the GST government department officials on various topics on GST. He is a regular speaker in SARC, a well-known speaker in various micro, small, medium enterprises associations in India on Indian GST law. Invited by some of the leading commerce and management institutions in India for GST seminars, he handled various customized corporate training on Indian GST law. He is currently advising some of the big multinational conglomerates in India having an annual turnover of more than 500 billion rupees. He is advising economic wings of some of the top central government bodies on the GST related matters for the benefit of the public at large. He has appeared in some of the national English news channels and the regional channels for discussion on GST related news. With this brief, I introduce PT Rajiv.
So, very good morning to one and all present here. And first of all, let me thank the Institute for giving me an opportunity to share some of my thoughts and some of my experience on the Indian GST law. Let me also thank the SARC Chairman George and all other program coordinators for inviting me continuously for this successful program, because this is a 22nd or 23rd of the session, which is we started somewhere in May 2017 or something, when the moment the GST got introduced. The session is continuing. Still we are getting good response from the participants. So I'm fortunate enough to be part of this successful program, and today I just wanted to make it very, very clear that I know that all of you, including me, was watching mobile for the election results. Because normally they give, I don't know how it is it a coincidence or they are deliberately doing it. Every time when there's a milestone, they will give that particular date for me for the presentation. Last time it was on 23rd of April. All of you know that is the last day for availing the input tax credit. That was the day on which I was handling the first session. So this time I said, no, there isn't. Yeah. So now this time the syllabus got revised by the institute, considering in consultation with the Delhi IDTC. So again the input tax credit which I was handling long back, again it came back to me. So I said, okay, I will handle input tax credit, which is on the second day, which is that after giving the date only I came to know that suddenly I remembered that I decided that I will not work today. I will be looking only the election results. But very unfortunately, again on 23rd, I got this opportunity. So there are two advantages for all of us. One is, since you people are all switching off your mobile or you are keeping it on silent, our BP will not go up, right? Now there is nothing to do like that, because already the results are closely known to everyone. So let me start my session with a small note that this should be very, very interactive. Wherever I go, I will make it more interactive. More than I speak, I want you to speak. Okay, not like a simple sentence. I want you to speak, and let's smile. Correct? Let's be very enthusiastic and let's smile throughout the session. And I know that these technical sessions are very, very difficult to handle. Correct? Generally, technical sessions are very, very difficult to handle. First reason is there are a lot of sections, there are a lot of confusions in GST law. Already there are plenty of notifications, circulars and all. So already there will be a lot of confusion. So I wanted to make it very interactive so that all of us will enjoy the session in such a manner that will ensure that at least you will take away a lot of points today. Okay. So without having too much of introduction, let me start my presentation with a small, brainstorming session kind of thing. So first of all, I saw the material. I think you can see that. This is my material. Yeah. Sorry, in this material, yesterday, because I was handling a couple of sessions throughout last week, so I didn't get time for preparing the material. I prepared it, But in the first slide, you can see that demystifying GST e-label. See, this e-label has to be removed actually. It is actually input tax credit. Please excuse me because I was handling a couple of other sessions, so there was a small typo error. And the another one in the PPT is, payment of tax. I would have given the old chart. All of us know that the new chart has to be inserted. That is pending in that. Otherwise, the material is better and then looks perfect. But as usual, we are all CAs and we are all professionals, legal professionals, where we always disclaim, right? We always disclaim. So you can see the disclaimer also in my presentation that there will be some error, typo error or not. Because yesterday only when I was going through my PPT, there was a small error. Instead of transportation, there was a word called transpiration. So like that small spelling mistakes can step in. So I'll take you through the input tax credit. I just wanted to understand what is this input tax credit is all about. Why is it so relevant? Because there are plenty of topics in GST, but the moment you say that the input tax credit, the outlook is very different. You talk about any other topic, but the moment you say input tax credit, everybody is giving a lot of importance to that. What is the reason behind it? Can anybody throw some light on this?
Full of money.
Sorry?
Money.
Perfect, sir. Full of money. So basically, basically this is the reason. What you are saying is this: department will pull it to their side, and then we will pull it to the other side. Where are we standing? That is a confusion. Sometimes, most of the time, we will be with the tax assessee only. We will be pulling to this side only, right? So this is the reason why input tax credit is highly litigative prone area. That is the reason input tax credit is very, very important. If you look at the last regime, the service tax regime or VAT regime, whatever it may be, most of the litigation would be on input tax credit. You know why? It's very simple common sense. If the department disallow input tax credit, then that's a revenue to them. Because basically input tax credit is nothing but cash. So recently one of the government department approached me and said, Rajiv, we want a training session. You handle only the how to make revenue for the department. Session topic, there's nothing special topic. They're saying, you tell me the areas where the assessees are making mistake. You tell me how to catch out of them. I thought for a moment whether I should do this program or not. But we have some moral responsibility towards the society. So I said, okay, I will handle it. So we have some bullet points which can straight away, it's something like a surgical strike. We do it for corporate trainings and all. We know what are all the issues, what are the problems generally the industry makes, because we have completed almost, last time it was 60 or something, now we have close to 100 audits we have completed in GST. So we know what is the trend in the market, where they are making the mistake. So I said I will handle it. So the moment they get these points, they will do like that. They will pick that particular area, they will ask for the details, they will close it. They will take another area, they will send look into it, and then they will close it. So it will be like a surgical strike. They will not do like a complete audit. It's all not required. Now, see, input tax credit, you have to be very, very careful that the moment you give an advice to the client, if you are from the industry, if you are availing it, or if you are a professional, you are advising the client, you have to be very, very careful. Because something goes wrong, if your advice is wrong, then it can have a huge impact on the assessee, not now, after some time. So we have to be very, 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 very careful while we advise our clients. So we'll just get into the topic. I just wanted to understand what are all your doubts. All of you have to ask some doubts, no exception. We'll start from the ladies. Ladies first. Whatever doubts, doesn't matter. Even if you don't know GST, doesn't matter, madam. It's better. The people who doesn't know GST, people who know GST are the best people. In between people, very difficult. You ask anything, no problem. You have any doubts in GST, ITC, anything you ask, no problem. Any doubts? Not now. So you are completely blank. Okay. Blank for now. Okay. Any doubts? Anybody has doubt?
I have doubts.
Yes, please.
See, for input tax rate, what are the area of eligibility What is not eligible?
Perfect. Very good. Do you have any doubt? Any doubts? You can ask openly, no problem. Any
What is the
doubts?
consequence of taking a wrong input?
Very good. What is the consequence of availing wrong input tax credit?
The GST are too written. How does ITC?
2A versus 3B. If it is not matching, you don't worry. Most of the 3Bs are not matching with the 2B. Either 2A will not match with the 3B or 3B will not match with your GST 1. Everything has to match, but it will not happen. I'll tell you one of my clients is where the unreconciled item between 3B and 2A is in 1050 crores. They're still reconciling. Previously it was 200 crores. They are still reconciling. Now some of them, recently they told me that we reconciled 50 crores. Now it has come down to 100 crores. So 150 crores or something. Still they are reconciling. So don't worry. I'll tell you the technical reason why you should avail it, how you should avail it. Okay, you are eligible for tax credit even if it is not reflecting it. So what is the outlook? I will answer all your queries. After the session, if I don't answer your query, please do get back to me. Okay. Now, what is the relevant statute? So we have, all of us know that we have CGST, SGST, and then UTGST, and I will touch upon only very specific areas of input tax credit. That is, I will take a couple of definitions, and I will take a couple of the chapter 5, that is input tax credit, and then I will take chapter 5 of CGST rule, that is ITC rules. This is how I am going to handle. Anyway, this IGST section 20 and 21, that is 20 of the IGST Act, 21 of the UTGST Act is giving reference to the CGST Act. So we don't have a separate rules for IGST because basically IGST is giving reference to CGST Act. Okay, so that will be like a verbatim. It is, the SGST it is verbatim. That means both the sentences are same. So you don't have to worry about any other law. Just stick on to CGST Act. So we want a PPT or we don't want PPT? We will take it without PPT. That's better, I think. No? So I don't know how to make it. Yeah. So what is input tax credit is all about? We will, as I said, we have definitions. We have set of provisions under the statute, and then we have relevant rules under the CGST rules 2017. So let's begin with the definition, relevant definition. What is the definition relevance? All of you would be knowing that if you want to learn a language, how do you learn? You will straight away go to the sentences or you will start with words. Alphabets first, then you will make the words out of it, and then you will make a sentence out of it. So the definitions are like alphabets and words. First you have to understand what exactly it means. Then only when the word is put it into one particular sentence, you will be able to understand the real meaning of that particular sentence, right? That is how it looks, right? So first we will start with the input tax credit. So section 2 subsection 63 of the CGST Act 2017 defines input tax credit means credit of input tax. That's all. One line sentence. Very simple definition. No? Generally Indian laws are not like this. But this time they made it very simple. Credit of input tax. But story doesn't end there. Obviously, as usual, we will come back. What is input tax? Because credit we understand. What is the input tax? Input tax has been defined under 2 subsection 59, where they define that what is input tax. Sorry, not in 59, 62. 2 subsection 62, they define input tax means any tax charge. What is this any tax? CGST, SGST, UTGST, IGST, all these taxes charged on the inward supplies. Charged on the inward supplies. That means if you have an inward supply where there is these tax components, you are eligible to take credit. They further went ahead and they said also you are eligible to take the reverse charge mechanism payments under 9.3 and 9.4 of the CGST Act 2017, right? And you have the similar provisions under the SGST Act 9.3 and 9.4, and we have the similar provisions under 5.3 and 5.4 of the IGST Act and 7.3 and 7.4 of the UTGST Act. So RCM, so normal CGST, SGST taxes that on inward supplies, and second is the RCM tax payments. So basically, reverse charge mechanism is your input tax credit as per the definition of input tax credit. Correct? Input tax credit is nothing but credit of input tax has been defined. I have a small doubt. Is your transitional credit is an ITC? Is transition, because I left out nothing. Even if I don't see the presentation, I didn't leave anything. I covered the majority of the thing. And it should be, obviously, it should be used.
What do you mean transitional?
I'll just complete, sir. It should be, one more condition is that it should be used or intended to be used for the furtherance of the business. That condition is there in the input tax itself. Okay. Now, transitional credit, okay, to come to your point, transitional credit, nothing but when the GST law got introduced, you availed the ITC, input tax credit, under the old regime, right? Maybe a VAT, maybe service tax, whatever eligible credit you are eligible to carry forward to the new regime, that is under GST, by using form called Tran 1 and Tran 2. The relevant provisions are 140, 141 and all sections are there. Based on that, you are transferring the credit. So it is nothing but an old credit under the old regime which is coming into the new regime. As per the definition, it is not there. So basically, your transitional credit is not an ITC. What is the impact of it? What is the impact of it? If you go for a refund, one of my clients, what happened is they had a transitional credit of 50 crores under the old regime. They carry forward into it now. Now, they are coming under inverted duty structure. Their pumps are sold at 12%, but all their input tax credits are coming at 18%. Now they are going for a refund. So as per 54 subsection 3 of the CGST Act 2017, you are eligible for refund of input tax credit. Now the problem is, because the transitional credit is not considered as an input tax credit, their refund application is rejected to the extent of their transitional credit. But current credit, that is being refunded. So input tax credit, the moment you use the word, ensure that it is not there. Transitional credit. Point number 2, cess. Heard about cess? How many of you have bought vehicles post July 2017? How many of you, any motorbikes or car or anything, you bought it? You would have seen some cess in that, right? Correct? Are you eligible to take credit? Provided, I'm just saying, assuming that you are eligible to take the credit as per section 17.5a. It is not coming under 17.5a or a. Obviously not a, you will not buy ship or aircraft. I assume that you bought a motor vehicle. So 17.5a. If it is there, assuming that you are eligible to, are you eligible to take the credit if you are a registered person? Assuming that you have an outward liability of cess, are you eligible to take credit of that? Can you adjust cess against any other tax payable? No, right? That is very clear. Cess only against the cess. But I defined the input tax and input tax credit, everything I have defined. But I didn't even mention about cess. So do you mean to say that cess is not a credit, input tax credit? Because if you are in the tobacco industry and all, you know that they will be charging cess. Or forget about that, there is a normal vehicle dealer who will be charging cess. They will also get it with the cess only. Are they eligible to take credit? All these Maruti showrooms or Toyota showrooms, plenty of traders. Are they eligible to take credit? Because it is not an input tax credit. You have seen the credit. You want to see the credit definition? Because just wanted to confirm that I didn't miss out anything. See, input tax, SGST, CGST, HST, then all these reverse charge mechanisms, IGST charge for import of goods, and then but does not include tax paid on the composition levy. That we have not seen, but that is not paid on composition levy payment is not eligible. But look at this. Compensation says, you are not eligible, right? Input tax credit, it is not coming under definition. But please understand, it is not considered as an ITC technically, but because of section 11 of the Compensation Cess Act, it gives you the power to set it off against your outward liability of cess. So basically, you are a professional, please understand, cess is not your ITC. Technically, it is not an ITC, but the government has given the power by way of section 11 of the CGST Act, Compensation Act, to avail the credit. Now, See, please understand the composition levy. Are they liable to charge GST? Section 10 cases. They are not supposed to charge GST, correct? They are not supposed to charge GST. So, if they are not charging, we cannot avail the credit also. Very simple rule. Now, we will understand, we will go to some other technical words. Input services and capital goods. These are very, very important because without understanding these, we cannot go because it has multiple implications. See, the reversal of input tax credit under CGST Act comes under Rule 42 for input and input services. Capital goods comes under 43. Many people say that there is no difference between capital goods and input tax credit. Yes, there are plenty of differences. Even if at the time of availment you have to be very careful. Yes, I do agree there is no difference at the time of availment. But assuming that there is a reversal comes, then you have to go to Rule 42 and 43, and where you need to have a difference, the component should be differentiated properly. Now, input means they are saying any goods other than capital goods used or intended to be used for the purpose of business. So, input is nothing but if it is a goods and if it is not a capital goods, all goods fall into inputs. Now, what is capital goods? Very simple. Capital goods, they say, goods, any goods, very, very important, I am underlining the word, any goods which are capitalized in the books of accounts, which are used or intended to be used for the purpose of business. They are using this word very clearly here. The used or intended to be used. Let me just ask you one thing. All of you have capitalized books of accounts. Understood what is capital goods, right? I have a small query here. Issue number one. What do you mean by capitalization? We have plenty of rules and regulations in the country. We can capitalize based on our company policy. We can capitalize based on Companies Act. We can capitalize based on Income Tax Act. Our own institute has provided some technical guides and all. We can AS10, whatever it may be. We can go based on that. Any other statute, if there is any definition for capitalization, which one they are talking about? Which one they are talking about? Capitalization means what? Am I eligible to capitalize? Because the rules are different under, income tax. Say, just to take one example, Companies Act says ready to use you can capitalize till such time. And in income tax they are saying put to use, right? So there is a difference between these two. So which one I should adopt? All of us are doing already. Huh? Sorry? Any capitalization is fine. So you can adopt income tax, you can adopt Companies Act, she can adopt her own company policy. Anything is fine. See, basically what happens is, there is no clarity on what capitalization has to be there. Okay? Because GST Act is very silent on how to capitalize it. There is no particular definition or they are not referring to any statute for the purpose of capitalization. But look at the beauty of it. Section 16(3), where they are talking about the capitalization, the depreciation component, where they are clearly saying that depreciation should not be claimed on the GST component under the Income Tax Act. They are very particular about it. So capitalization, since they are silent, there are plenty of judgment from the Supreme Court that if the law is silent, it is at your discretion. So there will not be any problem as far as the capitalization is concerned. Now, I have one more issue here. See, capitalization means what? Capital goods means what? Anything which we capitalize, right? Any goods, I am underlining, any goods which I am capitalizing. Say for example, I am buying a big machinery from Toshiba, from Delhi, their manufacturing unit, Gurgaon, I am just buying it, I am just bringing into Sri Perambatoor. Okay, when I am bringing this machine is a goods, I understand, but I have a lot of expenditure incurring along with it, right? Transportation, which is a service. To installation service, which is a service, which is not a goods. So, what will happen to that? Will you capitalize it along with you will definitely capitalize along with your goods, I do agree, but is it a capital goods for the purpose of GST? I will give you two scenarios. One, you can consider it as a composite supply, where Toshiba himself, itself is saying that no, I will install it I will do the transportation, I will do everything. Then it will be composite supply, HSN code only will come. Assuming that Toshiba says that I am doing a X factory sale, you take it into your factory. Then it is not a composite supply. I am engaging some third party, I am engaging some third party for installation, transportation, dot. Now it is not a composite supply. Should I capitalize first point? As per our normal accounting standard? Yes?
Yes.
But is it a capital goods? Starting with the definition goods. Transportation is the goods or service?
Service.
Agreed? So all of you agree that it is a service. Now, why are you talking about too much about it? As I said, at the time of availment, it doesn't differentiate both. But at the time of reversal, assuming that you are reversing it before 5 years, or you are providing both exempted and taxable supplies, then it has an impact. Okay, now assuming that you just think this particular thing because the formulas are different under 42 and 43. So what you do is, now most of the people, they are taking a stand that, they will capitalize it along with their goods. It has to be tested over a period of time if it is not a composite supply. My suggestion to all of you is, keep that service component separately at least. Because after 5 years or 4 years, you may not be able to identify what is the components. Keep that component different, in a separate line item, and we have to test it over a period of time. Okay, and there's no clarity also on that, so we will test it over a period of time. The same thing applicable for, you take a software. Software is not a goods or service. We disputed till Supreme Court on TCS case, TCS versus TCS Hyderabad. We tested finally. Supreme Court said it is a goods if it is in CD, and if you are asking them to do it in a program and all, then it will be a service. So it can be both goods and service. So assuming that you are doing a software, when you are installing a software, there will be other components, right? Sometimes there will be other goods component to a small extent. Can that be capitalized? Because it's a vice versa of the previous example, where capitalization is for goods and at the same time services are there, and the main component is service and then goods are there. Now, so this has to be tested over a period of time, but the impact will be there, just keep it in mind. Now, what do you mean by work in progress? We have something called work in progress in the balance sheet, right? If you put it into the work in progress, are you eligible to take credit? Work in progress, it is not completed. Work in progress. We have capital work in progress, right? If you say that it is a capital work in progress, are you eligible to take input tax credit on the working capital? Working capital, the capital in progress. No? How many of you? Yes? I want two answers. If everything is something like the same answers, it will be like today's election result. There won't be opposition. So tell me, you said yes? No?
No.
You said no. You said yes. Any other opinion? Rest of them are like independent candidates. No, I will not open my mouth. So it's basically you are eligible. Reason being, there is no such condition that the goods should be completed or it should be in the usable form. The only condition which are prescribed under 16(1) is you should receive the goods and services, and the invoices should be there, and there are certain conditions which are prescribed. We will see it in detail. So just wanted to tell you that if it is satisfying section 16, you are eligible to take the credit upon receipt of your goods. Okay, need not be in the complete sheet. Okay, because I will give you another example. Stock which comes, you are eligible to take credit, but the final product would be entirely different. Now, stock, as I said a few minutes back, I used the word very carefully that used or intended to be used, right? Assuming that stock I bought it, I am not going to use it immediately. I have an intention to use it, but I did not use it immediately. That is why they added the word used or intended to be used. Otherwise, stock or credit will be lost unless they use it. But they use the word intended to be used. So, you can avail input tax credit the moment you satisfy all the conditions upon some blocked credit, upon non-satisfaction at later point of time. Sometime what happens is section 16 says yes, if you satisfy all these conditions you are eligible. But what happens is going further 17(1), 17(2), 17(5) and all, where there are certain conditions which are laid down, That is, if you are using for personal consumption other than business purpose, or if you are using it for exempted supply, or 17.5 blocked credit, there 16.1 is saying that 16 says that if you are eligible, you avail it. But blocked credit comes and says that no, I will block you. Because blocked credit means what? It is eligible credit. But because of the statutory provision, they are blocking it. You understand what I am saying? So you have to understand and differentiate two keywords. One is ineligible credit and blocked credit. In the industry, everybody is using simultaneously, but it is not the true fact. If you are using eligibility means it is satisfying 16, blocked credit means it is eligible, but I am blocking you. See, motor vehicle you purchased, all conditions which are laid out under 16.1 you would have satisfied. 16.1, 16.2 for that matter also you would have satisfied. Sure, you are eligible, but government says that I will not give you the credit. They are just blocking it. Okay. Now we have one more definition. Business. What do you mean by business? Because I use the word used or intended to be used for the purpose of business. What is business? Because this is very, very important. Because one of the clients when we did the audit recently, the company has reversed they themselves, there's a column called in 3B, ineligible credit. What they did is, they will keep on putting numbers into it. Okay? We did it in somewhere in, we started in December, but we completed in March or something. So that time we noticed this. Then we inquired, so what is this ineligible credit is all about? So we understood that company is very good, they know everything about input tax credit. But we understand that that is a housekeeping bills, housekeeping service bills, which they are saying that I am not using it for the purpose of my production. They are keeping in mind the old service tax regime and VAT regime, and they say that they themselves decided not to take credit. The impact was around 20 lakhs. We told them that you are eligible to take credit, because the word used is not output service. It is a business. Business can cover anything. It is a wider definition. So you can avail it. Okay. Now what happens is, they availed it because we have a standing order 2/2018 where they are saying that you can avail the input tax credit by 31st of March 2019 return filing date. Till that return filing date, that was on 23rd of April 2019. So they availed it. So the business definition is very, very important as far as the input tax credit is concerned. That is point number one. What is this definition is all about? I'll just crisp definition I'll give you. Business means any trade, commerce, manufacture. I'll underline the word manufacture. There is a reason why I'm saying it, because there is a lot of disputable aspect which I can close it by using the word manufacture. Manufacture, then profession, then we have adventure, wager, and vocations. Yeah, you're right, vocations. These are the keywords, 7 keywords which they have used for defining business. So I'll repeat: any trade, profession, commerce, manufacturing, and wager, vocation, adventure. These are the 6 keywords which they have used to define the word business under 2 subsection 17 of the CGST Act in 2017. Now, the beauty comes, 17B says, any activities ancillary or incidental to above is also business. Very simple. Now, 3rd clause says, if the transaction falls into A, irrespective of volume, irrespective of frequency, continuity, regularity, all these are irrelevant. Even if you do one transaction, it is a business. People will say, no, that's not my business. I did it only one time. I sold a flat, I constructed only one project. They will say that it's not my business. Or even individuals, I will make a sale of land, or I will do a JD, I will enter into a JD agreement. They will say that I am a person, that's not my business. I am doing it only once in the lifetime. Still, it is a business. That is why there are a lot of clarification which has come to 4/2018 notification. Now recently the notification come in 2019 March, they issued 4, 6, 7 notification, all are related to this. Yeah, please come. So, please understand that your volume, frequency, all are not relevant. Okay, so I covered the major part. There are further down, there is one more point which I want to tell you. D says 17, so 217D says, for the commencement or closure of business, I will repeat, commencement or closure of business, if you are using any supply of goods or services, you are eligible. It is a business. They are using the word, it is a business. Because one of the companies, I got a query that they did a feasibility report in the market. Feasibility report. That is for a new product launch in the market. They asked me, can I take the credit? I said yes. Sir, but the product is not yet started. It is not yet started generating the revenue. I said no, it is a business. You can avail the business. Is it? Did you get a proper invoice? Did you receive the services? All conditions are satisfied. Now you can take the credit because it is coming to 217D. By using that clause, we can put it into the business definition.
I have a
Yes, please.
like if the company is not formed, like what you said, they are
Yes.
initially starting a project
Yes,
and
yes.
they are investing too much in R&D.
Yes,
It's a new product coming into India. They're
Yes.
introducing lots of things. They are getting patents.
Yes, yes.
So can they be there?
Definitely available, madam. You
Where
can.
we can do?
Sorry?
Once the company is formed or when?
No.
Since the
Company has to,
not-
legal entity should be there.
So legal entity is not there. We are just testing.
No, then you cannot because the word starting with
So once
register.
we start,
Yes.
can we do it like then?
Yes. See, I will tell you the word which is. I will then stop. It's a very good point. She's asking if I am doing a research and development, can I avail the credit? Point number one. I'm not registered. So it may be a foreign company. They are coming and doing research here to see the feasibility in the Indian market. They are not eligible. Why? The invoice first of all will go to US company. If they formed the entity here and they registered,
Completely new
no,
start.
you cannot.
There is no US entity, there is nothing. We are researching for one product since last 2 years. So a lot of R&D is gone. In fact, there is a manufacturing of a machine itself. If the machine can be manufactured or not manufactured, it's like a trial and error.
Yes.
So I think we have cracked down to 95%. So maybe
Yes.
another 6 months we have a company with us.
Yes.
So after the formation of company, can we take credit for all this 2 years invoices?
See, the issue is not the. There are three aspects to be considered to zero to your question. Point number one. What they have done is they conducted a program in Taj Coromandel. It's a real case study. Taj Coromandel, they conducted a program. What is a program? It was a German company, so all their German officials were all coming because they achieved a milestone in turnover. They started with a 40 crores turnover when they came, and now it has exponential growth. They crossed 1,000 crores within a very short span of time for such a company. So they conducted a program in Taj. They invited me also, I just went there. The invoice has gone to Chennai office with the CGST, SGST. They availed the credit also. I understood the issue. See, though the directors are all sitting here, though the invoice have raised on the Chennai branch, are they eligible to take full input tax credit? Because there are 18 states, 18 registered person. This program is for the entire country altogether. It's not for Chennai branch alone because Chennai branch is entirely different. All of the branches are also there. Now, you cannot take full input tax credit. You can take only proportionate to your turnover. Now what happens? Say for example, all states turnover is assuming that it is 100 crores each. Now just for computation. Now the input tax credit should be evenly distributed. CGST and SGST, right? So I said you cannot take input tax credit fully. It is a common credit. You cannot take it here. Point number one. Point number two. They said, okay, I'm not taking. What is the option available to me? Can I get an input tax service distributor? ISD input service distributor number. Can I distribute it? Can they distribute it?
Yes.
Can they distribute it? Yes? What do you say?
Yes.
How many of you say yeah? How many of you say no?
Yes.
Yes?
CGST can be distributed. How do you distribute SGST?
GST, yeah.
No, because under the IST rules, they said CGST, SGST come together. Even CGST also cannot be distributed. But they said CGST, SGST, if it comes as inward, you can charge IGST and then you can distribute it. But here there is a technical problem. That is why I did this case study. What happens is, there was a clarification issued by the department on ISD. You cannot use ISD as a mechanism to avail the input tax credit which was directly ineligible. By using ISD you cannot make it eligible. Assuming that the same company, Delhi office is getting the service from Taj. I am repeating, Delhi office is from Taj. Now Taj will raise only CGST, SGST. Directly if you come there and then get the invoice, are they eligible? No? Correct? No, right? So, department clarified, this has to be tested. Department said, if it is directly not eligible, indirectly actually you are not eligible. Just change this example from Taj to our audit fees. If audit fees, if they are appointing me, I would have charged IGST. Irrespective whether you appoint me or the central office, I would have charged IGST. Case is different. Because when the place of supply for this immovable property is located in Taj, which is in Nungambakam, irrespective whether they appoint them or whether they take service other states directly, they would have charged CGST, they would not have been eligible to take input tax credit. So be very, very careful. This is a lenient area where people are missing out. Please be careful with this. So I am advising all my clients, please be careful. You should not take the credit because directly you are not eligible. By using ISD as a mechanism, you cannot distribute your credit. Be very, very careful. You can take the other view also, there is no problem, but it is a highly litigation area. That is what I am saying, there are plenty. Yes?
Sir, I am registered in Karnataka.
Yes.
I have no office space in Tamil Nadu.
Yes.
I have a meeting conduct with the Taj government.
Yes.
They have issued invoice with CGST and CGST.
Yes.
I cannot take the credit, right?
No, you cannot.
That's a block.
Gone. Okay. Since you asked this, see, the similar case, there was a company called Deepal Travels.
No,
They
you
are,
apply even to CGST. SGST you can.
no, both are blocked. Both are blocked. CGST is not world, in country wise. It is a CGST of Tamil Nadu, CGST of the state. Only difference is the moment you call it as SGST, it will go to the department, state government department directly. And any shortage, they will pay the compensation. Recently, I heard that one of the state has received the compensation. They are receiving it from the central government. They are receiving it properly. So you cannot avail the credit. Now, since you said
I say SGST component alone in that
no, both are included. So
they
both
go
are.
hand in hand.
You don't look at the thing. You look at the place of supply. See, GST when they got introduced, they said it's a consumption-based tax. But you just look at GST Act. I've gone through all CGST, SGST, IGST, UPGST. You cannot see the word called consumption-based tax. It is only place of supply. That's all. So, what is the place of supply? Your place of supply. Where did you consume your service? It is in Nungambakam. That is in Chennai, Tamil Nadu. That is, you are eligible to take the credit only in Tamil Nadu. But where am I situated? I am situated in Karnataka. If I talk about place of supply, there are plenty of issues. Anyway, the learned speaker will come and handle them. Okay. Now, since come back to your point, default there was an AROA. What they were doing is, they are a travel agency like Booking.com and all. They are located in Delhi. When they get the billing done online, they are all charging IGST. They are all charging IGST, right? Assuming that, what's your good name? Kaushik. Kaushik is booking a hotel through that portal. What will happen? They will charge IGST on him, right? So, Deepal has to pay IGST. Now, in turn, Deepal books a hotel in Rajasthan. Rajasthan will raise what? CGST, SGST on Deepal. What happens? There's a complete ineligibility for him, right? Complete ineligibility for him. What happens? I am charging IGST, liability getting accumulated. Here I am getting ineligible credit CGST, SGST. So there is a blockage of credit. Now they approached the AR ruling authority, they said nothing doing. No, not AR ruling authority, sorry, it was a Delhi High Court. They filed a writ petition in Delhi High Court. Delhi High Court said, my hands are tied, you approach a GST council. So it is not yet solved. Still that case is going on. Case is adjudicated, but there is no solution to it. Now, so here input service distributor who receives an invoice, his duty is only to distribute credit. Please understand, they will not charge anything. Their duty is only to distribute credit. Only distribute credit, that too only services. Okay. All these things we have seen. This already we have discussed. This also we have discussed. This already we discussed. Input tax and output tax and excess are not required. There were a lot of plenty of judgments in 1977 from the Supreme Court. Also stationary whether I can take input tax credit and all. Anyway, that is prevalent now. Now I'll take a couple of litigation problems. See, you heard about AMC contracts. All of us will be having AMC contract, right? Either for computer maintenance, etc., etc. AMC contract, what happens is there was one condition in the CGST Act 2017, that section 16. You should receive the goods or services. AMC, which is signed on 1st of May. Now we are on which day? 23rd of May. You are signing an AMC contract. It is valid till 22nd of 2020. What is the receipt of service? Today, or I have to do proportionately, or I should avail it in the last date? You just tell me. I want your answers. How everybody is availing it now? Immediately. Are you eligible first of all? First time I avail particular. Are you eligible? Did you? Okay. Do you want me to confuse you more? I'll give you one typical example. See, one company has approached me for tribunal case. What we will do? First, you tell me what is the date of completion in my case. They approach me, then I will. First, what will happen? We'll have a kick-off meeting. First, we will go. We'll just have a meeting. We'll understand what is the issue. Blah 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 blah. Everything we'll discuss. Then the client will share the data. We will send a BBC requirements. These are all the documents, list of details we require. We will send it across to them. Then they will revert to us saying that, sir, these are all the details which you requested. Pending details we will share next week. They will share everything. We'll prepare all the appeal, everything, grounds of appeal. We'll do our research, case laws, everything. We'll prepare grounds of appeal, everything, facts and grounds. We will file the case with the tribunal. Correct? We'll file the case with the tribunal. Now, tribunal will post the case. We will go and appear. Fortunately or unfortunately, whatever, if you are lucky, it will be disposed on the same day, but most probably department will ask for extension. Assuming that you appeared again, case has got completed, registrar is calling you and saying that, sir, your case is adjudicated, everything is ready, you can come and collect the order. We will go and then collect the order, or they will send it by registered post. After that, what will happen? Then we will raise our invoices also. When we have to raise invoice also, different issue. Whether it is stage based or it's on the after getting order, that depends. Most probably we'll go with the stage wise. Now, order has come. Now I have to give effect to this. Correct? Department, I have to follow up with the department, give effect. Now tell me, what is the date of completion of service? That is what I said. If you ask me too much questions, I will confuse you to the great extent.
Date of your appearance.
Date of my appearance, very good, sir. Excellent. All of you are right. Whatever you say, it is right only. I will not say no. Yes, ma'am.
It depends, like if you are raising the bill stage wise, it will be stage wise.
Okay, stage
The
wise.
date of issue of your bill.
No problem. Sir, thinking still, see, there is no ready answer to it. Can you say what is the date of receipt of service? It is very difficult to determine. If it is a goods, yes, you can. See, raising of invoice, there is a separate provision for continuous supply of service, 2 subsection 33 of the CGST Act with the 31.5, it is there. 31.5 or now 31.1, you can raise invoice, all these things are, it's not based on your invoice. I'm not disputing that. I'm disputing when you have received the service. We'll dispute over a period of time. No problem. These kind of things, these are all the litigation prone area which are going to come up. So department will say, I will disavow it. When is your order, when will you receive the order? They will also say, even if you are eligible on that particular department will come and say, no. Have you given effect to that till such time you are engaged? See, you have to go a little beyond this. That is why I am taking this example is, you have to look at the logic behind availing the credit. AMC availed, signed today.
So is it basically the completion of your service?
Yes.
Or duration of your service?
Completion of service, that means date of receipt of service. When did you receive the service? Not completion.
Service.
Not complete.
Because your service was stage-wise.
No, when the agreement is over, that is a data completion of service.
That is what, you can have multiple arguments. I am with you only. You can argue that it is based on your agreement stage-wise. That time, till such period, your service is over.
I say most of the people enter for quarterly or monthly
Sir,
AMC.
what happens is sometimes, we don't generally, we sign an LOE contract, letter of engagement with all our clients. At that time, we clearly mention that it is stage-wise. When we prepare an appeal, this is the charges to be released, 50%, 40%, like that, we will clearly mention that. Based on that, you can also avail it. That is my point of, if you ask me what is my view is, you can avail it based on the invoice which we are raising because it is both of us have agreed. It is not the complete service you have to receive it. But there could be an alternative agreement or argument also. That is what I am saying. AMC agreement, you take it today. If you take it today, option number one, you are availing today, no problem. You are availing proportionate basis, proportionate pro rata basis. What is the last date on which you can avail it? May 2020. Assume a scenario you are signing AMC contract on in March 2018. March 2018. If the invoice is March 2018, what is the last date for availing input tax credit? 30th September? 30th September. For last date for 16.4 of the CGST Act 2017 says, last date for availing input tax credit is due date for filing return under section 39 for the month of September, that is nothing but as of now 20th of October, or annual return filing date, whichever is earlier. 17-18 we have not filed there. There is a concept of 18-19, but that is the provision as of date. Assuming that being the case, you will be eligible only for 6 months, right? April, May, June, July, August, September. That's all you can avail it, right? 6 or 7 months you can avail it, that's all. What will happen? The remaining will be gone. If you are taking a view that I will avail it in the last date. So my personal view is, you can avail it at the time of sign off itself. If you take pro rata basis, or if you take at the time of last day, both will be making you ineligible to take the credit, which is not the intention of the government, because had that been intention, they would have brought it under 17.5. So you avail it at the time of signing. Then we will dispute it later on. Now,
So the 16.4 applies to RCM reverse charge credits also?
you are asking a very important, interesting question. See, section 16.4 is a time limit for availing input tax credit. There are two exceptions to it. One is 180 days payment. Okay, if you are re-availing the credit based on section 16.3 or section 2 proviso of the CGST Act, that is one exception. Second exception is RCM, sir. RCM you can avail it based on your document. See, RCM document still based on your document date. Assuming that the RCM has some procedures. Based on that, you have to raise an invoice. RCM invoice is there. Please understand, RCM invoice is nothing but Rule 46 invoice plus payment voucher. Rule 46 along with the 52 of the CGST rules. Rule 52 to payment voucher actually. That payment voucher and then RCM invoices. If your RCM invoice is dated today, you are eligible today. Even if you have received services before. It's something like, I provided the service last year. I forgot to raise invoice, I am raising it today. 1 year before I provided the service. Now, what is the time of supply? Yes, if I am raising invoice today, I have to pay interest. That is there, time of supply is there, I have to pay interest. But my recipient will be able to take credit. Same logic if you extend to RCM also. Yes, if you are raising invoice today, there could be a time of supply and you may have to pay tax accordingly. Interest and tax accordingly, but you are eligible to take credit. So that is what little tricky, but you are eligible. Okay. Next is, see, I think most of my problems are, issues are all beyond discussing immediately. I don't have to look into my PPT. So what I am proposing is, this is a new concept which I found. We implemented it in our office maintenance, computer maintenance. We have nothing on AMC. We are doing HMC, half yearly maintenance contract, QMC and MMC. Monthly maintenance contract. See, don't write it because these are not technical words. I myself found it and then I thought, in my office, I said I will do MMC for you. That means to the computer maintenance. He said, sir, the amount itself is very small. Why should you make it MMC? You make it half yearly. I said, okay, doesn't matter. But I said, I'm very strict. I will not sign any AMC contract because I don't want to go for a dispute. Very clear? HMC. So now AMC will slowly move away. Insurance contract. Can you do that in insurance contract? When you are signing an insurance contract, can you do that? You cannot do it. Contract insurance and all will not allow you to do QMC, HMC and all. This has to be tested over a period of time. Okay. First of all, are we eligible for insurance credit? Are we eligible for insurance? Yes. But you look at the section 70. Motor car, no. Okay. Motor car, no. Then he is saying that 17A. They are saying 17(5)(a). They are saying motor car insurance not eligible with effect from 1st of, subject to some conditions, and health insurance and life insurance, they are not eligible. I will repeat, health insurance and life insurance only. Accidental insurance eligible. Any other calamity insurance eligible. Factory protection insurance eligible. Everything is eligible, only this is not eligible. Health insurance and medical insurance. This is what I said, people, Delhi High Court judgment. Then we will go to the crux of ITC. I said, this is first section 16.1. I will just give you a brief introduction. 16.1 talks about the conditions, and 16.2 they are talking about some documents, requirements and all. So first of all, I'll put it this way. 16.1 talks about eligibility. 16.2 talks about conditions. Condition in the sense, what are the documents required, what are the scenarios where you are not eligible to take credit and all. 16.3 talks about depreciation. Depreciation of capital goods. 16.4 talks about time limit. So we'll just close this PPT, we'll just discuss because we have a lot of things to be discussed here. I'll just tell you what is the provision of section 16.1. Every registered person, I'll repeat the word, every registered person, madam, to answer your query. So he should be a registered person. Now, what is registered person? You have to go to 2 subsection 94 of the CGST Act 2017, where they are saying registered person means the person who is registered under the CGST Act 2017 under section 25. But does not include UIN, unique identification number parties, no, like the consulate and all, they are not eligible. So there is a small technical issue there. They are applying for refund, correct? They are eligible for refund. If you are not eligible to take input tax credit because you are not a registered person, so there is a technical issue, but still they are getting refunds. I know one company, one department official at the time of sanctioning the refund asked me, they approached me for refund, can I sanction? I said, sir, there is a technical issue. But that is not the intention of the government. Intention of the government is to give the refund. But eligibility, once it comes to my electronic credit ledger, then only I can give it as a refund, right? For availing input tax credit, only registered person can avail it, not UANs. So there are some technical issues, but leave it apart. It's a rare cases. So registered person, or every registered person can avail it on, here is the crux, subject to, please understand, underline it, subject to restrictions or conditions or restrictions as may be prescribed or as per payment of tax under section 49. Please understand, many of the time when we read the law, we read only what we wanted to read, right? Because we will not go in detail. because most of the cases we'll be reading in between. So we'll not go in detail. What happens is, mainly we will leave this conditions and restrictions as may be prescribed. There is an ITC rule, rule number 36 subsection 2, subrule 2, 36 subrule 2, where they are saying that if you want to take input tax credit, all in particulars which are prescribed under rule 46 should be there in your invoice. Rule 46 prescribes around 17 line items. If your inward invoice, your outward invoice, as per rule 46 should have all 17 line items. Like that, all your inward supplies should have all the 17 line items, prescribed 17 line items. If it is not there, you are not eligible to take credit. How many of us will accept this? When I told this in 2017 or something, nobody has accepted it. They said it is okay. Some people said it is only procedural, Rajiv. Why should you worry about it? I said okay. Procedural means department is not going to accept your procedural issues and all. That you have to fight it out at later point of time in the court. If you are taking a risk, you take it. So now what happens is, so when I put it across to one company, they said, Rajiv, we have around 3,000 inward invoices in a month. Do you want me to check every time, check like a checklist, every time the 17 line particular items? I said no, not required. Why do you do that? Because generally there's a joke. There's a difference between Indians and Chinese. If you ask the Chinese people, we have some Chinese clients. If you ask them, sir, please count the number of pages in this book, this booklet. If you ask them to count, you know what they will do? They will think for a moment. They will count, literally sit and count it. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Ultimately they will say, Rajiv, in this bundle exactly 1001 papers are there. 1001 papers, it will be pakka. If you ask the same question to Indian, what he will do? He will take your bunch and he will just see, oh, even in 20 irukka. 1, 2, 3, 4, 5, and then sir, approximately 1000 will be there. He will not sit and count. He will say approximately 1000 will be there. So there is a difference between these two people. So always we go with a logical thing. So in our point, we always say, rather than doing it every invoices on every invoice, what I said is, so you do one thing. You take out all your major vendors. You check your current invoice and on a first invoice. If the first invoice and then the current invoice are satisfying all the particulars, you don't have to do it. You don't have to check all the things, because once they complied and then now they complied, not eligible. You won't believe, one of our office car has gone for service in Benz showroom. They issued an invoice, you won't believe, they issued an invoice without having all these particulars. We said we will not pay your money unless, it is a typical case in our office, unless you give a GST invoice with all 17 particulars. It went up to their Mumbai corporate office. Still they have not issued it. We said we will not pay. Last 1 year we are fighting. August, it was August 2018 bill. I still remember. We have not paid. We said we will not pay unless we issue invoice as per GST law. They are charging GST. Now what happens is, this was the case in the industry. On 4th of September 2018, they understood the issue in the market. They issued a notification called 39/2018, dated 4th of September 2018, where they said, no, all particulars are not required. I'll give you 5 particulars, you just ensure that these 5 particulars are there. What are the 5 particulars? GSTN of the supplier and recipient. 2, place of supply if it is an interstate supply. 3, description of the goods. 4, HSN number, taxable value, and 5, tax amount. These 5 particulars are sufficient to avail the input tax credit. So you please note, government had an it was a mistake, government understood, but not a mistake. Provision was there. Now they amended it. That means they can even catch out of you at later point of time. Now, See, ITC rules 36 to 45 in the manner 49 payment. We all know that there was a change in payment of tax with effect from 1st of February 2019, right? Previously, how we were availing it? First, if there is a CGST payment, first we will utilize CGST, then IGST. If it is an SGST, first we will utilize SGST and then IGST. If it is an IGST, we utilize CGST, IGST, CGST and SGST. This was the order in which we were utilizing it. On 1st of February 2019, there was an amendment. They said, if you have a CGST liability, first you utilize IGST. In case of IGST, first IGST, CGST and SGST. And in case of CGST, they are saying IGST and CGST. SGST means first IGST and CGST, SGST. So now IGST has to be utilized before utilizing your CGST and SGST. That is only change. So that we have already mentioned here. Entitled to take ITC charged. What do you mean by charged? Charge means section 10 cases, composition dealers, will they charge GST for you? Will they charge GST in their invoice? No, they are not supposed to do it. So you cannot take input tax credit. There are some cases which I have seen in the industry that they will just, you will avail the input tax credit, you will get the invoice without tax component. Without tax component, they will say that I will consider it as an inclusive of GST. As per rule 35 of the CGST rules, valuation, there is a calculation where you can compute it, the value, and you can avail the, you can consider, you can pay the discharge the liability. But in your invoice, that breakup will not be there. If it is not charged, what is charged? Simply in your invoice, out, on the top of it, there should be a component called CGST, SGST. There are many cases it will not be there, like composition and and then any supply of goods or services received by him. So supply of goods or services should be received by him only, not by any other party. Now what happens is, we have two companies actually, two clients under the same group. They are into bearing manufacturing. One is in Sri Perambuttur manufacturing company, one is a trading company. They are both are same entity, but different entity in the eyes of law, because different SIN number, different GST number. What happens is, we have issued an audit report to this company, and while raising invoice, this trading company said, we are taking care of the administrative aspects, you raise it to us, we will avail the credit. Anyway, we are going to have a merger. I repeat, because this case I will take it once again because it's an interesting case. We are going to have a merger, so please raise it to us. I said, you will not be eligible to take credit, sir, because I provide service to him, not to you. I can charge GST, you will pay GST, but credit will come to your credit ledger, but you are not supposed to take credit because it is an audit report issued for some other party. You may be the same administrative thing, you are not eligible. Example number 2. My client, one of my client is located in Express Avenue, back there is an office space, big office space. They are just changing the floor numbers. They are occupying the 3rd and 4th floor. 4th floor is occupied by the administrative office. They have a separate registration number. 3rd floor is occupied by their normal branch, sales office, everything. That is all over the state. They have a one GST number. Both of them are occupying the same premise, 3rd floor and 4th floor. They entered into a rental agreement before GST. They are raising invoice on the administrative office. They are raising the invoice on administrative office. Administrative office is availing credit. We are advising them. This case came to us because when I went for a meeting there for a training, so at that time I asked, generally we'll ask who will pay the rent, how is it happening, so we know what are the issues. So they said, no, administrative office is paying rent. I said, administrative office is not able to, will not be able to take the credit of another registered person. So 3rd floor, say for example 3rd floor is 10 lakhs and the 4th floor is 10 lakhs. You are eligible to take only 1,80,000 on the 4th floor only, not on the 3rd floor. They said, no, we ended the agreement before. I said, I am not worried about your agreement. Change the agreement, close your agreement, rewrite your agreement, and make it 2 separate one, otherwise you are not eligible. Correct? I cannot pay your expenses and then avail the credit. simple. So that is what the meaning of this. Used, any supplied goods or services both to him which are used or intended to be used in the course of accounts of business, and this we already discussed, credited to electronic credit ledger of such person. It should reflect in your electronic credit ledger. I think we have discussed all these issues. Now we come to 36.2. We have already discussed this. Okay. And utilization we discussed. Section 16.2. Now, section 16.2 says, okay, yeah.
Shall we have a break and continue?
Sorry?
Shall we have a break?
Yeah, we'll have break. Where is Rahman? Usually
Probably he came here and I think
You came, you were waiting.
we'll have break then. We'll have a break. Let me just check. Can
I think he was just waiting for you.
me? Okay. Because usually we'll break it at 11:30. Let's see. Ready? Okay. We can break for tea. The back side is there. We can break for 10 minutes.
Sorry,
No problem. Thanks for reminding me. Yes, sir. Because RCM section 19 will be applicable for the author who is writing that. The case would be RCM flexibility and the output exemption, between competition here, everything we have observed is cost. RCM has to because the logic is music singers and all these authors, but they are very unorganized sector. So you are an organized sector because you are not. So they are saying that you take 100%. RCM 9.
Whatever you need.
We have an issue blocking of credit. Because you will not be able to utilize it because you were outward using only this one, more services. You have no export at all. Because if you have export, you can claim. Sometimes we know that it's actually generous, but our hands are absolutely tight.
30. These were 64 and 59. My wife is 59. And 65 and 60. I understand, madam. Next, we'll go to 65. No, give me the premium with co-payment waiver. Then what will be the co-payment waiver charges? And tell me. How much it will be? Okay. Give me some time. I'll get back.
Have you noted it? You have noted that? Yes, this is information.
I think they are from Clear Tax. The institute has informed me that they are the sponsors of this program. So they just wanted to speak for 5 minutes. So, over.
Okay, good morning everyone. Let me introduce myself. I am Saurabh, taking care of the CA vertical of Clear Tax for the South region. So, I will take 5 minutes of your time. Just wanted to introduce Clear Tax, what we are doing. We have some set of tools which will definitely add some values to your work. So, basically our mission is to simplify the financial life of the Indians. We have different type of tools like income tax filing, TDS filing, GST return filing tools. That is totally cloud-based. So, going forward, we have some features like we have some advanced reconciliation, multi-month reconciliation. You can file, you can generate different type of reports from our portal. And we recently launched our annual return. That is a hot topic right now, I think. So, actually, I want to show how our advanced reconciliation works. So, you can download the data from the portal within 2 minutes. Now it takes around 20 minutes to download data for a single month. So, you can download the data for the whole financial year within 2 minutes. After that, you can just reconcile it with your purchase data. And does, but apart from that, we have an advanced recon feature that what happens sometime in two-way data in your data, the invoice numbers are different. Suppose in two-way data, the invoice number is 100, in your data this is 200. So we can match those type of invoices based on the taxable value, GST, SAST. And apart from that, we have suppose your supplier filed the invoice in February for January, and you have filed in January. So we can match those type of invoices also in clear tax. So going forward, we have 9. So what we are doing in 9, we will download the whole file data 1, 2, 3, and 9 from the portal. We have option to import the books data, purchase and sales. According to your books data and file data, will prepare 9 form for you. So this is the dashboard for 9 that looks like government dashboard only. And we have certain checklists. So we know that once GST 9 is filed, it can't be revised. So we have certain checklists so that you can be sure that you are filing the right GST 9 form. So here is the option to download data from GST 1, 2, 3, and 9. So this is our Excel form, 9 form. This will be auto-populated from your data, file and purchase data. And you can put the data manually if some corrections are there. And this is the how we download the data from the government portal. Going forward, this is our dashboard, 9 dashboard, where you can see net tax payable. So you can be sure that this should be 0 before filing, so that I am filing the right return for GST 9. These are the warnings. It will show you the warnings that these are some issues found in your GST 9 form. You can correct the issues, you can rectify the issues. And we have a health check report where you can check the report of all your clients for the whole year. Whether I have filed GST 1 or 3B or not, you can check directly. So it will work like this. GST 1, GST 3B for a particular client, you can see whether I have filed for the month of March, for the whole last financial year. Okay, that's it. Thank you. And if you guys have some queries, I will be outside only, so you can just contact me. I can give you a demo of the full product, GST product, tax cloud, ITR, TTS product. Okay. So thank you for your time. So you can. Thanks, sir.
Yeah. Thank you, sir, for the presentation. Yes, so, what of your hand team? Yes? Okay. We are very fortunate enough to have pre-lens sessions all the time. And so I'm very lucky that I don't have to really gimmick to ensure that participants are awake. Some department trainings and all, it's I get post-lens session, but I will do some gimmick after getting confirmation or approval from the commissioner. Because the kind of participants would be entirely different. So just wanted to ensure that all of you are understanding what we are discussing about. Yes?
Yes.
We are going with the case-to-case basis. Okay, I know that these cases, this is not a hypothetical one. We are not talking about any hypothetical scenarios. These are all very, very fundamental, practical issues. If I am facing it, definitely all of you will face it. Because it's not my cases, right? It's my client cases. I'm just, without mentioning their name, I'm using all these cases. I got a beautiful case 2 days back from the GTA industry. But I don't want to discuss that because we have very limited time. So, in the middle of the program, during tea break, the most of the question which I have received is, if it is not reflected in 2A, am I eligible to take the credit? Very fundamental question, right? Please ensure that even if it is not reflected in 2A, you can avail income tax credit provided why 2A. Just understand why 2A is relevant. Just to ensure that the other party has made the payment. Do 2 exercise. Go to their GST number. see whether they have filed a GSTR 3B and GSTR 1 for the relevant period. That is up to March 2019 for 17-18, because they have time till March 2019 to amend it. Just ensure that they have filed it. If they have filed, still it is not reflecting in your credit ledger. That is, it is not credit ledger in 2A. Then just get a confirmation from the party that they have paid so and so against so and so invoices. We have made the payment already to the government. Get a declaration to whomsoever concerned, and then keep it with you. That is what we are following. Point number 2. Even if it is not reflected, this is something practical which I am talking about. Now let's come to the aggressive view. This is a conservative view we are taking. Now let's take the aggressive view. Assuming that it is not reflected in your credit ledger. Fundamental concept in GST is it should reflect in your electronic credit ledger. First of all, 2A, whether it is a credit ledger or not, is a first of all, it is a challenging one. 2A is not a credit ledger, right? There is no credit ledger, it's not a credit ledger at all. Because initially they proposed, but this is not a credit ledger, first argument. Second argument, even if you consider this is a credit ledger, there are 2 cases. On-Cust Merchandising India Private Limited and Arise India Private Limited, both are from the Delhi High Court. Same provisions as that of GST were providing under the Delhi VAT also. That means you have to pay, then only this party will be able to take credit. Arise India challenged this under the Delhi High Court, saying that you cannot consider the defaulting purchaser and the normal purchaser, genuine purchaser, under the Constitution 14 of the Constitution of the Act. Equality. You cannot consider a fraud and genuine person under the same eyes of law. Correct? So they said, they challenged it. And Delhi High Court said, yes, you are right. You are eligible to take credit. I am a genuine purchaser, you avail it. This went into the Supreme Court. Chalameshwar was the chief, Supreme Court judge at that time. He said, yes, whatever Delhi High Court is saying is absolutely correct. So that is actually fundamental concept in GST. That is the backbone of GST that got broken based on that judgment. That came in May 2018. I think this judgment came in 2018 May. So it has a very, very big impact on GST. So I'm just mentioning that this is my view. This is my personal view. First one is, the practical view I just gave you. Second one is the aggressive view. If there is an issue at later point of time, we have no other option going and then quoting all these judgments and then using Supreme Court judgment and then crashing. And the other side, I made a representation through one government body, which is part of the government, for giving them some sort of sensitive information, not like the this CBIC, Central Board of Indirect Tax, and all, not to that department, through other department. We gave this information to the ministry. They are looking for this kind of sensitive information. One is this, which I gave this one. Second is recently you would have heard about one concept that interest has to be paid on gross liability, not on net liability. That has also been represented to them. And like that, we are also making our own effort to ensure that things are going properly in GST. So did I make it very clear that what is to be done if it is not reflected into here, right? Big issue. Now, 16.2. What are all the requirements? You should have a tax invoice. You should receive the goods and services. Tax actually paid to the government and furnished to the return under section 39. This is what I said. Tax actually paid. This returns furnished under 39, whether he has filed the 3B or not. Go to the portal and see whether he has filed the returns. And tax actually paid. He has filed the 3B, he has filed GST 1, still I will not be able to identify, it is not reflecting into A, means how do I get the proof? That is what I said, declaration. Sometime when Kaushik was saying in between, his client got an invoice where GST 1 was filed continuously, not 3B. One can be filed without payment of tax. So those cases you have to be very careful, they have not paid the tax, only filed the GST 1. You are not eligible. So please ensure that you hold on their payment, such cases. So tax invoice and other tax paying documents. So you should have tax invoice, or you should have a debit note, or you should have an ISD invoice. We already discussed, right? ISD, distributed credit. The recipient should have an ISD invoice, or RCM invoice issued under 3134F. See, let me just make it very clear that most of the cases, I'm not generalizing, but most of the cases where I have seen, RCM invoices and payment vouchers are not being prepared by the company. How many of you have seen this in your client or in your own company? RCM, everybody discharging, that I do agree. But are they raising RCM invoice? Are they raising payment vouchers? Are they preparing payment vouchers? No. Most of the companies no. Wherever we are advising, we are saying that you prepare it and keep it ready. Tomorrow the department should not come and say the documental lapses, I will charge penalty 25,000 for each penalty. They should not tell that. So please ensure that if there is an RCM, you have a proper document. Even they can deny your credit. They can deny your credit because you don't have RCM invoice. What is RCM invoice? Not the invoice which the vendor has given. No, that is not the RCM invoice. You have created your own, provided the other party is not registered under GST. If he has already registered under GST, no problem. That is an RCM, that invoice is sufficient. But if he has not registered, then you have to create your own invoice. But payment vouchers, every case it is applicable. Okay. Receipt of goods. How do we substantiate receipt of goods?
Yeah.
GRN, fixed asset register, stock register. You have plenty of things like that. And e-way bill, you can verify e-way bill also. Receipt of service we already discussed, not very difficult. Advance paid on supply goods or services. Can you avail input tax credit? I paid advance to him.
No.
No, very clear. Because goods and services have not been received, very clear. So this we have already seen. Bill of entry can also be considered as a document for availing credit. Bill of entry can also be used as a document to avail the credit. So we have 5 documents. Can we just see once again? One is section 31 invoice. Then we have RCM invoice. We have ISD invoice. We have bill of entry, and we have debit note. That's all, right? These are the 5 documents on which you can avail the input tax credit. Be very careful. I wanted to stress upon this one, reverse charge mechanism invoice. Conditions for claiming input tax credit. This way, again under rule 36, yes, I want to move, yeah. So, rule 36, they said, that is why I used this W actually, because people will say that the screen is not visible. See, sub-rule 3 says, if you are paying tax under any demand where there is a fraud happens, fraud, willful misstatement or suppression of tax, you are not eligible to take credit. Very simple, no? You are doing a fraud, finally they found you are paying taxes, you are not eligible to take credit. Now, deemed receipt. I said the goods should be received. Goods should be received. Now it's fine, sir. Goods should be received. Do you mean to say that should I receive the goods physically in my hand to avail the credit?
No, you will not have title to goods.
Yes, I'll give you a scenario. Bill to ship to transaction. Second, job worker scenario. What happens in bill to ship to? I am located in Chennai. Party would be located in Delhi. My customer also, my vendor located in Delhi. My customer also would have been located in Delhi. Do you mean to say that to avail the credit, I should physically bring here and then physically send it? Is that prudent decision making for the business people? So the government understood this practical. The government said no problem. It will be considered as a deemed receiver. Same scenario as that of job worker. I have to do a job work in Delhi. My vendor is in Delhi. So, do you mean to say that I should bring it into Chennai, then I have to send it to job worker, then again take it back to Chennai? Not possible, right? Government said no problem. Received means including deemed receipt also considered. Now, these are the 3 provisos. First proviso to section 16.2. I am just going to discuss a small thing. If goods are received in lots, what happens? A semi-knocked condition, completely knocked conditions and all. Say, for example, if I have to transport some car from some big machinery, which will have which will be very tall and then kind of machine.
Telecom towers.
Telecom towers, very good. Telecom towers. Can I bring telecom towers from Delhi to Chennai with the same condition? Can I bring it? No, you have to knock it down. You can fit it in only in Chennai. So, only one invoice will be there. Some goods, only one invoice will be there. But the goods will be received in multiple lots. So, you are eligible to take the credit only upon receipt of last lot. Fifth one, say for example, there are 5 lots. You are eligible to take input tax credit only upon receipt of the last lot. What if you agree? Okay, let's understand the practical difficulties. Point number 1. Last lot has not reached before the due date for the 16/4 condition. I said time limit is there. Assuming that you received raised invoice in March 2018 or 19 for that matter. 19 for that matter. Now your 5th lot should have been received when? Before September. Assuming that you have not received, what will happen? Will you be able to take credit? No. Very simple. 2. Your last lot has lost in flood. Chennai we had flood. Bhubaneswar is hit with the natural calamities and all. And they are saying that they cannot supply further also within the due date. Are you eligible to take credit? Directly speaking, no. But you have to litigate because there is some concept called if it is not possible by a human being, the law cannot impose on a human being which he cannot do it. There is a concept. Based on that we can find it out. All these litigation issues which I am giving you as a point will not work with the department. Please understand, all of you are aware, all of you are experienced. Whatever now I am saying, no, you go for appeal with the commissioner will say no. You see it in tribunal. Most of the cases will win, all these fundamental concepts will win only in the tribunal or in the high court. Or for that matter in Supreme Court. Not in the ground level. Now, second point is 16(2), second proviso says 180 days. I just wanted to brief that. If you don't make the payment to a party within 180 days, I'll repeat, 180 days from the date of invoice. I'll repeat, from the date of invoice. Then you have to reverse the date of invoice means what? Not the date of receipt of your invoice. Probably invoice date would be 1st of April, but you would have received it on 30th of April. But you would have booked it in 15th May. But you would have availed the input tax credit on 30th May. And you would have utilized it in 15th June. All dates are not relevant. For the purpose of reversal, consider the invoice date. Consider the date of invoice. Okay. Now, assuming that the party has raised invoice, but he gave it to you after 180 days, will you be able to take credit? You would not have paid. Not available. If you have availed in the 4th month after paying, you availed it and then 6th month you realized after 180 days that you didn't pay, you have to reverse it. So when you reverse it, you have to pay interest. The GST Council proposed that they will waive the interest, but it is not yet effective. So interest has to be paid from which date? 181st day you have to reverse it. 181st day you have to reverse it. You have to pay interest from which date? Retrospective from which date? I will give you multiple dates. Date of invoice, date of receipt of invoice, date of booking, date of availment, date of utilization,
Date of ITC.
date of ITC and so on.
Date of taking credit.
Availment, yes,
Date of
perfect.
availing credit.
Date of availment of credit. Very good. Date of availment of credit, not the date of invoice. He would have raised invoice. Why should I worry about it? I availed it only in the 4th month. So you have to pay only for 2 months interest. What is interest? 18%. No, it's 18% per annum. 18% per annum. It's not the income tax where 1.5% are part thereof. 18% per annum. Number of days you calculate it. Based on 50 subsection 1 of the CGST Act in 2017, read with the 13/2017 notification where they gave the interest rates where it is 18%. Okay.
So that
Now-
has to be paid in a different form. The interest has to be paid in a different form.
What with which different form? You paid along with 3B.
That's all.
3B. See, the thing is, the cost, the interest would be cost to you. But the story doesn't end there. If you are paying it at later point of time, you can re-avail it, the credit, but interest will be a cost. Now, for re-availment, only, and I told you, two cases, RCM and this cases, no time limit. You can even take it after 10 years, no time limit. Whenever you make the payment, at that time you avail it. Okay, now we'll go to 16 subsection 3, depreciation. Okay, very simple. We already discussed, if you are capitalizing the depreciation component, you cannot avail the credit. Capitalization allowed if you are claiming the capitalizing and claiming depreciation under the Income Tax Act 1961. Okay, very clear. So you cannot take both the benefits, no? So they said you cannot. Now 16.4 we already discussed, time limit, we clearly discussed all this. So we'll move on. I have to make a point here, one more point is the receipt of goods. Here, I received an invoice. I received an invoice for 100 goods. I received only 98 goods. Am I eligible to take full input tax credit?
No.
Or I should take it proportionately? Proportionately, agree? Yes. It has to be done only proportionately. Receipt of goods is only for 98, you should take only 98. But what happens is, the industry will tell you what is happening. They will take for 100. They are taken for 100. Then this party has to raise a credit note, they are reversing it. Credit note has to be issued immediately, otherwise there will be again issues. So in my view, don't take it unless otherwise you receive the goods. Okay. Then, in this payment, I told that payment has not come within 180 days. Can the consideration be paid in kind? Is that fine? Is that fine?
Yes.
Need not be in money, right? It can be paid in consideration, it can be paid in, other than money also.
So if the policy is a bill-to-bill payment, this one sounds good, but if it is a lump sum payment, how will you pay to that?
Very good question. His point is very practical in nature, especially in micro, small, medium industries and all. He's saying, I can understand that. If it is bill to bill, I can trace it. If not bill to bill, how do we trace it? Very simple to your question. It has no answer in GST law. We have to go to the Contract Act where they are saying that if there is no special instruction against the payment, it should be FIFO basis. First in first. Better get a declaration from them. I mean, ask them for a reconciliation every month. If it is not there, still it is not coming, take it based on first in first. No answer in GST, but in contract. And that is what here I mentioned, payment supply will be made some random amount, 1 lakh or something like that. Third purpose, we have already seen this. And this reversal has to be done proportionately. Say for example, I just wanted to make one more point. 180 days, assuming that 1 lakh is my invoice. Okay, 18% is the GST. Okay. Now I have to reverse 18% if the payment has not come. But they have made it 18,000, saying that I am paying against your tax. And I will avail the tax. Is that possible? I've seen this in the country, in one company, where invoice is there 1,18,000. They have to reverse 18,000. They said, sir, I will do one thing, I will pay the tax component 18,000. I paid the tax now. Then there is a concept of reversal. I said, no, 18,000 will be towards proportionately will be reversed. Proportionately will be reversed. So this 18,000 will go towards that 1 lakh and proportionate GST can be availed. So you cannot say that I paid tax amount allowed, so I will avail it. No, not possible. And
What if he pays 1 lakh?
huh?
What if he pays 1 lakh?
Take proportionately. Take proportionately.
1
1
lakh
lakh will be inclusive.
1,80,000. 1 lakh to
1 lakh to 1 lakh plus, this point is 1 lakh plus GST, 18,000. Now 1 lakh he has paid. Now proportionately, it should be inclusive of GST. So 1 lakh into divided by 118 into 18 would be the GST component. That you have to refer to rule 35 to get the value. Rule 35 it's too technical, just the common sense. Other than that, you have to go 18%. These are all we have seen this depreciation, all these things we have seen. So I think we have done with 16, now we will go to 17. See, 17 I said, there are two scenarios. Scenario number 1. I received the inward supply. I am using it for business purpose. I am using it for other purpose. Please be careful, they are not using the word personal or something. They are not using the word personal purpose. They are cleverly using the word other purpose to include everything under that basket. So assuming that, I will tell you one small example for that. One of my company, they are into fan manufacturing. They are in Amruttur. What these guys are doing is, the fan they will manufacture. I could see their R&D department where there are some fans running to ensure that it is running properly, testing purpose it is going on, very well, no problem. Same fans are running in their factory, administrative office also. Plenty of fans are running. After the testing, they have taken for their own consumption, captive consumption. As you are visiting their factory, you saw this in your eyes. Now, what will you do? Is there any GST impact for this? Yes, because it is not your business purpose. You are using it for your own final consumption. Correct? You have to reverse credit on that many fans. Maybe 100 fans, 100 fans you have to reverse credit. Based on what? Based on rule section 17.1. When I put it across to the managing director at this point, he was only showing all his factories and all. He said, no, that is also part of my R&D. I'm just checking whether that is working in my places, actual places. I said there's no meaning in arguing with this guy, because R&D there is a specific place and this is an administrative office. The moment I said the RCM, this ITC has to be reversed, he said no, that is also testing purpose. On the ground level testing purpose, that is only in the R&D, this is in the actual business premises. What do we do? So we said, okay, fine, no problem. But at the time of audit report, I'll call you. That's all. You reverse it or not reverse it.
But your business definition covers that also.
No, that is your final consumption. You are not doing further business. No? There is no output. See, ultimately, who has to bear the GST? Consumer. You became a consumer there. You are not doing business. Same scenario. You are doing an exempted supply and taxable supply. So your case is completely exempted. So you are not eligible at all for input tax credit. But if you are doing exempted supply, you are doing some taxable supply. So in your case, they are publishing books, they are into completely exempted supply. Assuming that they are providing some other consultancy services with respect to book writing and etc., which is taxable at 18%, let's say, then the common credit would have come. That has to be apportioned for taxable, apportioned for exempted. I will tell you how it has to be done. If you can precisely identify the tax which are input tax credit which are used for taxable, remove it, you are eligible. Plus, you will not be able to identify some components, common credits. Take it proportionately. I will tell you once again. I will give you a practical example. One of my company, they were doing high sea sale. You know high sea sale, right? That means the goods have departed from Japan before reaching Indian customs station. That has been sold to Sri Lanka. Goods have come, goods have gone. No input tax credit. It is an exempted supply. RCM, the input tax credit has to be reversed because it is an exempted supply. Because exempted supply definition, if you go to 247, that says exempted supply means exempted, wholly exempted under section 11 of the CGST Act, or including nil rated thing, and includes non-taxable supply. If you go to non-taxable supply definition under 278 of the CGST Act, it says non-taxable means not leviable to GST. ICCL was not leviable to GST, it was an exempted one. Now the crux started for us. The turnover was around 500-600 crores. This turnover was around 5 crores. Hardly 5 crores. This high seas was hardly 5 crores. Now the question comes, reversal has to be done. Now when the calculation comes, they would have had a lot of input tax credit with respect to bearing buying, which is nothing but they bought the bearing, they sold the bearing. Because of when they are importing, they pay IGST, it is an input tax credit. So those things you can directly relate to it. Correct? And they bought it from their manufacturing unit also, which they can directly attributable to it. Right? It is not related to my exempted. Exempted again to Vangi, I am just selling it. Other than no input tax credit I have available. But I have used the office premises. I have used my laptop. I have used my other common facilities. That is the common input tax credit, which is very difficult to identify. We spend a lot of time to identify what it is. Finally, we calculated based on 42 and 43 of the CGST Act for the reversal. We found that it was hardly 50,000. It was hardly 50,000 for 5 crores versus 500 crores. Then we calculated, but I said you reverse it. But they didn't reverse it at the time of reversal, so they had to pay some interest also. Am I clear? Exempted supply, reversal 42, 43 rule, along with the 17.1 and 17.2 we covered it. Clear? If you go to 42 and 43, you can see some formula. Just go through the formula. I am just giving the crux. If it is taxable directly, if you can identify relating to taxable, you apportion to it. You are eligible. You identify the input tax credit which is directly you can attribute to that exempted supplier. Remove it. You are ineligible. If you will have a common credit which is used for both, which you cannot apportion it. That you apportion based on that formula. Okay, very clear? Yeah. So we have covered this. Okay, exempted supply means, is it inclusive of zero rated supply? Taxable and exempted I said. Zero rated supply, where should I put it? Taxable? Very good, that's all. Okay, these are all small computations. I have already covered 42 and 43. I will not go in detail because that is only formula. And 17.5. Yes, hot topic. No. I used to tell that the 17.5, we have from A to I. All this A to I should be there in the person who is availing input tax credit. In front of his table, this list should be there. Every time he avails it, I used to tell them, please print it, keep it, it is worth putting that. Okay, first point is, I told you, you are eligible, but government is blocking. So what are all the things which government is blocking? We have some interesting case laws also. What's your good name? Yeah, you. Chaitanya, you only asked for the builder case.
Yeah.
Yes, I will tell you. We have some interesting, very interesting case law which has come in April, which is released now, just now, 2 days back only. That order dated, it has come from Odisha government, Odisha High Court, sorry, not government, Odisha High Court, which is dated April. Case was posted in December 2018. Order was passed in April 2019. It came out 1 month back, a few days back, 1 or 2 days back. Which is very good case for you. I'll come to that. It is in 17D, 17.5D. We'll take one by one. Okay, 17.5A. There was a big amendment which has undergone in this 17.5. Okay, 17.5 block credit. I'll tell you before and after. Before, what was the position, and after the amendment, what is the position? I mean, amendment I am referring to CGST First Amendment Act 2018, which is passed or which is being notified with effect from 1st of February 2019. So, I'll tell you what is before and what is after. Before, what happened is motor vehicles. They said motor vehicles, if you are using, motor vehicles are not allowed. First point, motor vehicles are not allowed. You are allowed if you are using it for further supply of motor vehicles Example, as I said, dealers of motor vehicles. 2. If you are using it for transportation of passengers, you are buying a bus, you are using it for transportation of passengers, you can avail it. 3. If you are using it for training purposes, Maruti training centers, like there are driving schools, they can avail it. Then it was 1. The 2 says transportation of goods. Transportation of goods. If you are using it for transportation of goods, you are eligible. Now what happens is, the same thing continues for the below, that is convey, vessels and air and vessel, it continues the same thing. Now what happens is, when it got introduced, one brilliant fellow, he came. He said he had bought an XUV. Mahindra 500 XUV. He bought that. He said, Rajiv, I'm using this vehicle for transporting my goods. Actually, literally he is doing it. He is literally doing it. Carrying some, goods from one place to another place. Can I avail the credit? He said, I got surprised because generally we don't get these kind of, naughty questions. So I said, how to answer this fellow? Because if I say that, the provisions A, the transportation goods is there, correct? Then I had to convince him saying that, though you are transporting the goods, the intention of the vehicle is not to transport the goods. Then he said no. Who said that intention? Where is it mentioned? Then I will tell you, this provision, if you don't consider the intention, then the provision itself is invalid. It has no relevance. I came in my car today and brought my bag. Is it a goods? Need not be an industrial goods, right? My car has a seat cover. It is a goods. Anything which is movable is goods. It has carpet. It has a lot of other items. Bottles, water bottles. Can I say that, yes, I am also transporting goods, sir? Any vehicle, can you show me any vehicle which doesn't have any goods? So that is not the intention of the government. So I said, you are not eligible. If you are genuinely transporting goods, you are eligible. If it is a passenger vehicle, you are not eligible. Now what happens is, after this amendment, what happens is, now what are the issues which were there? Genuine issues. JCB was satisfying the depot. It was a very difficult definition in the Motor Vehicles Act. Being a CA, you won't understand, because I was very poor in science. Propelled, then I had to consult my cousin who was in the R&D of Mahindra to understand what they are talking about. What is this cubic capacity? How does it calculated? Cubic capacity 20 above only motor vehicles. There is only one vehicle which doesn't have 20, TVS Luna, which was less than 20. You can see a lot of thing when you go further down. Luna was eligible previously, now not eligible, because Luna was not a motor vehicle as per the definition of motor vehicle, because it doesn't.
Originally it was not requiring license also.
That I don't.
Yeah, that's what.
Correct. So that is one, and so I understood that JCB was falling into motor vehicle category. My construction company has JCBs. Can they avail input tax credit? No, it is a motor vehicle. Is it used for transportation of goods? No, it is actually for earth works only they are using. So is it used for transportation of passengers? No. Is it for used for training? No. So what finally did I said, see, you cannot, if you look at the definition, you cannot avail all these goods. Earth moving goods, JCBs, all these things will not be available. Now there is a clarity. Now they are excluding only motor vehicles with the 13 seating capacity, 13 passenger seating capacity. I will repeat, 13 passenger seating capacity. We are living in India, right? You can see one motor rickshaw having more than 15 people traveling, right? You have seen that, right? They are not talking about number of passengers traveling in the vehicle. They are talking about seating capacity. I have seen in some vehicles. Driver also. In some north side and all, you can see that they put stool also inside and they will tie it. That is also an additional seat in north side. If you travel in north side, the villages and all, they will have one more seat.
It's there in
Bombay also, yeah, very good. it's there. We are living in India, not in US, no. So we'll have all these technical things. So what I'm saying is, if it is the 13 seating capacity, you are not eligible. If it is above 13 capacity, you are eligible, including driver. Point number 1, you answer me, sedan cars, is it eligible? Input tax credit?
No.
Motorbikes? Silo vehicle, silo car. Toyota, what is that? Innova. No. Now let's come to tempo traveler. Has 2 categories. One small tempo traveler with 13 seating capacity, including driver, and big tempo traveler. So small tempo traveler not eligible, big tempo traveler eligible. Look at seating capacity. Now, my JCB, is it eligible now?
No.
Because they are saying that they are restricting only motor vehicle with 13 capacity. If they are not even talking, see, they are restricting only up to 13 seating capacity. So if you don't have a seating capacity, you are eligible. So your lorry is eligible, JCB is eligible. Now everything is falling into the general category. Okay, understood? So it is made it very clear. Now, the hot debate was last year before this amendment was insurance and services, repairs and maintenance are we eligible to make credit. I'll tell you, if you go by strict order, then you are eligible. It was supported by one FAQ also issued by the department, CBIC department. They said you can avail it. My client, I advised them based on this FAQ and then my own interpretation, got a notice from the SCST department saying that reverse your insurance and maintenance, repairs and maintenance. We showed all these interpretations. We showed this FAQ also issued by the department. They simply said, sir, sir, that is issued by central government. Mine is, my department has not issued. This is the typical answer they have given to us. We are still fighting. We said nothing to it. We cannot wait for your department to issue the clarification. He said no, we will avail it. We have a proof. We have a strong ground to fight it out. The client said, sir, it's a small amount. We will leave it. I said no, we will fight it out. Anyway, it's a case for us. We will fight it out. Because something which is advised, our credibility will be at stake otherwise. So we said it can. There are people who are taking conservative view also, not availing. Now it is very clear. Now post 1st of February, they said if your motor vehicle is allowed, insurance and maintenance also are allowed. If your motor vehicle is not allowed, insurance and maintenance are also not allowed. Okay. Now further down they said if you are the manufacturing companies and all, the services and all allowed. See, insurance companies, all cars will have insurance, right? So repairs and maintenance. So for example, the Skivraj Motors will raise an invoice on the LIC, or you take Reliance general insurance. So what happens? My car has some issues. Went to Skivraj Motors. It is got insured with Reliance Insurance. They will raise an invoice on Reliance Insurance. At that time, they will raise with the service plus GST, right? Insurance company is eligible to take credit. They have given 2-3 exemptions. One is insurance company, those who are the manufacturing of vehicles. So these two are the exceptions they have given. So we are done with the section 17(5)(a). Any doubts? Any doubts with respect to motor vehicles? Now 17(5)(b). They gave a list of items. I will tell you what are the issues also. There are a lot of issues, there are a lot of misconceptions with the industries also. It is very highly technical. I will just take you through very simply. One is 17(5)(b) says food and beverages, cosmetic surgery, then life insurance, catering, life insurance, medical insurance, all these things previously they were putting into different category. Now they put it into the revised one as even leasing and hiring everything with respect to 17(5)(a). That is allowed category. If you are hiring or leasing, still you are allowed. If you are hiring or leasing, the cars which were blocked, you are not eligible. So if you are hiring a Tata Sumo, or you are hiring a Silo, or you are hiring a sedan on which they are charging GST, you are not eligible to take credit because it has a less than 13 seating capacity, lending, leasing and all, are blocked in 17(5)(b). Okay, now food and beverages, everything is blocked. And they went on, they further went and then said that you can avail the credit if it is mandated by the, you can use it for the same supply of goods or services. Okay, if you are providing the same goods or services, you can provide it. Say for example, these people, naturals, they got some sort of these kind of services from a beautician, they can avail it, they are in the same business. But a cinema actor who is availing this kind of services, they will not be eligible to take credit. Now, there was an amendment here. They said any services above which is mandated by the law in India for time being in force, you are eligible to take credit. That came in February 2019. My first point. Canteen expenses. I know that I am taking a very debatable one, but I wanted to discuss this because you should be aware of it. How many of all the companies where there are more than 250 employees as per the Factories Act, you have to run a canteen. Now the question is, if you are running a canteen, what generally happens in Sri Perumbudur is, all canteen services, they are outsourcing to an outdoor caterer. So outdoor caterer will charge 18%. I am talking about 1st July to July 2018. July 2018 there was an amendment to this rate schedule. They said it is only 5% for outdoor caterer also. So there are two rates which as on date. So because we are doing audit also 17, that is what I am talking about, 18 and 5. Point number 1, are they eligible to take credit? Previously the point was, everybody was saying that it is a blocked credit, I am not availing it. Now because of the amendment, everybody is saying that it is eligible. Because it is mandated, Factories Act is mandated by the company. But people are missing one important point. Government had given you the relief, but you are missing the second link of that particular transaction. What is the second link? Canteen services are taxable. You take Caltech polymers, AR, for that matter it is falling into the definition of supply itself. If it is taxable, 9963 is the code, which is where you will be taxed at 6% or 5% without input tax credit. Taxed at 5% without input tax credit. Now what happens? So government has removed it from the blocked credit, said that you avail it. Now because of my notification, because of my tariff, where they are saying that no, I am blocking you. Again, no input tax credit, 5%. Now, see, under 9963 is mainly for the restaurants, canteen and all. But restaurants are, see, compared to the canteens in India, what would be the ratio of canteen and restaurants? Number of restaurants is more or canteens are more? Canteen, I am talking about the company canteens. Factory canteens, maybe 5,000, 10,000. Compared to the number of restaurants, you compare it, it will be lakhs and lakhs. So government is looking restaurant priority there, not canteen. Rarely one comes, nobody is raising volume also. Personally I prepared a representation to the Commerce Ministry, not to CBSE again. We have written this issue. There are 4 or 5 issues which we have prepared it and then submitted to the Commerce Ministry, to Mr. Honorable Minister Suresh Prabhu. We have submitted this problem also. See, what happens is, first you only asked me to maintain canteen. I maintained it. I paid 18%. Now you are asking me to pay tax on it. How much would be tax? One company, it was 15 lakhs per month, this expenditure. Multiplied it, 18 lakhs. Sorry, 15 lakhs, 1.8 crores. I will take it for 18 crores. 2 crores, I will round it off. 2 crores is the total inward cost for me. Now, valuation rules comes into the picture. Valuation says, if both are related, employee-employer related. Second proviso says, if the recipient is able to take credit, then you can, whatever you're charging, that will be open market value. Because of that, 28 will not stand up. you have to come to 30. 30 says, Rule 30 says, you have to add a 10% to your inward cost. My 2 crores is my inward cost, on that I have to add 10%, it will become 2.2 crores into 5%. On notional value I am paying 5%, I lost 18% on inward, so put together it will be 18 plus, it would be exactly 5.5 because you are adding 10% margin to it, it will be 18 plus 23.5% is a cost to me. Now, with effect from July, it becomes 10%, approximately 10.5, 10 is the cost to me. There is a credit to me. Though you made it, but there is no credit to me. You understood what I am saying? Now, when I put it across to one company at the time of finalization, company said, no Rajiv, I will charge 18% and take credit. I said, no. There was an AR ruling again. I am not stressing on AR ruling, but still it is relevant principles laid down as justifiable to me. They said, if the rate is prescribed by the act or notification, you have no right to select whatever rate you want. When the 5% is given to you, Cafe Coffee Day AR ruling, they are clearly saying that once the rate is given to you, you are not supposed to take whatever you wanted to select. No. So it is not possible. So it is an industry burning issue. Many industries are not aware of it. Actually on this issue, I have a meeting day after tomorrow. Not day after, not on Friday, tomorrow. Sorry, tomorrow. We have a meeting tomorrow on this issue. A huge factory in Sri Perumbudur, almost 3,000 employees are there. What I talked about, 15 lakhs, is only in employees with 600 employees. So I am just calculating roughly 600 into 3,000, it's 5 times more employees. So it would be 5 into 10, 10 crores would be the impact. So they just call this for a meeting now. Now, this is one. And like that, there are plenty of issues. So this is 17.5.
What is the tax to be charged on recoveries from employees?
That is what I am saying. That is what 5%. See, what happens in the industries, there are two ways. One is some companies are charging 1 rupee to keep the morale up. I am not getting anything at free of cost, I am paying 1 rupee. Some companies are giving it at free of cost. Irrespective of whether you are charging or not charging, you cannot. So the canteen issue, if I want to speak, I have to speak for 1 hour. Because that is a kind of extensive study we have done it in that. In that company itself, I will tell you, 600 employees are there, I said no. 300 only in the payroll. 300 are outsourced. Can we call them as an employee? So they said, I will not pay because it's about third party. No, so they took half of it. That case is very, very interesting case. So, your question, then they said, I will, if I want to argue, put it in that way, they said, I will put it in the, they said, no, I will consider as a gifter. No, you cannot consider as a gifter. Gift is not defined under GST, but gift will be paid on an occasion, not on a regular basis. Food cannot be considered as gift. So there are plenty, sir, can if I discuss it, we'll go on. We'll move on to the next.
Sir, medical insurance premium, what is the GST?
Huh?
Medical insurance premium?
No, not available, sir.
No, what is the GST?
18%. You are not eligible for that. Anyway. Now, section 17C and D. C for works contract, D for construction for own use. Please understand, very, very important. As you for immovable property, works contract as defined under 2 subsection 119, where they said these two are very, very important. Assuming that if I am into a works contract industry, my client is into construction industry, works contract bill, they are eligible to take credit. Assuming that my office is doing some works contracts, my office is receiving some works contract service, I am not eligible. Second, point number 2, if I am constructing a factory or my own building for my office purpose, I am not eligible. They are using the word own use, O-W-N use. If it is for own use, you are not eligible. Point number 3, provided construction they have defined, they made a point that if you have capitalized that expenditure, then only you are not eligible. I will repeat, if the building is not if that cost is not capitalized, you are eligible. Cost is capitalized, you are not eligible. So capitalization has a lot of importance as far as 17.5 C and D are concerned. Now, during the break, what's your good name you said? Chaitanya was asking me, it was asked by another Calicut branch chairman, also previous chairman, past chairman also. One client, your client is into renting of commercial properties. So, point is, they will construct the building, they will let it out. Can I avail input tax credit? No or yes?
Yes.
No, yes. It is for own use, no sir. It is for own use.
Yes, we let out.
Let out.
That is a different activity.
Factories. If I am constructing factory, I will replace it with factory for time being. Own use. Now, what happens is, yes. Yes, yes.
If I make a building premises and if I convert into a society, a different entity, then what is the same?
Still the same. Still the same. It's for own use only, right?
So it's a landlordship or
You are not eligible to take any input tax credit on the construction of the immobile property. Straight away blocked. What is immobile property? That is also we have to see. Is when I am constructing house or the constructing the building, I will have ACs. Can I take the credit? Yes, you can take the credit. That is movable. Now, what happens is, here you look at it. To answer this, your question, Safari Retreat Private Limited. This case came on 17th April 2019, where they said, sir, initially we were also taking a stand that it is for own use. In this was challenged under the Constitution 14 again, but the content of this is, they said it is not for own use, it is for letting out use. One advocate has drafted very beautifully. I have gone through the entire 55 page, superb judgment. They said no, it is not for own use, it is for the letting out use. You cannot consider the factory which is used for own use and then letting out where I am generating revenue cannot be considered this.
that is
Same
actually
as.
business use.
Huh?
If that is my business, if that is my core business, that is a business use.
No, but they are saying that it is a captive consumption, you are not making any revenue out of that building. By using building, you are making revenue. See, I am using this building, I am making revenue. But the case itself, building itself is generating revenue. So they say, letting out is not the own use. High Court also approved it. High Court said yes. Cuttack High Court, the Pune, Orissa High Court said yes. What they are saying is right. You can avail credit. The credit was around 35 crores or something. So they availed it. Previously, we were also taking a stand that not eligible. Based on this court judgment, we are not supporting, but there is an alternative view which is possible based on this. This has to be tested once again. I don't know whether it will go to Supreme Court or not. So we have to see that. Wait and see. Okay.
Sir, case details can
I have it in my laptop. You can just search this Safari Retreats and all. This company, Google it, you will get it. Otherwise, you go to High Court, Orissa High Court website, you will get this. It is a very recent one. No need to search it. Just Google it, you will get it. If you don't get it, you will just message me, I can share it. Now, 17.5, we have gone up to D, right? D we have completed. So dealer, I have other issues also I can tell you, but course of time. One feasibility report has been done for the construction of a building. Feasibility report for the construction, 17.5D. We had a heated debate. Finally, to be very honest with you, very frank, we had a discussion with the Supreme Court senior advocate also on the availability of this. Finally, we concluded that yes, you can avail it because there should be capitalization. They charged the P&L account because that building didn't come up. They couldn't capitalize it. They proposed it, feasibility done, everything has been done, but they didn't capitalize it because building didn't come up. So it is charged to P&L account. We said you can avail it. So there are plenty. I don't have most of the time I'm just moving. Then 17.5E, composition levy, F, EF. You have NRTP, non-resident taxable person, except in case if they are coming and then bringing some goods on which you have paid tax, you can avail it. Otherwise, they are not eligible to take any credit. Then 17.5G, personal consumptions. Personal consumptions, you are not eligible. Then, we have one important concept H, where we are talking about gift, goods stolen, destroyed, all these things are there. There, you have to be very careful when you are gifting goods. Then you have to reverse the input tax credit. Credit is not available for you. Okay. I lost goods lost and all, we already discussed. Now there comes I. I is nothing but tax paid under section 129, 30 and 31, right? I'll give you a real example. My client is supplying AC fridge and all. They are into the manufacturing of AC fridge, washing machine and all. They send the goods from Sriperambatoor to Cochin branch. Kerala borders are very notorious for seizing the goods. But what happens is the vehicle went ahead on the way, you know, truck bay, right? Where the lorries can be parked. This lorry driver relative passed away. So what this fellow did, he parked the vehicle, he left without informing the lorry office. Then GTA came to know later, by the time all these things happened, you know, the e-way bill got expired. Without e-way bill, you cannot raise one more e-way bill also. They started with Jenny in Walayar checkpost in Palakkad district. They seized the goods and they imposed penalty. Under 129, they asked us to pay tax along with the 100% tax. Now, this tax which they proposed, 10 lakhs for example, that you are not eligible to take credit. You are not eligible to take credit. Completely blocked. Interest anyway costed, tax you have to pay and no input tax credit. So you have to pay 2 times, right? Normal you have to pay, then only your party will be able to take credit. This is based on your notice, you are paying tax and penalty. This tax will be cost. Penalty, interest also will be cost. That's all. So we are done with the 17.5. And this we already discussed about. Compulsory registration, voluntary registration, composition levy. Compulsory registration, you become a registered, you are registering for the first time. Voluntary registration, registering for the first time. Composition levy become taxable levy. Exempted become taxable. In all these scenarios, you have to file ITC 01. Ma'am, your question, where you have to file ITC 01 and take the credit. Please note, you are eligible only for stock. Here you are eligible for capital goods. But composition levy, because composition levy and exempted levy, you are already registered and you are moving from one scheme to another scheme. So they said, I will allow you capital goods also. But point is, not all the credit of capital goods. There is a proportionate reduction to the capital goods, 5%. Okay, quarterly, every quarter or part thereof, you have to reduce the value and then you have to bring it to the present value, avail that particular credit. Now, this is what I said, within 1 year. You have 1 year time limit for availing that credit. And here you have to, this is already I discussed, the 5% reduction has to be done. ITC 01 has to be filed, and time limit for availing ITC, this we already discussed. Then here it comes, if it is, the claim is about 2 lakhs in any of these 4 circumstances, chartered accountant has to certify. All of us are arguing, chartered accountant has to certify. And change in constitution. I have a beautiful case study. See, to be very honest, I am thankful to the God for giving such a wonderful experience in this short span of 2 years. Whatever I mention, it's all based on my own experience. So it's not theoretical which I am discussing with you. Because if I am theoretical, I cannot speak too much about without PPT, right? So I am very fortunate, I am very happy that the God is giving and blessing us with such a wonderful experience. These are maybe one in crores, or even I would say maybe after GST introduction, how many mergers would have happened? Very little, right? And we got one case here, very beautiful case, which is very fantastic. They filed their merger. I talked about that, manufacturing and trading company, right? What they did, they filed their merger petition, amalgamation petition on 1st April 2017, before GST. That case went on. 31st March 2018, they combined the balance sheet, put together and prepared the balance sheet. They got the order, actual order on May 2018. May 2018. Based on that order, they consolidated the financials and everything. It was filed also. So we got the opportunity to look into it, and we were doing the audit for them also. When we were doing audit, we found that there are different milestones. different milestones, right? Now, as per GST Act, though merger happened till the date of order, the actual order, physical order, that is came on May, till such time both are different people altogether. Otherwise what will happen? I will say with the 1st of April, both were same because they had a transaction in between. I purchased from manufacturing company. Why should I pay tax? If as per the law, both of us are same. So they said no. Though merger is then with effect from that day, till the date of order you are still different entities altogether. In such case, in these kind of cases, the merged entity will be able to carry forward all the input tax credit lying in that particular ledger by filing ITC 02. ITC 02, read with rule 41. Okay, ITC 02. Now, if I don't have a practical experience, I can tell here and stop it. But I will tell you what are the real practical issues in this. We filed this ITC 02, we transferred all the credits. Point number 1. Even after filing ITC 02, there were some credits which were coming. Can I file ITC 02 2 times? 2 times. Point number 1. Point number 2. There were some, disallowances under the, when that audit was conducted, they disallowed something, and then they, that was wrongly carried forward and all. There were some issues with respect to that. That also we are addressing. So like the plenty of issues are there. Whenever I discuss with someone, even with the department or anything, they are saying that, sir, these are all rare cases, sir. We don't know. Whatever you feel, you do it. Anyway, the person who is coming also will not be doing it. You do whatever you want. So we are doing that still, but still some of the questions are not answered.
Something similar to revised return.
Yes, something. Can I do that? You cannot file revised return. It is you can file only once. Point number 2. Point number 2 is, see, I have to file annual returns. They are saying that as per the section, the moment that order comes, you cease to be a registered person. Sir, I understand that, but I have to file. You only asking me to file annual returns. So the date of order is May. I'm still, your form has not come. Now only I'm doing the order. What I'm talking about 2018 May, sir. They cease to be a person. So, but you want me to file the returns. Technically, you are not right, no. You cease to be a person, but still I have to file returns. So I have to retain your registration numbers. There are a lot of practical issues like that. Okay, anyway, we will not get into that too much. So ITC 02, here there is no limit like 2 lakhs. If there is a budget, even if it is 1 rupee, you have to get the thing. I mean, that account certainly. Then 9 to 10, you are a taxable person, you are opting for a composition levy. Whatever credit available in your credit ledger has to be reversed because you are completely moving to composition levy. And these are all the rules, you can go through rules 44 because I have to stress upon my important point here 44.6. 18.6 versus 44.6. 18.6 is nothing but assuming that you are selling some capital goods on which you have availed input tax credit. You have availed input tax credit on some capital goods, then what you have to do? You have to reverse that input tax credit to the extent of it will be considered as 60 installments. So for example, your value is say 60,000 divided by 60. It would be how much? 1,000? Yeah. So for each thing, you have to say each quarter you have to move, reduce it. Each period you have to reduce this and then arrive it. But here the crux is not that. They are asking you. I'm asking you to reverse some input tax credit, say X amount, and you are selling the goods. There is a transaction value as per section 15 of the CGST. Whichever is higher, you pay. So they just wanted to ensure that at least their ITC is recovered. You are reversing it, or they are getting a higher revenue. Whichever is higher, they are saying you have to pay. So next is job work. Job work. There are 2 points which I have to mention. One is all inputs. We already discussed about the receipt of goods. Now we will discuss about the input tax credit. If you are sending inputs, you cannot send input services, only inputs and capital goods. If you are sending inputs to the job worker, the goods input should return to my office, my factory, my place, or it should have been dispatched from that place within 1 year. Within 1 year. Second, if it is a capital goods, it should be returned within 3 years, not 180 days, 3 years. Point number 3, if it is a dies, jigs, molds and all, then there is no time limit. See, I told you, the manufacturing of shoe company, where the company will give the mold and all, shoe mold. So it is, even if it is a 1 inch difference, shoe will not come properly. So that mold will come. That mold, if they are keeping it for 1 year, 2 year, 3 year, 4 year, no ITC reversal. Only inputs, capital goods other than dies, jigs, molds and all. Now, point number 2, you have to file ITC 04. Every quarter you have to file ITC 04 form. If you are sending for job work, if you are not doing it, please do it. ITC 04 for job work, if you are sending the goods from your place to the job worker within 25th of the following, end of the quarter, next month, 25th you have to file it. And I am done with ITC and ISD. ISD, there is a small provisions that, as we discussed already, ISD, CGST, SGST and all, I can do it ISD. IGST, I can charge IGST and distribute it. And sometimes what happens, I got an invoice, I distributed to everyone, subsequently I got a credit note from the party, right? Possible? Then you have to raise a corresponding document to them and asking them to reduce it, because if ISD is not eligible, then they are also not eligible. Now, point number 1. Point number 2, if they distributed it wrongly, from whom I should recover it? From ISD, from the respective recipients?
From ISD.
No, it is from the recipient. Means ISD doesn't have a stand at alone. It doesn't have a money at all. What is its responsibility? It comes, distributes it. So he doesn't have any cash ledger or anything like that. He will just distribute it. So the government said, I'll catch all the recipients who have made it. Problem. Point number 3. I discussed about the merger, right? This has to be, ISD distribution has to be done based on the previous year turnover, or if it is not, previous turnover is not available in all the states and all, then it should be based on the last quarter, and now there are some conditions. My practical issue which I am facing now is, these both got merged. Now they are applying for an ISD. Now the credit has to be distributed. Should I consider the merged entity turnover alone, or should I take both the companies merged together? There are 5 states in one company, there are 4 states in another company. So both were in the same states. So should I add this and then take the value, or should I consider standalone? Still we are just analyzing it, and then we have not yet concluded on this ISD point. So when we look from outside, it's very simple. When you go inside only, you will understand what is the depth of the cases. Now, banking industry, I'm just skipping it because of time. And that's all about the input tax credit. We are sharp on time, 3 hours. We started at 10:10 and then we finished at 1:10, right? Any other doubts? Any doubts under GST, input tax credit? I will handle it. Please, any doubts? It was like a tsunami, right? It was like a tsunami, right? Left to right, huh? No way.
In RCM is great. Some people want to avail it the same month. It's the correct procedure.
Sir,
The next month.
very good question, sir. His question is very simple. RCM paid up. Can I avail it in the same month, or should I avail it in the subsequent month? Sir, there is no criteria that, there is no condition that it should not be availed in the same month. If there is no condition that it should not be availed in the same month, you can avail it. There are some Twitter from the department side also saying that you can avail it in the same month. I don't see any restriction for not availing in the same month, so you avail it in the same month. Okay, no problem.
So regarding reverse charge mechanism,
Yes.
person who is supplying, the supplier of the service or good, which is likely to RC, In his invoice, should it be written that this is subject to RC?
If he is registered, yes. See, what happens is that is what a few minutes back I said. If he is registered under GST, it is his responsibility to raise invoice as per GST Rule 46, where all 17 line particulars items should be there. In one of the particular is tax is payable under reverse charge mechanism or not. You have to say yes or no. If you say yes, then the other party has to discharge. So if that particular is not there, you are a default. You are not complying with Rule 46, and then penalty under 125 will come.
No, my client is subject to receiving the service from a person who is under reverse charge.
Yes.
That guy has not issued a RC.
Please ask him to do it. Please ask him to do it.
Then this guy is not paid reverse charge on that, saying that he has not invoiced, he is not raised an invoice that mentioning that RCM is not.
No, don't dispute that, because that later point of time that fellow say, see, you have to apply concept called substance over the form, right? Where you are very clear that it is a GTS services. Because on the invoice it is not mentioned, reverse charge mechanism is not applicable, you cannot run away from your liability. So please don't carry a risk. Ultimately you will be defaulted, So be a little proactive, ask him to issue an invoice with that particular line item, and you discharge your liability also. Don't wait for the discharging of liability based on that. You can always say that I have not received invoice, that is one point, but don't play around with this particular point. Any other doubts?
The self-generated invoice that is only for where the other party is unregistered. not-
Yes, absolutely correct. If he is unregistered, so for example, advocate who is registered, he has to issue under Rule 46. No need for you to raise an invoice. You have to raise only payment voucher, prepared payment voucher. If he is unregistered, yes, you have to raise an RCB invoice. Any other doubts? Any other doubts? Just tell me honestly. Yes.
Overseas supplier is giving the service to India.
Yes.
What is do you need to mention the invoices?
No, nothing.
Traveling the ASEAN.
Nothing. See, if he is overseas party who is supplying, yes, technical services provided to India, you cannot impose your country conditions on him. Okay. So, as I said few minutes back, is he unregistered your overseas party?
Unregistered.
It is an import of service. I presume that it is an import of service. You are satisfying all the conditions which are prescribed under 2 subsection 6 of the IGST Act. You are satisfying, presuming that. If yes, you have to raise a RCM invoice because the other party is unregistered. Rule 46, you have to raise an invoice. At that time, all particulars should be there, 17 particulars. His invoice you need not insist.
A person doing construction service,
Yes.
he can avail all credits, even for purchase of cement and items.
Yes. Unless otherwise it is there in the blocked credit. You can avail it. No problem. Unless otherwise it is for a blocked credit. And if the person is engaged in his own construction, assuming that I am a construction company and I am constructing my own building, office building, I am not eligible. 17(5)D will come in into.
What if the same constructs a building? Take the last two, like take a penthouse for himself.
Yes.
Then what is this?
So if you are doing that, 17(1) will come in into personal consumption. Other than business.
Like 10 floors are business.
Yes.
The last 2 floors are personal use.
Yes,
How do you
correct.
bifurcate it?
No, it is very simple based on the unit. So, okay, it's a very good point. See, her question is very simple. Input tax credit, there is no difference of opinion as far as the reversal is concerned. That is sure. Okay. Up to 10 floors, you use it for business, further sales and all. Generally, this
But
builders
then your first point that it is like not used for the business.
It is
and
for
you
business.
letting out or leasing it out will come out, right?
No. There are 2 things. One is you are constructing with an intention for sale. With an intention for sale, you are eligible to take credit. Finally, sometime in the practical market, practically what happens is, finally builder will keep some units with him. Sometimes he will block it, but he will not tell you officially that
He registers that.
he will sell it. Sometimes he registers in his own name. If he is registering in his own name, proportionate credit has to be reversed. Whether he is taking the first floor apartment or he is taking the entire floor, reversal has to happen. Now, what is the base on which you have to reverse the credit? Is it based on square feet? Is it based on square feet or is it based on the flat value? There's no guideline which is being given in 42 or 45.
Largely square feet.
Square feet would be the appropriate, or I would go with his point, but there could be an alternative view also. See, because what happens is, sir, in the construction industry, you go to beach, in MRC Nagar there is a building. More in 13 floors and above and all, the cost will be much higher. Square feet will remain the same. Cost will be much
Flat
higher.
slabs go higher.
Go
Slab
higher.
will go higher.
So there could be things, but I go with the square feet. Yes, that would be the appropriate.
But per floor, the slabs change.
Yes. There are plenty, madam. In the construction
And
industry.
what happens in like very simple example, right now the construction industry is very low.
Yes.
The flow is high, the demand is zero.
Yes.
Almost zero.
Yes.
So
You're right.
when to avail the credit? We have the stock in hand.
No, you can avail it. You can avail it immediately as soon as you receive it. See, that is what I said. Your point comes. It is satisfying 16.1. They are eligible,
Really?
but they
It's
are
blocked.
blocking you
They're blocked.
because you are using for your personal consumption. So you can avail it in input tax credit, but because of blockage, you have to reverse your credit. Technically speaking, because 17.5G will come and hit you,
Like,
saying that
for
you use.
example, I construct a building right now.
Yeah.
I don't have a demand for it. So the first 10 floors are empty. And
No
I'm
problem.
staying in 11th and 12th floor. So
No
what
problem.
is the condition when I take the credit?
No problem. You can avail the credit, but please be careful. If it is not sold,
It is not so.
not
That's what
sold,
I'm saying,
and you obtain the completion certificate,
that OCs and everything is done.
then you have to reverse it. Now you have to reverse the entire credit because it is becoming exempted supply for you. Now on the outward there is no liability because it's becoming land and building.
Yeah.
So it is coming into schedule 3, 5th para. Because you become exempted, you have to reverse your input tax credit. Because if the agreement is ended before CC, you are eligible. After CC, not eligible. If partly before and partly after, proportional. 42 and 43.
So for works contract also there is no bar on ITC.
Works contract, there is no bar on ITC. See, my client is into works contract. They are availing it, they are into outward supply of the same. No problem. We took more case studies than the sections, right? Right? I have plenty actually. That is what I said. I have around 400 threads on which we are working on it. But very unfortunately, we have very limited time. That is what canteen also I have not discussed in detail. There are plenty and plenty and plenty. The arguments you should see. I'll just put one argument for you that the man said, I will not consider this recovery as for the purpose of canteen, that is for the canteen maintenance. I said you are adding one more service to it. You will be more trouble. You will be more trouble. So like that, the argument will go on, keep on going, and then you will get more points. So one issue itself, you can, if you go down, the kind of exposure you will get it from the industry is entirely different. Not from the book, but if you literally apply it, it is entirely different experience altogether. So anything else? So thank you so much. Thank you. Yeah, please.
We have branches in Delhi, Mumbai, Kolkata. We have separate registration. I am going business travel to Mumbai.
Yes.
I am staying in a hotel. So that time I am giving GST number of Mumbai address.
Yes.
Then we take the GST credit.
Are you traveling for the purpose of Mumbai office?
For Chennai.
You are not eligible. You are not eligible. Merely you are traveling there and then you have a branch office there. If you are giving the credit, you are not eligible. Technically you are not eligible. Assuming that I know some cases where you will be traveling to help that particular branch. Probably your testing division will be there. So you are a technical expert on technical testing. So you will be traveling based on their request. So you will be traveling. For that, if they are booking hotels, eligible. But please understand, there is a cross charge which has to come. Because I provided my employees to the other branch. So I have to charge an invoice. Outward supply definition, supply last session probably they would have handled it. Any other doubts? Thank you so much for being a wonderful audience. Thank you. Oh, thank you.
So on the
Thank you.
refund under GST, exports under GST. Shankaran Narayanan is a chartered accountant, cost and management accountant based out of Chennai. He graduated from RKM Vivekananda College in the year 2000. He started his career with the TVS Group and spent last 6 years of his employment in financial services industry. He has served 10 years in the industry, including Standard Chartered Group, in various capacities in finance function. He was Assistant Vice President UK Retail Banking when he changed course, venturing into full-time practice of indirect taxation. Presently, he is a partner in a leading firm heading indirect taxation vertical on advisory, consulting and litigation. He is a visiting faculty for indirect taxation in ICAI, ICSI and a regular speaker on indirect taxation in various forums. He has co-authored the book Gain Smartly Through Senvat Credit Rules along with CAP Sankaran. This book is an attempt to guide the junior executives about the benefits and the compliance aspects of Senvat Credit Rules. He is married and blessed with a daughter. He follows movies and cherishes reading history with a specific focus on Indian history. Please put your hands together to welcome the speaker.
Good afternoon. Mic is not required, and I am hoping that I will be audible as I am now, even at 5 o'clock. So in case you have any difficulty, you can feel free to come closer. E-way bill, job work, refunds, and then related to exports, what are the practical issues, that will be the point of discussion for this next 3 hours. Post-lunch session, I know the difficulties of post-lunch session. So I'll try my best to keep you awake, and you can also reciprocate. Wherever I'm posting I'll never be asking a lengthy question. I'll ask a monosyllable yes or no kind of answer. Try to give an answer so that keeps all of us awake. E-way bill, something which came into GST, proposed to come into GST from 1st of February 2018, but eventually due to all the technical issues could come in only from 1st of April 2018. The purpose of e-way bill and the urge to bring e-way bill was GST. Because when GST was implemented, the first thing that was done on 1st July 2017 is all the checkposts were taken away. So the state government, state enforcement officers had no clue as to what is coming into my state and what is going out of my state. Do I really have control over what is coming in and what is going out? States like Karnataka or Andhra Pradesh continued with their existing VAT website, and they said that from 1st July 2017 onwards, though you have migrated to GST, you are still supposed to price an e-way bill, which in Karnataka is called e-Sukam, and in Andhra Pradesh we had it as a e-way bill, but Tamil Nadu didn't have that setup. Many states also like Tamil Nadu didn't have a separate e-way bill setup, which was brought in from 1st February 2018. Technical problems shifted to 1st April 2018, and from 1st April 2018 till today it is working seamlessly. Lot of enhancements have also come in that. So that e-way bill provisions, where is it in GST? Only 2 places you need to look at it in GST. One, Rule 138 of CGST rules. The second place where e-way bill related offences and how the government can penalize us for those offences is there in section 129 of CGST Act. So section 129 talks about the penalty, Rule 138 of CGST rules talks about the modus operandi, what needs to be followed in respect of e-way bills. This being said, this is the context of what we are going to see and the practical aspects of what is there in an e-way bill. So e-way bill, the need for e-way bill is for the government to track even at a later point of time as to what has moved within my state or across my state. So the purpose, what they said is, you could move goods for the purpose of supply. That is, I am making a supply. The supply is supply of goods. For the supply of goods, I am moving the goods. You are bound to raise an e-way bill. I may move the goods for other than supply reasons also. For example, job work. For example, repairs and maintenance. Or other case could be exhibition. I am taking it to a place, showing it as an exhibition or showing it as a demo and bringing it back. This can also happen. So they came to a conclusion that movement need not only be for the purpose of supply. It could be for supply, it could be for other than supply. But if there is going to be a movement, we want it to be tracked. Start tracking those movements. Then comes the question, what is the basic document that one should have raised under GST, and then only e-way bill can supplement. So there it became very clear that the e-way bill which is raised under Rule 138 is only a supplementary document, and that is not the only document with which the rules can draw. Then what is the main document? If I am going to do a movement of goods as a supply, then it is mandatory for me to raise a tax invoice. No doubt I have to raise a tax invoice. The tax invoice will be supplemented by my e-way bill. No, I am not moving the goods for the purpose of supply. It is moved for the purpose of job work. Then delivery channel is a mandatory document. Delivery channel for job work has to be raised. That delivery channel will be supplemented by e-way bill. I am doing neither. I am importing goods into India. From the port, the goods have to reach to my factory. In that case, what should I do? Very simple. It can come only with a bill of entry. Without bill of entry from port, you could not have imported the goods into the port at all. So from the port to the moment to your factory is authorized or allowed only based upon a bill of entry. So use that bill of entry as the primary document. E-way bill will become a supplementary document. So with the reference of bill of entry, I can raise a e-way bill. So these are the three common documents. One my tax invoice, the other one being my delivery channel, the other one being my bill of entry, based upon which I can raise an e-way bill. One more document along with tax invoice will also figure in this. That another document is bill of supply. Whenever GST is not applicable on a transaction, or it is exempted, or it is moved by a composition taxable person, he makes a supply, he cannot raise a tax invoice. In all those scenarios, the tax invoice will be replaced by a bill of supply as an evidence of the transaction. That bill of supply can also be the basic document under GST for which an e-way bill can be raised. So the general documents, 4 different types of documents for which an e-way bill can be raised is only this. Which means first we should have any one of these documents. Then only we should think about the movement, and then only we should raise an e-way bill. So directly raising an e-way bill is not something which is an option. A basic document under GST has to be there, can be supplemented by an e-way bill subject to the need. E-way bill is not mandatory in all the situations. There are situations where e-way bill is not required also. There are situations it is mandatory also, which we will see as we go in. According to the situation, we can say that in this case we have to raise an e-way bill, in this case we don't have to raise an e-way bill. Even when the goods are received from an unregistered person, we are supposed to raise an e-way bill. Why would that be required? For example, my supplier is an unregistered person, but he is supplying me goods which are worth more than the threshold limit for raising an e-way bill. But he is not a registered person, so he is just sending the goods to me. But me being a registered person, the person who is going to receive these goods, I will have to raise an e-way bill for the movement. Can a person who is receiving the goods can also raise an e-way bill? Yes. An e-way bill can be raised by the supplier, or by the recipient, or by the transporter. Any one of the three can raise e-way bill. It is not mandatory or required that only this person should raise. Any one of the three can raise an e-way bill. It has been clarified by the circular on 31st December 2018 also that when a vehicle is intercepted by the department officer, they want to know who is the supplier, not required. They should find out who is the owner or who is the person, because some of the cases the sale would have got completed in my factory gate itself. The person who is moving the goods could be the buyer. Now they catch the vehicle and send me a notice for the goods which have moved from my factory. I will not even bother, because I will give them a reply, it is not even my goods. My sale has ended the moment I kept it outside my factory. Now in whose responsibility it is moving? Either the transporter or the recipient. Which is why in e-way bill portal it is enabled that either the supplier or the recipient or the transporter, anyone can raise an e-way bill. But the restrictions which have come from November 16th, 2018 is that one invoice or one document, one e-way bill is only possible. We cannot use the same document reference for raising multiple e-way bills. That restriction has been put in place on November 16th. In a way good, but in a way it is not very good. For example, the goods are moved from here to Pune. Include, something happens and the goods have been stored in the transporter's godown for about 10 days. After 10 days, if I want to move, e-way bill would have already expired. I am in no no man's land. I am in Chennai, my customer is in Pune, the goods are in Karnataka. But if I want to move it from there, neither I can extend my e-waybill because it is already expired, nor I can raise a new e-waybill for the same invoice. Because with the same reference I cannot raise. So these kind of practical issues are there. But notwithstanding that, the intention seems to be clear. When you say that there is an invoice and you have raised an e-waybill for it, you take complete responsibility of it. Can I go back and say I have wrongly raised an e-waybill? Yes, possible. But that cancellation can be done only within 24 hours. So if I wrongly raise an e-waybill today, within 24 hours if I realize that I have made some mistake, I can cancel the e-waybill. Then the same invoice reference we can raise one more e-waybill. But if you have not done the cancellation, that's it. There is no way that we can raise for the same reference another e-waybill. And this e-waybill typically contains two parts. Part A, Part B. Part A is expected to be filled by the person who is making the supply. Ideally the person who is the one who is wanting the goods to be moved. Part B is expected to be filled by the transporter. What is the difference between this? Though both constitute an e-waybill, without any one of the Part A or Part B, it is not a valid e-waybill. Both has to be there. But what I can do is, whenever I prepare an invoice or any document with which the goods are going to move, I can raise an e-waybill. But I do not know what will be the vehicle number. I know he is the transporter. What vehicle he will move from my factory to his aggregation point. He will take it to an aggregation point, maybe a transporter warehouse in Red Hills, where he will go and aggregate. Then he will move it through a container lorry. I do not know. In all those cases, what I can do is, I can fill up Part A with the documentary details that I have. Invoice number, invoice date, from where to where. All that I can give and close it. But when it comes to Part B, all I can do is I can just assign a transporter. Now what will this make is, it will make the transporter responsible. It is mandatory on the part of the transporter to fill up Part B. Without Part B, if a vehicle is moved, that is without filling up Part B, e-waybill, still considering that there is an e-waybill number, if you move the vehicle, it is an offence. Because without Part B, it is not an e-waybill at all. The first case law in GST, I think, pertaining to e-waybill was the one which was pronounced by the Madhya Pradesh High Court in Gati, GATA. In their case, what happened is, they had goods inside their lorry, they moved their lorry without filling up Part B. When the vehicle was intercepted, Part B was not there, Part A was there. So they were repeatedly saying Part B is only not there. Without Part B, it is never considered to be a valid e-waybill. So the movement was considered to be illegal. The notice was issued, assessee went to the High Court. High Court asked only one question, why you did not fill up Part B? The usual reason is, system was not working. So immediately the High Court went to the next step and said, from the GSTN itself, give me the log, that is NIC.in in this case, it is not GSTN. NIC.in, they are the ones who are maintaining this e-waybill portal. What is the entry and exit log of this particular email, particular register ID through which they have tried doing? There was no login and log off at all at that time. So they didn't even make an effort, which was proved, and they were immediately told to pay the 100% penalty. Tax, amount equal to tax was penalty. So this is to make us clear that without Part B, it is not a valid e-waybill at all. Now the responsibility is on the transporter. And transporter, I think, is the most GST or a person who will stay as much as possible away from GST. And government has also enabled all those provisions, because on this payment we are liable to pay GST under reverse charge, GTA. So he will not even bother about GST. Then how do I do it, sir? But that is how it has to be done. So an e-waybill, somehow he has to take up the responsibility and fill. If he is not ready to do, at least he should give the details. We should be in a position to fill it up and confirm. Then only the e-waybill becomes valid. The only problem is, Part A is filled up. Part B is not getting filled up at all for 15 days. The Part A will get purged. It will be deleted from the e-waybill portal. So I cannot say that I will keep on generating invoice. While I am generating an invoice, I will also generate Part A. Some people are providing that software connectivity. You generate invoice in your system, automatically I will send the data to e-waybill portal, generate Part A. Whenever the vehicle comes, that time you fill up Part B. But that whenever has to come within 15 days of generating Part A. If within 15 days of generating Part A, Part B is not done. Part A, whatever data you filled up and generated a temporary number, that get purged. So you'll have to raise an e-way bill all over again. So these are practically how the system has been slowly tightened. It was not there on day one. They slowly brought in all these controls. Yes, based on experience and bad experiences or good experiences, they have started tightening the screws, and this is where we are. So now one invoice, one e-way bill. We cannot have multiple. And we know how to do. Many people, how they normally do is put a hyphen, put a A, put a slash, same invoice number, put a slash and raise one more. All that is legal? No. But practically, that is being managed like that. But it is not right. Because system intention is to restrict it. We cannot do it. Sir, but imagine the example that I gave. I have sent a goods. The goods are stuck in Karnataka, but I have sent good. I am supposed to take it to Pune. Now in this case, what do I do? The invoice is already utilized for raising one e-way bill. The best thing that an assessee can do is raise a credit note, which means you will reverse the original invoice's value along with the GST value. Then raise another invoice. Now for this new invoice, you can start doing the dispatch from Karnataka to the customer's place. How is it possible? For this purpose only, in e-way bill portal, there are 4 addresses which are given. It was initially a major fight between the department and the assessees because bill to ship to transaction was not normally supported. That is, I am a person who is sitting in Chennai. I place order with a person who is sitting in Gujarat to make a supply to my factory in Karnataka. So the person who is going to make the supply is in Gujarat, the person who is placing the order is in Chennai, but the supply needs to be completed in Bangalore. And incidentally, the Gujarat person has his goods located in Andhra Pradesh Godown. So he is not going to ship it from Gujarat, he is going to move it from Andhra Pradesh. Now, is this scenario covered under GST e-way bill portal? 1st February it was not covered. 1st April it was covered. How they had covered it is 4 different locations can be given. To start with, bill from. So the Gujarat person is raising the invoice. He will say bill from Gujarat. Bill to. Bill to is Chennai. Clear. Now the next 2 are very important. Dispatch from. He will give the dispatch from location as Andhra Pradesh. Dispatch to is there. He will give the dispatch to location as Bangalore. Done. This is the maximum possible combination a person can get in a transaction. It is addressable in an e-way bill. And for this also, April 6th, 2018, there was a press release by the government. The reason for the press release is, again, the industry questioned the government's intention and said, sir, if Gujarat person is going to raise the invoice, that is Gujarat person is my supplier. Let's say Bangalore is not my branch, Bangalore is my customer. I am asking my supplier to supply to my customer. You are asking him to raise the e-way bill. Now what will happen? He will raise an e-way bill for 10,000, but I would have told him already the value of the goods is 20,000. I am a trader sitting in Chennai, so you are giving me away. My margin or my supplier is being known to my customer. How to stop it? Through that Press Information Bureau release, the government clarified that in case of such transactions, there are 2 invoices that are there. The Gujarat person will raise an invoice on the Chennai person. The Chennai person will raise an invoice on the Bangalore person. Now you decide whether the Gujarat person will have to raise an e-way bill or the Chennai person will have to raise an e-way bill. The Gujarat person raising an e-way bill we have already discussed. If the Chennai person decides to raise an e-way bill, tell the Gujarat person you don't raise an e-way bill. You just get the goods ready, I will raise the e-way bill and give it to you, do the shipment. Now how I will raise it is bill from Chennai, bill to Bangalore, ship from Andhra Pradesh, ship to Bangalore. Now my customer will know only my data. He will never know from whom I purchased, what is the value at which I purchased. This has been clarified by that press release, and as of today, this is working in GST portal also. When we create an e-way bill, we can choose the option of e-way bill where it will say regular. Regular is sending person, receiving person, address, everything same. Bill to, ship to. You can choose a combination. Bill from, bill to, dispatch from, dispatch to. Combination of both. Another option is there. If you choose that, these 4 different addresses can be given. So it is enabled, available to facilitate these kind of transactions in GST.
So in that case, even if there are 2 invoices and only one.
What primary document?
You are right.
What primary document should?
In which case? In this case.
Yes.
The primary document is my invoice. The Chennai person is the one who is initiating the movement. So my invoice will be supplemented by this e-way bill. And my invoice supplemented by this e-way bill will be shown in transit. His invoice will never even figure in the transaction.
Whatever Gujarat person raising the invoice, he is
Correct.
rising. The bill is rising to Chennai.
Chennai person, but the moment there won't be any e-way bill for the Gujarat person's invoice, which is what this question is also. For the Gujarat person who there won't be any e-way bill, is it okay? It is absolutely okay. That is why if you had seen last 3 months in GSTR1 they have enabled one option, that is import from e-way bill portal. What I can do is I can just import the invoices which are there for which I have raised an e-way bill into my GSTR1. But we all knew that this is not going to be successful or very useful. Why? Because now the Gujarat person would have raised an invoice on Chennai person, but he would never have raised an e-way bill. His e-way bill login will never have that invoice, but he has to report that invoice in GSTR1. So it is not necessary that there will always be interstate movement for an interstate supplier. There can be an interstate supplier, but there need not be an interstate movement. What is the difference between the two? I can give it from both the angles. One is what I just told you. Gujarat person is raising an invoice, but he is not moving it from Gujarat. The e-way bill is being taken care by the person in Chennai. Now let me put a different example. The person in Chennai, that is I am in Nukumbakam, I am supplying to a person in Shodinganallur, SEZ. An SEZ supply is considered to be an interstate supply, but there is no interstate movement. The supply is interstate, but there is no interstate movement. Another example can be, I am supplying to a person in Kadalur from Chennai. People not conversant with Tamil Nadu's geography, Kadalur is a place in Tamil Nadu, but which can be reached going through Pondicherry, which is a union territory. Now in this case, I will be crossing the state borders, but I will be ending up only in Tamil Nadu. But this, for the purpose of e-way bill, is considered to be an interstate movement. Because you are crossing borders, sir, but ultimately I am ending up in Tamil Nadu, that doesn't matter. You are crossing another state border and you are going to again exit the state border. Then you have to raise e-way bill. It should be treated as interstate movement, but it is not an interstate supply at all. Chennai person raising an invoice on a Kadalur person will only be an intrastate supply. These are possibilities which some have been clarified by circulars also, that e-way bill has to be there.
So then 50,000 will be the limit.
Because now that it is interstate movement, you will go under 50, will not go under 1 lakh, which is for Tamil Nadu. I was about to discuss it in the next slide.
Sir, can you
Yes, sir.
send a sample e-way bill? Can you show us?
E-way bill. I'll have to log in and show, sir. I don't have an e-way bill here. The e-way bill interstate movement. Now, as I said, CGST Rule 138 is the one which is talking about this e-way bill, which fixes the limit as value of supply being 50,000. 50,000 for a consignment. What is a consignment? Consignment is the invoice or any document that you are raising that shall be treated as a consignment. For that invoice, what is the total value? The total value is including our GST involved on the transaction, which if it exceeds 50,000, then e-way bill is mandatory. One common mistake or error that is committed is, I am a works contractor. Let's say I am an interior decorator. My ultimate billing is going to be a service. I will not be billing for goods because this is considered to be a composite supply of service. There is goods, but goods are not billed separately. It is considered as a composite supply of service. I am moving this, all the materials that are required for assembling this table and doing the interior decoration work from my premises to this premises where I am performing the work. When these goods which are moved, the value of it is more than 50,000. Should I raise an e-way bill? Yes, it is more than 50,000. Assume that it is interstate, mandatory for me to raise an e-way bill. But now the question comes, under which document I will be moving this? Can it be an invoice? No, because I will raise an invoice only after I complete my service, and it is a service that I am going to raise an invoice for. Then how do I move the goods? Delivery channel. And that too delivery channel for the purpose of supply. Okay, how many delivery channels will I raise? That is up to me. The number of movements that I make, accordingly I have to do. Then how will the government control it? The government has a control. Under Rule 56 they are saying that you are supposed to maintain as a person who is performing such kind of activity, what is the amount of goods that are consumed for purpose of rendering this service. So you will have to have a DC for making the goods enter into this premises. Maybe after I finish the work, 2 or 3 planks of wood might be still available, which I will take it back. Now I will calculate my consumption for this service, which record I am supposed to maintain as a person who is performing this kind of contract. So tomorrow the government can ask me, you have raised one service invoice, you have done so much of movement of goods through DC, Tell me what is the correlation. For this rendering of service, how much was the goods that were moved? I should be having a data. So e-waybill can be explored by the department from a different angle also. It is not necessary that only on my invoices they will question me. Even on my DCs, they can question me. And as we already know, delivery challan, there is only one difference between a delivery challan and an invoice. The name. Apart from the name, delivery challan, whatever information has to be given in a tax invoice has to be given in a delivery challan. The other difference is you don't have to pay tax. Delivery challan, you just show it. But still we are supposed to show what is the probable tax of value in that delivery challan, which makes it even more difficult for this person doing a reconciliation. How much value worth of goods did I send for executing the service? He cannot put some value out of thin air. He will have to logically have a calculation, costing method probably. That value only can be put in the delivery challan. So these are common errors that get committed where people raise an e-waybill for a service invoice. The other error that we can see is when I am sending goods to my job worker, 100 rupees worth of goods are being sent to my job worker. The job worker is supposed to add value worth of 5 rupees. I send, he adds value worth of 5 rupees, he sends back the goods. When I send it in a delivery challan, 100 rupees and probable GST on it. When he sends it back, he gives an invoice for 5 rupees. He is right in giving an invoice for 5 rupees, but he is wrong in raising an e-waybill for 5 rupees. What he does is, sir, my invoice is only 5. Why should I raise an e-waybill for 105? But we have to educate him that with your invoice, the goods cannot move. Because your invoice is a service invoice. It will start with the HSN 99. When you are supplier of service, HSN starts with 99. How can you raise an e-waybill for that HSN? Services are not meant to be physically available in mode. So you are not raising an e-waybill for that. You are raising an e-waybill for the goods which are in your possession, which are being worked upon by you and sent back to me. In those cases, you are supposed to raise an e-waybill based upon the delivery channel. So a job worker cannot cover his return with an invoice. He has to return the goods with a delivery channel, and for the delivery channel value he has to use 100 rupee, the value which I sent, plus his cost of conversion 105 on that probable GST. That is how he is supposed to send. And that is how at a later point of time when delivery challans matching is happening by the government or e-waybill query is being asked by the government, we can give an answer. Just before starting we were discussing purchases made by me. I have not taken input tax credit. Let's say in that situation we have got a lot of notices like this. Goods have come in my name into the state. I have not taken VAT input tax credit. Suddenly department shoots a notice saying so much of sales has been shown against you by the person who is coming into Tamil Nadu or coming into Kerala. Now where is it shown in your purchase register? Since I did not avail VAT input tax credit, I would have never shown it in my return also. But they have asked a question, can I say it is concealed return? You have made these purchases and sold it to somebody. Why don't you pay VAT on it? Same thing can happen in GST also. Is it possible? Highly possible, because the same movement tracking is there. At least in VAT they had the borders check post where they can record this data. In case of GST there was no check post. So the goods are just coming in. Where they can pick up the data, e-waybill portal, which contains the complete details of what you have moved. Based upon that they can raise a query. So much of goods have come. Where is your purchase being shown? As he was rightly asking, I am purchasing steel, cement for the purpose of construction of a building. And I know very well that I cannot take input tax credit of that. So I am procuring it, giving my GST number and just capitalizing it. I am not taking input tax credit. Tomorrow if they ask me a question, so much of goods have been procured by you. Since the e-waybill is raised on you, where is it shown in your records? This is where I think a comprehensive way in which we can maintain this movement of goods, stock of goods moving in and out can only save us from queries on e-waybill. In the state of Tamil Nadu, the limit of 50,000 is enhanced to 1 lakh. So any kind of movement of goods within the state of Tamil Nadu, intra, the limit for raising e-waybill is not 50, it is 1 lakh. Yes.
For works conduct, normally the supplier of the goods, he sends the goods directly to the site.
Correct.
So then how does it happen?
The Gujarat example what we discussed will cover that. So what he will do is, bill to you, ship to the site where you wanted it to be shipped. So it will get covered under his e-waybill itself, and you don't have a problem of the goods moving under his invoice because nobody is going to know what is the price of it and issues like that. But you will have to have a track of how much of goods are being consumed for execution of this work. that SOW or scope of work or bill of material for every consumption, that has to be maintained by you.
No delivery challan is required to be made by you.
Yes, you don't have to make a delivery challan unless you are moving it from your own premises.
It's never happens, so you don't get it to your
You get it directly. Maybe excess materials if you are moving back, that time delivery challan will be required. But what is required is being just procured from outside. Then the moment you don't have to raise a delivery challan. But you are supposed to maintain stock register. Now that stock register, an increased entry will be made not based upon your DC, but based upon his purchase invoice or his sale invoice, your purchase invoice. That way you have to maintain that record. And there are certain myths around e-way bill where they are saying up to a certain limit you cannot raise. We have seen that limit. Certain distance e-way bill need not be raised. Yes, but it is not as popularly people are believing. Up to 50 kilometers e-way bill is not required. No. Up to 50 kilometers, then there are two conditions. One, the 50 kilometer, within the 50 kilometer movement should be from my place to the transporter's place only. It cannot be to my customer. From my place to my transporter's place. And second, cumulative condition that needs to be fulfilled is part A must be filled. I cannot say without any e-way bill I can take it to my transporter's place. For example, a person in Ambattur, his transporter is in Red Hills. He is just coming and picking up the goods. He cannot say within 50 kilometers I don't have to raise e-way bill. Not possible. It is within 50 kilometers. He is a transporter. He is taking it to his godown only. No problem. But you have to raise e-way bill part A. Part B need not be filled up. Part A is mandatory. So there is no such thing called within 50 no e-way bill. No. It is required. After he takes it to his godown, from there he is aggregating and sending it in some other vehicle. That time let him fill up the final part B. That is transporter's issue. But as far as I am concerned, part A I will have to fill up. I cannot take excuse of it. And two transactions for which e-way bill is mandatory, irrespective of value involved, are movement for job work, interstate job work movement. It will be very highly applicable for those areas which are at the border. For example, Hosur, Bangalore, Nellore, or they say Kumudipudi, in these cases. So all these cases, what will happen? The job worker will be located in Hosur. The manufacturer will be located in Bangalore, say Bommasandra. From there he will move the goods here. He will take it back. He will think it is only 30 kilometers. But it is 30 kilometers still interstate. And there is no value limitation. Even for 1 rupee, e-way bill is mandatory. Interstate job work movement, no 50,000 limit, e-way bill is mandatory. And the next part is handicraft goods. When they are moved interstate, e-way bill is mandatory. There is no limit for it. There is no value limitation, e-way bill has to be prepared. So these are exceptions to the 50,000 limitation. And there are 154 items which they are given in the annexure to Rule 138 on which e-way bill need not be raised. So what they are trying to suggest predominantly, I would say, is most of the exempted items for which we don't have to raise an e-way bill is what has found a place there. And some of the high value items are also finding a place there for which e-way bill is not mandatory. Example, gold. Gold and gold related jewellery. We don't have to raise an e-way bill. So even if I am carrying a 3 crore worth of, say, necklace in my pocket, I don't have to raise an e-way bill. It is worth more than the value, but 50,000. Still I don't have to raise an e-way bill because jewellery and related items have been exempted from e-way bill. But now we have to understand one thing. What is exempted here is only the e-way bill. Invoice is not exempted. DC is not exempted. So they cannot be just putting something in their pocket and say, anyway I don't have to raise. You don't have to raise an e-way bill. But when you are moving it, DC is mandatory. Because some of the cases they may take it for sale on approval basis. So 10, say Big Shot is there in Chennai, for him 10 or 15 jewels will be taken and shown. Which design do you like, sir? He will pick one, then the 19 will come back. When you are moving this 20, you are supposed to raise a DC for all the 20. And he confirms it, then you are supposed to raise an invoice for that 1 or 2. Bring back this 20 or bring back this 18. This e-way bill movement, e-way bill is not required, but DC is required. Hence, wherever there is no need for e-way bill, doesn't mean there is no documentation required at all under GST. The basic documentation is still required under GST. E-way bill is only exempted. Few other exemptions are any kind of movements in non-motorized vehicles. I think the day e-way bill was introduced, this was there in Economic Times, where they said in Delhi most of the people are preferring now bullock carts. Because even if I move 10 crore worth of goods in bullock carts, I don't have to raise an e-way bill. Because non-motorized conveyance, I don't know how far it is feasible. It is worth that 1 minute smile that we had. That's all. Practically, I don't think it is worth anything. We cannot move anything on that non-motorized conveyance. Even a tricycle, we can try. But how far industrial equipments, engineering equipments, I don't think so. So e-way bill will have to come if you are doing it in a motorized conveyance. And then, any movement from port, airport, air cargo complex or land customs station to the container freight station or inland container terminal. When goods are imported, let's say, it has come to the port, but I am not going to take delivery from the port. It is being moved to the container freight station, the ICD. I do not even know in which container my goods are going to reach the ICD. So the movement is now happening from Chennai port to say Poneri ICD. They are moving it. Who's going to raise e-way bill? They have exempted it. Nobody needs to raise an e-way bill. Same way I might be doing the stuffing in Sriperumbudur container freight station. After I load it in the container freight station, from there they might move it to Chennai port and put it in the ship and send it. The movement from Sriperumbudur to the Chennai port rest is their problem. I have loaded it in the container freight station. As far as I am concerned, my transportation ends there. Hence, they have said this movement you don't have to raise any e-way bills. Alcoholic liquor for human consumption, obvious reason. It is not under GST, they don't want us to be tracking it under e-way bill. Petroleum, the same way. The 5 items coming under 9 subsection 2, we don't have to raise e-way bills. Schedule 3, where there is no supply, any transportation pertaining to that, we don't have to raise any e-way bills.
What are the limits for 150,000? 50,000 is interstate movement and this is intrastate.
Yes, wherever it is interstate movement, 50,000. Intra, 1 lakh.
Not supply.
Movement. Two things we have to remember in e-way bill. One is movement, the second one is consignment value. It is not the document value, it is the consignment value. Empty cargo containers. This was a question which specifically we asked and then they have confirmed it. Where it will be very relevant is cylinders. When filled up cylinders are being sent, oxygen or LPG, anything, that will have a value. But when it is coming back, still it has the same value. If not, the value of the gas will be reduced. The remaining value is still there. So the cylinders per se, if it is filled in a lorry, that will be more than 20,000. Should I raise an e-way bill? Yes. They have exempted only one thing, empty cargo container. The container, 8 by 14 or container, that if it comes empty, you don't have to raise an e-way bill. In all the other cases, even if my bins or anything that I have sent it, which is only being taken back by me, value of the goods is exceeding 50,000 or 1 lakh as the case may be, e-way bill is mandatory. And then up to 20 kilometers, there is an exemption. But an exemption again will have to be read in conjunction with the conditions that are imposed. I am sending goods outside my factory. For what purpose? For weighment. It is not supplied to be supplied directly. It has to be first weighed. Once the weighment is over, it will be brought back to my factory, then the invoice will be raised. I think most common in case of iron, steel and aluminium or copper, this kind of industry, where the lorry will be first weighed, unladen, they will come back, load it with all this scrap or items, go back again, weight in the same weighbridge, get the laden weight, the difference between the two will be invoiced. As long as the weighbridge is within 20 kilometers from my premises, I need not raise an e-way bill, but mandatorily will have to raise a delivery challan. When it is going out from my premises, a delivery challan must go along with it. Maybe I can mention it for payment returnable basis. And once things are over, it is being brought back, I will have to cancel the DC, saying it has been brought back. And the movement distance, that is one-way distance, cannot be more than 20 kilometers. If it is more than 20 kilometers, DC e-way bill will also have to be raised. So these are the exceptions that are there for situations or type of goods where on which e-way bill need not be raised. And generally, e-way bill is valid for a period of time depending upon the number of kilometers for which the transportation has to happen. So if the transportation is going to happen for a distance which is lesser than 100 kilometers or up to 100 kilometers, the validity is 1 day. Now how the validity works is slightly different from 1 day. For example, today, at this moment I raise an e-way bill for sending something within 60 kilometers. Then I will give the distance as 60 kilometers. What the system will do is, this e-way bill is going to be less than 100 kilometers valid for 1 day, but not 24 hours from this minute. It will do the end of day tomorrow. So that is 24th 11:59 p.m. Till the time this e-waybill will be valid. But any subsequent increase beyond 100 kilometers, then for every additional 100 kilometers, validity will be increased by 1 day. So if I am raising an e-waybill for sending goods from here to Bangalore, 334 kilometers, then the e-waybill will come with a validity of 4 days. It is not mandatory that I should reach only on the 4th day. I can reach earlier also. But beyond the 4th day, if I am traveling with the same e-waybill, I can be questioned as making the movement of goods without a valid e-waybill. The other case, and especially for us, it is very relevant in Tamil Nadu because Madras High Court judgment in case of e-waybill in Virudhunagar district. What happened? The consignment has come from Pune. That person, instead of taking a left on the highway, without taking that left, has went ahead. So 7 kilometers he has gone ahead. There he has been intercepted by the officers. Where the question asked by them is, why have you come so far? And he doesn't know Tamil, he doesn't know English. Officers know Tamil and English only. This has been observed by the court in their judgment, where they have been conversing with him and finally they came to a conclusion that we have to penalize them. 18,56,000 tax, 18,57,000 penalty. Assessee immediately went to the court for writ petition, where it was concluded by the court that we agree there is a problem, but it is not a problem which is such grave offence, where he has tried to cheat the department. He has missed the turn and he has gone ahead. We agree that he is not in the path. He has gone 7 kilometers away, but it is not a bigger offence. So the penalty is only 5,000. Ask him to pay 5,000, you release the goods, is what they have given. So this is another proof that department can go to any extent. Where they catch you 7 kilometers from here, they have said you are going somewhere. From Pune, why would he come so far and go 7 kilometers away to do some activity? I don't know. But possible. See, department will always say, why would I believe that initial document itself? When you are traveling in a different direction, should I believe you? Could be their question. Hence, e-waybill is now being taken very seriously. And in most of the places, enforcement activities of the state officers are starting slowly. And their way of enforcement is more focused on this kind of e-waybill activity only. And with appellate mechanism not in place, even we cannot do anything. The vehicle is caught and we know the officer is wrong also, we'll have to pay. Why should I pay? Because unless you pay, you're not going to get the goods released. We want the goods to be released, we want to go for an appeal, we'll have to wait till the appellate tribunal is constituted. Or the appellate authority is constituted, we'll have to wait till that time. And in case of over-dimensional cargo, typically the transformers or the windmills which are being shipped, they made a representation in 1st February amendment when it came saying that the transformers or this kind of over-dimensional cargo cannot move at the same pace of normal cargo. 100 kilometers per day is not workable for us. So for them, you can mention in the e-waybill rising time itself, whether it is ODC, over-dimensional cargo. If you can mention that, then your validity will be for every 20 kilometers 1 day. So the same Chennai to Bangalore movement, 334 kilometers, you mention it as over-dimensional cargo, the validity of the e-waybill will be 17 days. Because they expect us to cross only 20 kilometers in a day. You can do more, but still, the minimum expectation is set for over-dimensional cargo as 20 kilometers per day. And the another interesting feature of e-waybill, which again many people are either not aware or they are not aware of the problem that can come out of the feature, is when somebody raises an e-waybill on us, I am not talking about the e-waybill that we are raising. If somebody is raising an e-waybill on us, we can see it in the e-waybill portal. Has somebody really sat down and saw what are all the kind of invoices or documents for which e-waybill is being raised against our name? I don't think anybody has undertaken that. When initially it was introduced, I was discussing with a senior official who was in charge of South India implementation of e-waybill. I asked him, sir, you have given this option. Somebody raises on me, I can see. Good. But you have also given one more option. If I decide that within 72 hours of him raising an e-waybill on me, I can reject that e-waybill. So if somebody is raising an e-waybill on me, within 72 hours of him raising the e-waybill, I can reject it. I asked him, will it not create a lot of problem? Imagine, I am raising on the person who is in Bangalore, I am moving the goods to Bangalore. I will reach tonight. I have raised the e-waybill now, I will reach tonight. He has time up to day after tomorrow to reject this. What if he is not inverting my material and promptly rejects the e-waybill on Saturday morning? I will be again in no man's land. Now you can come and catch me, say, why are you here? Without a valid e-waybill. He said, this is not the reason for which we have given the shelter. imagine e-way bill is something which is based upon your GST number. And we are making everybody put up their GST along with their name board. Now some unscrupulous element wants to move goods from one state to another. He doesn't have a GST number. All he needs to do is look at some name board. He will get a GST number. He will immediately call the other person, put this GST number and send it. And tomorrow, department will sending you a query saying, you received this goods, where is it in your purchases? Remember our earlier discussion. In those cases, how will they substantiate my stamp? Hence, we have given the option to the assessee. We will give you 72 hours. You cannot do the rejection immediately, we agree. But 72 hours is 3 days. Even if Saturday, Sunday leave you take, Monday you come and do verification of all the e-way bills that have been raised on you and check whether it is valid. If it is not valid, you are supposed to reject it. Like I said earlier, I am not even sure how many people know that they can reject the e-way bill that is raised on them. That option itself is not explored because we are so very busy in trying to identify what I can do with respect to my movement, not with respect to what is being raised on me. Can become a potential issue in future. And what are the documents that need to be carried? I think we have already discussed that point. You need to take the basic document which is evidencing the transaction, along with it the e-way bill. And there is a proposal which I feel by the developments of today, in very near future, I think it will come, which is RFID, the radio frequency identification device. The next, the 2.0 of e-way bill will be that. The 2.0 of GST returns is going to come from 1st July. Yesterday they have released the prototype. So whoever thought that GST returns are settled, we can breathe a sigh of relief. No, it is going to be unsettled again. From 1st July, we will all be running around, not knowing what to do. 26 AS reconciliation we are doing at a yearly basis. Now we will be doing monthly test. Reconciling every invoice on a monthly basis. Checking whether the other party has given the credit or not. Because as per the amended section 43A, he doesn't put it in his return, you don't get credit. In the earlier GST R2 regime, it was not there. They have amended, and 1st February 2019, this section has been inserted, section 43A, stating that other party doesn't report, you don't get input tax credit. Which means, as per my inward purchase register, my turnover, my input tax credit could be 1.5 crores. I will be planning my working capital based upon the thinking that I need not pay 1.5. My total liability is 2. I need to plan cash only for 50 lakhs. But my supplier reports only 1 crore. On 20th, I get the unfortunate news that I have to pay 1 crore. Where am I going to make cash ready for it? We have to start working on that angle. Because that is going to become mandatory from 1st July. Maybe it will get postponed to 1st of September. But it will be delayed, but never be taken out. This is there to stay. Because that is how the government can track effectively. Last 2 years, the partial implementation of GST has only happened. That is, 2 and 3 is not there. We are managing the GSTR 1 and 3B, where in a lot of courts, they have questioned the validity of 3B itself. Whether 3B is written under GST or not. So they have to somehow make GST proper in terms of compliance. So this will come certainly. As I said, along with it, e-way bill will also take a different version, because when RFID is introduced, what they are suggesting is, when you are typing the vehicle number on which it is going, through the registrar of the vehicles, that is the road transport department, we will have all the transportation vehicles, we will make it mandatory for all the transportation vehicles to have a RFID, radio frequency identification device, which has to be fitted, or if it is a new vehicle, I think nowadays they come with that RFID. In cars and all, I have seen a small sticker will be there on the left hand side, which will contain some kind of copper inside. That is an RFID. So if RFID is there, they just have to map that RFID to the vehicle, which will already be done from that side, and RC book it has to be put. Old vehicles, you will have to fix an RFID through RTO office. Once you are done, when you are raising an e-way bill, the e-way bill will be shown as distance from, say, Chennai to Hyderabad. And every toll plaza it crosses, the system will be able to easily access as to what is the RFID that has crossed. So that e-way bill, we will be able to track as to where the goods are. It has crossed which checkpost and it is heading towards where. So there is not going to be a question of the officer trying to follow the vehicle and catch it up. All that cinema type chase and all he need not do. He can sit in his computer and find out, this fellow has raised for Hyderabad, why is he going in Nellore direction? Because this RFID is mapped towards this direction. Why this RFID is going in this direction can be easily found out. So this is the 2.0 of e-way bill, which I am sure in 1 year we will see. Now this is the place where we come into picture. That is, what if the vehicle doesn't carry valid documents? What is the consequence and what is it that we can advise to the clients? Section 129, as I said earlier, it has got overriding powers. In GST, the penalty provisions are all contained in section 122. Section 129 deals only with vehicle-related penalties, that is movement, where the documentation is not there or the movement is not considered to be legal. What is the penalty to be levied? So this is specific compared to section 122, and it comes with the power of non-obstante. That means all the cases of vehicle-related offences, 129 will provide. 129 I have tried giving it in a gist here. So as per 129, any goods which are transported against the provisions of this act, what can happen is the goods can be detained or seized by the officer. He detains the goods, then what is he supposed to do? He is supposed to let the person who is in charge of the vehicle that the detention notice is to be issued. That I have detained it for such and such reasons, and you have a certain period of time, which we will see it in the next slide, the process behind it. So they will say that within this period of time you are supposed to pay this much of penalty. What is that amount that I need to pay? That is what has been mentioned in section 129, stating that the person who is the owner of the goods comes forward to make the payment of tax to release the goods. Then he has to pay the tax involved on those goods plus an amount equal to the tax as penalty. So there are two things that he has to pay. One, tax involved on the goods. Two, the amount equal to the tax as penalty if it is taxable goods. If it is exempted goods, what am I supposed to do? If it is exempted goods, then it is 2% of the value of the goods or 25,000 rupees, whichever is lower. So the maximum can only be 25,000. Can exempted goods be transported with e-way? I told you, yes. Apart from the 154 items, even other exempted goods, if it is not covered by the 154, we have to raise a e-way bill for the bill of supply, and we have to make the movement. So that can also get caught. This is where something which we discussed earlier. Sir, who is the owner of the goods? The section says if the owner comes forward to pay the tax, who is the owner of the goods? Like I told you earlier, it cannot be the supplier in all the cases. It can also be the recipient, because who does the transportation, where the sale has got completed, will determine who is the person who is the owner of the goods. So just because the recipient comes forward to pay the penalty, department officer cannot say you are only a recipient, the owner is only the supplier. Not necessary, sir. We are working on X works basis, which means keeping it outside his factory itself, sale is completed. So I am now the owner. He can proclaim that, because if the owner is not coming forward to make the payment of tax and penalty, the penalty will increase. If any person other than the owner comes forward, then what they have to do is payment of tax and penalty equal to 15% of the value of the goods. 15% of the value of the goods. Earlier we were talking about 100%, that is tax plus equal to tax, 100% of tax. Now what we are talking is tax plus 15% of the value of the goods. Let's say 1 crore worth of goods are being transported. If the owner comes forward, 18 lakhs of tax, 18 lakhs of penalty. If anybody other than the owner comes forward, 18 lakhs of tax, 50 lakhs of penalty. Now we know why the owner should go and pay the penalty, else that extra amount will have to be shelled out. That has to happen, and in case of exempted goods, it is 5% of the value of the goods or 25,000, again restricted to whichever is lower. So the maximum can only be 25,000. This, either of the amount, we will have to pay depending upon who is coming forward to pay. Then the officer has got the right to release the goods. We are not able to pay, we can furnish a bank guarantee to this effect, security to this effect, then the officer in that case also can release the goods. The practical issue every one of us are facing now is that the vehicle gets intercepted in Tirunelveli. The person is registered in Tamil Nadu. Now Tirunelveli officer stops the vehicle, he issues a notice. How do I pay this tax and the penalty? Earlier, department was not sure, so they said let the Chennai person pay in this login and give me the challan, we will release the goods. But which is wrong. They are supposed to make the payment under DRC 07. That is the form for making the payment. Now for making the payment in DRC 07, for a vehicle which is captured in Kerala by a person in Tamil Nadu is not right. Now they have refined the process by which what they are doing is, if my vehicle is intercepted in Kerala and the person whose goods are being intercepted doesn't have a registration in Kerala, they give you a temporary registration. After giving the temporary registration, they ask you to go inside that login only and pay the tax, which means you will be paying tax of CGST and SGST of Kerala. So the tax that I pay cannot be utilized in Tamil Nadu also. The penalty that I pay anyway is an expense for me. This is how it is being done now currently. So we go and log in into that, they give the DRC 07. So let's say 90,000 rupees is the tax, 90,000 rupees is the penalty, 1,80,000, nothing can be done from Tamil Nadu. It will become your tax and penalty of that place. This is the way it should be done, and now they have started doing it like this. So the vehicle gets caught in some place, we cannot have the jurisdiction here. The jurisdiction is still there only. So tomorrow you want to go and file an appeal for that. You have to file an appeal only in Kerala. We cannot file the appeal here. So we are going back to the VAT regime, where what happened was, though the central office would be there, but state-wise they will have people to, the feet on the street has to be there so that they can go and release the goods. In GST, once it came, people thought that across India we can have one person, so he will be able to manage. I don't think that can happen. Vehicle-related such offences and all, somebody has to appear locally. So that trend will come back, is what I feel.
Then we will get the refund.
This refund, we have to prove by way of an appeal or a revision in that. If that is the case, then they will refund it to the bank account which you are giving for the temporary registration. Till the time we have to maintain the registration. We don't have an option to close the registration, because if we close it, then there will be a question of how to refund it. Because they cannot refund it from that registration to Tamil Nadu registration. They can give it only there. And the next part is the procedure which is involved. Like I said earlier, we intercept the vehicle, we can issue a notice of detention. Till 1st February 2019 I should say, it was 7 days. Within 7 days we are supposed to go, make the officer convinced that we have done right, take back the notice, or for him to confirm that he is going to go ahead with levy of the penalty and tax. That 7 days has been increased to 14 days from 1st February 2018. That is why I have given it both. Earlier it was 7, now it has become 14. And this period of 14 days will get reduced if they find that the goods are perishable in nature. Or it might be a situation where the goods are something which is chemically to be preserved, or it has to be disposed immediately. In those cases, they need not wait for this 14 days. It can be wrapped up earlier also, after recording the reasons in writing by the officer. So these give us an overview of what is the procedure relating to e-waiver. And we are reasonably on time. Any questions or query on that? Else we can get into the next part of our discussion, which is
There is a provision to extend the time for the e-waiver.
yes, there is a provision if you are able to do it in the last 8 hours. Either the last 8 hours before the e-waiver gets expired, or the 8 hours after the e-waiver gets expired. There is a provision to extend it. Transshipment is also possible in an e-waiver. For example, I am raising an e-waiver, I am a transporter, I am a multimodal transporter. I am picking the goods from your premises in Sriperumbudur, bringing it in a, say, Tata Ace or a small vehicle to railway station, central railway station, boarding it in a train, and from there to Pune it goes to the train, and from Pune I am picking it up in another vehicle, taking it to say some place, and then on a boat or a vessel I am taking it to some place in India, then from there I am delivering it in vehicle. Now I used various modes of transport for movement. Every movement change I can capture it in the e-waiver as a transporter. What I can do is, once the transporter is assigned, the transporter can go and update vehicle details. Through this, he can do the transshipment. Through the same module, the transporter can extend the validity of the e-waiver, stating what is the reason, because of it is still in transit. Those kind of things he can do.
Tax paid, we can't take it ITC. This tax cannot, tax and penalty, this tax paid, we can't take it ITC.
Simple reason, sir. Section 17 also says that. Section 17 subsection 5 says, taxes paid under section 74 or 129 can never be taken as ITC. So there is a restriction blocked in it itself. And when we come here, it is paid, the 50% is, the 18% that I pay as tax is tax, but the tax is paid in Kerala. If I have registration there, then maybe the tax I can use. The other 18% that I pay is anyway penalty. It is out of my pocket, it will never come back.
If it were in the same...
You are registered in the same state. Then this amount can be utilized. Because what he can say is, you have got my vehicle, and in an effort to protect the revenue of the department, you have collected this tax. I will use it for offset for this month. But the other 50 can never be declared.
You are temporarily registered already.
Correct. If I am temporarily registered, that is, they have given me a registration and they have made me pay the tax there. Unless I have a liability there, I cannot use it. The registration itself was given for me to pay the tax. Good. I think then we will proceed to job work. Job work, part of it comes from central excise only, nothing new. But in GST, even for small industries, it has become applicable. And the word job work itself in GST is defined in this way. Section 2, subsection 68 talks about job work means any treatment or process undertaken by a person on goods belonging to another registered person. So it is a treatment or a process which is done by a person on not his goods. It should be on the goods of the other person. And the expression job worker shall be construed accordingly. So the basic thing that they want us to understand is it is one person working on the goods of another person. It is considered to be job work. Printing, textile industry, fabrics. In all these cases, we will see a lot of job working activities, including engineering industry, automobile industry, job workers. So they will all come under this bracket of job working. And for job work, there is a uniqueness in GST. It is treated as a service, one. And second thing is, various job workers are being taxed at various rates. 5% is also there, 12% is also there, 18% is also there. So it is not like job work is 18%. It depends upon the industry. For example, in case of printing industry, I do only printing. That means you will give me the material, you will give me the content, I just do printing and giving it to you, 5%. It is not this kind of activity. I am doing some other kind of activity where the content is not important, like visiting card or stuff like that. I can tax you at 12%. I will buy the material, I will do the printing and tax you at 12%. In cases of engineering related job work and all, it is 18%. And still there is a lot of discussions going on as to whether a job worker can add material as part of his job work. Example, I am a dyeing unit. You are giving me the basic fabric, the grey fabric that you are giving me. I am going to dye some color or design into it. No, the dye is procured by me. Dye is a material. Without that dye, I cannot do dyeing. But the material is not owned by you. As part of my job work, I am adding the dye. Now, am I doing a job work or something else? If I say, no, you are only working on my material, it is considered as job work, then comes another huge example. That is bus bodybuilding. You give me a basic vehicle, chassis, on which I am constructing a body. Now, bus bodybuilding is supply of the body for a bus, or is it job work? Because I am also working on the goods belonging to another person only. In this case, your bus is 15 lakhs, my bodybuilding is 30 lakhs. But it is not my goods, it is your goods on which I am doing the work. So, what is job work? This kind of interpretations are open. Department tried giving their part of confusion also. June 2018, they gave a circular saying, bus bodybuilding, is it job work? They gave it in the circular on the left hand side. On the right hand side, they said, it will depend upon case-to-case basis. So I do not know what is the tipping point to decide on case-to-case basis, but they have not committed themselves by saying what will tantamount to job work or what will tantamount to supply. The reason this example I had to take was, in case of a bus bodybuilding, the material that is procured is 28%. If I call it as service, I will bill you only at 18%. So all my input tax credit I will get more, but my output tax liability will be lesser, or it will, my input and output will get knocked off. I will never pay GST. Is it something which they want, or is it something which they will allow? Or can they go ahead and say, no, you will have to pay 28% only on your output? Kind of transactions that can be dubious in job work. But for that, the normal transactions where I am working on other person's goods, we can predominantly take a stand that it is a supply of job work service only. Even if there is going to be an element of material that is involved, we can say it is a composite supply of service. The predominant element being my job work. You came to me for doing the bus bodybuilding, not because you wanted a steel structure, you wanted me to do that steel structure. So there is, what is predominant there is my service. Value wise it may not be predominant, but the reason wise it is predominant, and value wise predominance is not required for saying something whether it is composite or not. So I will take it as composite supply of service. So this being said about job work, the next part of job work is section 143. Two places that we need to refer for the purpose of job work related provisions in CGST is section 143 and section 19. Section 143 is the basic provision pertaining to job work, where it goes on saying, if you are going to send goods from your premises to a person who is outside your premises, that is a job worker, you can do so without payment of GST provided he is declared as your job worker. So he should be your job worker. Then only you can remove the goods from your premises without payment of GST, without even telling the department to do a tax invoice and all. You can still send it, but that person should be a job worker declared by you. This created a confusion on 1st July 2017 where we were asking, what is the procedure to declare that he is my job worker? And who is the officer to whom I should declare? Because till November 2017, we never knew that who is our jurisdictional officer, whether we are coming under the state government or whether we are coming under the central government offices. So this question was answered by a circular. There are two circulars pertaining to job work, circular number 38 and circular number 88, 38 of 2017 and 88 of 2019. The combined reading of this, the earlier circular clarified it. It said that when we are filing the ITC 04 return, a job worker on a quarterly basis, that is a person who is a principal who is sending the goods to a job worker, is supposed to file a quarterly return or a statement, I would say, not a return, and a GST. That statement when you file, you are supposed to give the details of the job worker to whom the goods are being sent. We will deem that information as the communication which is to be made under section 143. That is, you are supposed to tell the government that this is my job worker. You don't give it through a separate letter or the letterhead and all, take a chapa and all, no need to do. File that ITC 04. I will know that these are the persons who are your job worker. That was told in the circular. But unfortunately, this ITC 04 is one return or a statement in GST which does not have a penalty, which does not have a late fee. Hence, it doesn't have the same respect of any other returns. Nobody cares to file it. Even the people who are doing that job work activity do not file it. They will send it through a delivery channel, they will receive it through a delivery channel, but they are yet to even file this ITC 04. Even for jewelers, it is mandatory. You are giving your material gold, it is getting processed into a finished product, and it is coming back as a jewellery. We are supposed to file ITC 04. Nobody is bothered, and somehow the department is also having an elasticity of compliance. First, it is a quarterly return, 1st July 2017 to 30th of September 2017. For the 3-month period, the due date is 30th of June 2019. Imagine 2 years extension. 1st July 2017 to 30th September 2017. The due date is 30th June 2019. So somehow they are trying to keep it at par with annual return. But it is supposed to be filed for every 3 months before 25th of the following month, after the end of the quarter. This will save a lot of efforts. Later we will see how this can be detrimental also if you don't file this. I can remove the goods without payment of tax, take it to my job worker premises. Can I keep it in my job worker premises forever? Not possible. If it is going to be a capital goods, I can keep it in my job worker premises for 3 years. After 3 years, what has to happen? It has to come back. Can I send it again? Yes. Once it comes back, you can send it back again. If it is going to be other than capital goods, inputs, then it can stay with the job worker only for 1 year. It has to come back within 1 year, either completed or in the same form in which I had sent. But staying beyond 1 year or staying beyond 3 years, there is a problem. The problem is, as per section 143, read with section 19, if it is going to stay there beyond the time limit, it will be deemed to be a supply. In the erstwhile excise regime, what they used to say is reverse the input tax credit, is what they used to say. In GST, there is no reversal of input tax credit enough. They are calling it as a supply. And asking us to report it in GSTR 1 as a supply. But the not so good part is, it is deemed to be a supply not on the expiry of 1 year or 3 years. It is deemed to be a supply on the first day when it was sent. This would mean that you will have to pay with interest for 12 months. On day 1, that is 366th day, just by delaying 1 day, that is 365, instead you are going to 366, you have to pay interest for 12 months, treating it as a supply. And the other bad part is that fellow cannot take also input tax credit, because he is only a job worker. How can he make it as a supply to him? Then how will he give it back to me? He has to also again raise an invoice. He cannot do it through a DC, because now he has become the person who is the recipient of the goods. So these complications are all there if the time limit is breached. And people who have seen excise related job work will immediately come up with a solution. This is what we used to do in excise. Sir, 175th day, system will automatically pop up one message. So much of DCs have not come back. What to do? In my earlier company, we used to have a code also. We will just type go. then what it will do is it will make an inward entry for all those DCs. It will make immediately an outward entry for all the same DCs. So from here another 175 days. They said that is the solution. No, that solution is workable when e-way bill was not there. Now what you are supposed to do is supposed to raise an e-way bill for it. So how do you manage that so much of goods have come back by this vehicle number, and how do you say that so much of goods have gone back again on these DCs with this vehicle number and all? Still you go to the next level and do this, all the best. But it is not that easy as it was in excise. So where we could do in a table, finish it in a matter of minutes, cannot be done. So in this case, it is serious. So the goods are sent within 1 year, it has to come back. And like I said, the stock maintenance responsibility of the job worker is on the principal, not on the job worker. Because for all we know, the job worker could be doing a turnover below 20 lakhs. He may not be even registered. So I am the one who is going to send the goods to him. The value of the goods might be 20, but his job working activity will only be 1 lakh. So I am the one who is supposed to take responsibility, maintain the books of accounts, file ITC 04, maintain records of delivery challans and e-way bills. And this is where I told you earlier also, I can raise an inward e-way bill. When he is sending it through his DC, he is not a registered person. I can raise an inward e-way bill and take back the goods. That is allowed for me. So keeping all this, job work is not that easy. Job work related activity, somebody has to sit and monitor this. When we see the return later, I'll also tell you the problem in conversion. The other point is, which is very important, the standard of 1 year or 3 years is not applicable. If the goods which are being sent, typically the capital items, tools, dies, fixtures, or any kind of jigs, if these are being sent to the job worker premises, tool, mold, dies, jigs and fixtures, these are being sent to a job worker, it need not come back within 3 years. It can stay with the job worker forever. Mostly because the tools and dies and molds will have a lesser lifetime. And then what will happen? They will rework on it and create something new. So they are not bothered about the molds or dies or jigs coming back. They need not come back. So that exception is there. Apart from this, anything else goes to a job worker, stays beyond the 3 year or 1 year period, it will be deemed to be a supply. The next part of the job working activity is, I am sending something to my job worker premises. The work is getting over, the goods are becoming finished product. Now, can I dispatch the goods directly from my job worker premises to my customer? The goods, let's say 75% has been completed by me. I give it to my job worker who does the finishing process and also does the packing. It is ready. From my job worker premises, can I directly go to my customer's premises? Don't worry, we are nearing 3:30. So I am assuring you that there will be a tea break. That yes or no, remember, give me a clue as to whether it is a yes or no. Can I dispatch it from my job worker premises directly to my customer's premises? Yes? There are no conditions? There is a condition that the job worker should be registered. If the job worker is not registered, can I still send it? Yes. You should add the job worker as your additional place of business. It is either this or this, not both. Some people get confused and they say, you should also get registered, I will also add you as additional place of business. Not required. You do either one of it. If he is registered, sir, what is the sanctity behind him being registered, sir? That is the question people ask. I am supplying my goods to him for job.
100% responsible.
Exactly. He is supposed to maintain records. If he is a registered person, he is supposed to maintain stock inward and outward. So make him responsible. That is what they want. So either you take the responsibility of adding it as your additional place of business, you do the stock records, or you send it to him, from there it is getting dispatched. Then you ensure that either he is registered or he is added as an additional place of business. So this is very critical. Especially immediately people will come back saying, it will never happen in my case because the goods will always semi-finished only. It will come back to my factory, we will only supply. It will 100% happen in case of scrap generated during job work. The scrap that is generated during job work, for example, some machining activity is happening. During the machining activity, the steel or the copper will get machined. Scrap will arise. This scrap, is he going to send it back? Most of the job workers will not send it. And what these people would have also done is, they will enter into a contract in such a way, your job working charges is 8 rupees, but normally so much of scrap will come. To that extent, we will give so much of order means, you reduce 8 to 7. So you will charge me only 7, scrap is yours. But what they are missing here is, 1 rupee worth of scrap they are selling. They are supposed to raise a tax invoice. I am giving it to my job worker is giving me 7 rupee worth of service. No, he is giving you 8 rupees worth of service. There is an exchange that is happening here. For his 1 rupee worth of service, you are giving 1 rupee worth of material, barter. Hence, in GST, in supply definition 7(1)(a), and all, you would have already seen sale, exchange, barter, leasing, licensing, transfer, everything becomes supply as long as there is a consideration and it is done in the course or furtherance of business. This is a classic case of not disclosing 1 rupee turnover. That 1 rupee could be for 1 unit and we can multiply it for number of units. Hence, scrap related activity, this can become very important. There is a scrap that is getting generated, we have to have this in place. Scrap is not being absorbed by the job worker, sir, it is being sold from there. Then we have to see whether the job worker is registered or his place is taken as my additional place of business. Because it may not be worth to bring back the scrap from job worker premises. You might want to dispose it off from there for the value that is involved. Then ensure this compliance is happening. So job worker related, this compliance, predominantly people will think about their finished products. We should also think about their scrap, which can attract this provision.
What if the scrap is sold?
By me.
By me or
The job worker doesn't have ownership. I am the one who gave you the basic steel. From that you made out a product for me. The scrap that is generated is still my product. So my job worker doesn't.
Raise the e-way bill for the scrap.
First who has to raise an invoice? We will fix that. My goods are lying in your premises. If you are a registered person, then what I can do is, I will raise an invoice, dispatch from your location, dispatch to my customer. I can do this. And for this, I can raise an e-way bill. If the job worker is allowed to take the goods, then I am supposed to raise an invoice on him without movement. I will say that is your product. If I give it to the job worker, then he wants to sell, it is as good as his supply. He has to raise an invoice separately and he has to take care of the e-way bill procedure.
In that case, where there is no movement, then e-way bill is not.
Correct. When there is no movement, yes, e-way bill is not required, but invoicing is required. Taxability will have to be established. Any other queries on this? Movement from the job worker's premises. Goods are not returned within the timeline. I think we have already seen this. Waste or scrap, yes, just now we discussed that. And another clarification has come on 31st of December 2018 where they have said, what is input? You need not think that input means only the raw material. It can be anything that is other than capital goods also. Other than capital goods could be something like packing material or even the tapes which are used, which are for the packing material to stay intact. All this bubble packing and all what we do, all this can also be considered as inputs because the definition of inputs for the purpose of GST is anything other than capital goods is input, which is used in the course of furtherance of business. So we have to go by that definition, is the clarification given by the department. This has greater gravity because when refund applications are processed, which we are going to see post tea break, some of the cases department has rejected refund applications or part of the refund application saying this is not input. Because what are you saying? You are claiming stationary input tax credit, you are claiming printer ink cartridge input tax credit. How can I treat it as input? But unfortunately GST, as per the definition of input, it is an input. Any goods which are not considered as capital goods in the books of accounts has to be treated only as input, and the assessee is well within his right to claim refund of it. So this clarification given for job work will have a far-reaching impact there also. And the next part, which I said in section 19, one more provision read in section 16. Section 16, input tax credit, there is a condition that unless you receive the goods or services, you cannot take input tax credit. Yes, but there is an exception. In fact, there are two exceptions which have been added by our explanation. One was there right from day one. The second explanation has been added from 1st February 2019 amendment. Simple scenario is this. I am in say Chennai. My job worker is in Vellore. My supplier is in Karnataka, Bangalore. The goods will have to be first processed by my job worker, then only BC processor I will do. So when the goods are being sent by the job worker my supplier from Bangalore, it will make sense to send it to my job worker's premises first, so that he completes the process A and then he shifts it back to me. I can do the the remaining process sitting in my premises. Now this poses a different kind of question. My supplier is not supplying to me directly, he is taking it to my job worker premises. So there might be a gestation of say 30 days from my supplier to my job worker and my job worker to complete the process and send the goods to me. Is section 16 saying that I can take input tax credit only when I receive the goods, or even when it is received by my job worker? The explanation saves us there. The explanation to section 16 says that if the goods are received by a person who is authorized by me or by who is considered to be my agent, him receiving the goods is considered to be received by me. I can take input tax credit. So no need to worry that if the goods are delivered directly to the job worker, I still become entitled to take input tax credit as long as I have declared that he is my job worker in ITC 04. So I want to go back to that ITC 04 which is being neglected. As per the circular 38, unless you have filed ITC 04, you have not told the department that he is your authorized person. There is no other way in which you can tell who is my authorized person. So you are telling him that he is my authorized person through ITC 04. Once you do that, section 16's eligibility condition gets satisfied. You become entitled to take input tax credit. And the other procedure that is pertaining to job work which can get in a circuitous mode is I am setting it to my job worker. My job worker has his job worker. I have told him, sir, you have to do machining plating. He says, I will do plating, sir, but machining has to be done by my job worker. Then I tell him, can I engage him? No, that is not your problem. You just give it to me. I will do machining and plating and give it back to you. Now the problem is, when it goes from my office to my job worker, it will go in delivery challan A. He will raise another delivery challan to send it to his job worker B. And from him it will have to come back. He will have to do the remaining process and then he has to send it back to me. Now, as a principal, am I supposed to keep a track of my job worker's job worker? Not required. If whatever I send is being taken care of by my job worker, he is able to handle it. If that is not happening, then I have to keep track. For example, I am sending it to job worker Mr. A. He finishes it, he sends it to B, who is also my job worker. The example that I gave earlier, in Vellore, the goods get completed for process A. The next process has to be done by another job worker in Vellore only. So why bring it to Sriperumbudur? I am asking him, you transfer it to that job worker's place. Now he will endorse his delivery challan and give it to this job worker B. I don't have to raise another delivery challan. Provided he gives everything completely. No sir, he is not giving everything completely. He is going to do it on a piecemeal basis. As of when he completes 100, he will send it to job worker B. Then he has to raise a separate delivery challan. E-way bill is required for that if the value is going to exceed. So that becomes a separate process. Yes, if it is going to move in one lot from A to B, another DC from my end is not required. Now what will happen, the strange thing is, I will receive these goods back from B, whereas my initial delivery challan would have been on A. It is allowed. As long as it has moved in full. If it has moved in piecemeal, then I am supposed to raise a separate E-way bill for the movement to B, where I will say dispatch from A's premises, given to B and take the inward from B. So this is the complication that is possible in case of a job work, multiple job worker involved. Either all the job workers are employed by me or my job worker employs another job worker to get the job done. And ITC 04 is something which we had already discussed pertaining to the return that a job worker needs to file. We will try to see what is that ITC 04 and what are the content of that ITC 04 after we finish this. So delivery challan has to be issued under Rule 55 for any movement to a job worker. In Rule 55 itself they have mentioned one of the major purpose for which a delivery challan would be raised is job work. So you are supposed to keep track of the goods going and coming back only through a delivery challan. That is mandatory on the part of the principal. He is assigned to the responsibility of taking care of the inventory. And then 2 copies of DCs must accompany the goods. Like I told you earlier, delivery challan is equal to an invoice. 1 copy will be with me, 2 copies will have to go along with the goods. That is the original and the duplicate. It has to accompany. And 1 copy to be returned with the goods by the job worker. My DC 1 copy, I have sent 2 DCs, transporter copy as well as your copy. 2 I have sent. When he finishes the work, his DC will be given for sending back the goods. My DC with which it went should also accompany the goods when it is coming back. Now the issue will be, I have sent him 500 units, he is sending me 50-50. Then how do I match it? Practically what we are suggesting is take a photocopy and send it. Because I would have given 500, there will be only 1 copy with you. How can I send it 10 times to you? So in those cases, take a copy and send. Last consignment of that 50, when you are sending, send me my DC copy. Because this is required for reporting it in ITC 04. Hence, this process is put in place. And then DC to be given even if the goods are sent directly from supplier premises. Like I told you earlier, from my supplier, Bangalore it goes to Vellore. Now he has supplied it there, but I have to raise a DC to recognize that it is now in my job worker premises. Though I didn't make the supply, that is I didn't make the movement. The supply is supposed to come to me from Bangalore, which has been in en route to give it to Vellore. I have to raise a DC required. This is the outcome of the combined reading of Circular 38 of 2017 and Circular 88 of 2019. And movement of goods from one job worker to another job worker, this we have seen on already that. We'll take another 5 minutes to do this ITC 04, then I think we'll take a break so that when we come back from the break, we can go through refund full blown. ITC 04, there are 5 parts, only 2 are critical. In one part we are just going to say, which is part number 4. What are all the list of goods which are sent from my place to my job worker. So basically it is a statement of inward and outward. Or rather I should say like this, outward and inward. What I have sent and out of it, how much has been received back by me. That is what I am going to do. So I have sent something, I am documenting it in table 4. My DC number, my documentation, my value reference, it could be capital goods, it could be inputs sent to my job worker, shown it in 4. Now when it is going to come back, that is where it can get twisted. Possibilities are increasing. 1. I am going to invert something which input and capital goods received back from job worker to whom such goods were sent for job work, including the losses and waste. What I have sent, he is only returning it back. That will be disclosed in 5A. Also accounting for the waste or scrap or losses that are to be recognized. Like I said earlier, if a certain product is there, 100 kgs of copper is given, he has to melt it and mold it into a particular finished product. After melting and molding, the finished product will emerge, unit number 1, but this finished product will weigh only 99.5 kg. That 0.5 kg of copper would have got evaporated, normal loss. Even that has to be accounted because when I sent the goods to you, I would have put as 100 kg. When it is coming back from you, I cannot put 99.5 kg. I have to put 99.5 plus normal loss of 0.5. Then only what I sent 100 will get knocked off against what I received as 100. So when it comes back, I should not use the unit of measurement of number of units. Though it is coming back of number of units, with the bill of material for the product, I should work back and find out what is the kg equivalent of it. And that kg equivalent add the loss, and which is normal loss, and knock it off. If it is abnormal loss, we will have problem in input tax credit. Section 17 subsection 5 clause H will say, goods lost, destroyed or stolen, reverse input tax credit. So abnormal loss we might end up reversing input tax credit. I feel normal loss we don't have to reverse because without incurring that normal loss, we couldn't have converted the raw material into finished product. So that has also to be accounted.
So what happens if there is a gain?
If it is according to the normal process.
No. Here there is a loss.
Correct.
In certain process, for example, yarn if you are selling, there will be oil gain. So whatever you have sent will get back more. So now this can be accounted.
2 parts to it, sir. 1, the gain is something which is normal. Correct. So it is covered in your bill of material. As per your bill of material, if I send 100, I get 101. There is no problem. Second part, how do I report it here? What you have sent as 100 has come back. It has come only in excess. You don't have to account it here. As per you, the job work is 100 went, 100 came back. End of problem for job working. Now you can continue with your remaining process of stock inward and out under your normal procedure. The second part where the goods can come back is 5B. Input and capital goods received back from job worker other than the job worker to whom such goods were originally sent. The Vellore example that I sent, it was first sent to Mr. A. Mr. A sent it to B. I am receiving it from B. And I never issued a DC to B because A sent everything to B, endorsing my DC, and it is coming back. That has to be reported separately in 5B. And 5C is input or capital goods sent to a job worker and subsequently supplied from his premises. That is from my job worker premises to my customer. It goes. That has to be reported in C. So effectively, what I am doing in table 5 is the goods that are sent to my job worker is in table 4. It should have either come back to me. 1. If it is coming back from the same job worker, 5A. If it has gone to another job worker and from whom it is coming back, 5B. It is not even coming back, sir. From that it is just going into my end customer, 5C. Now, these 3 possibilities are only there. 4 will tell the quantity. 5, all the 3 together will tell the quantity which has come back. Remaining should stay physically with my job worker. Anytime department can go through this and go to a physical verification also to my job worker premises to find out whether what I have disclosed is in line with their expectation. So this is what is the final complaints, that as a person who is engaging a job worker related, this is not the responsibility of the job worker. This is the responsibility of the principal who is engaging a job worker. Any doubts or clarifications?
This is done from the same job worker.
That is 5A. 5B is the one which is different to 5A. Wherever we talk about GST. So refund, where am I getting refund under GST? The primary place or the primary type of transactions for which we be entitled for refund under GST is zero rated supplies. There are other scenarios also which are envisaged for which refund is available, but 95% of the times the refund will be sought only in these cases. Zero rated supplies. What is a zero rated supply? It could be supply of goods, it could be a supply of service as defined under section 16 of IGST Act. That zero rated supply has got two parts to it. One, me exporting the goods or services outside India, or me supplying the goods or services to a person in SEZ. So my supply to an SEZ of goods or services is also zero rated. My supply outside India of goods or services is also considered as by zero rated. So with these two in perspective, now we have to see for goods what technically is export, for service what technically is export, what are the procedures for us to obtain this refund from the department. So when it comes to zero rated supply, we have seen that in section 16 this is how it is defined. Now export of goods is defined in the IGST Act. Export of goods, it says that with its grammatical variation, cognate expressions means taking goods out of India to a place outside India. So the definition, though the words that I have highlighted there are very minimal, has got a far-reaching meaning. Taking goods out of India to a place outside India. For example, I am sitting in Chennai. I have a customer in Dubai. The Dubai customer wants certain items. I know a supplier in Indonesia who can give me that goods. So what I now do is, I place an order with the person in Indonesia to supply the goods to my customer in Dubai. So technically speaking, the Indonesia person and me, we have entered into a purchase transaction. And me and the Dubai person is a sale transaction. If you look at my P&L, you will be able to see purchase from Indonesia, sale to Dubai. Now coming into GST, can I call this sale invoice which I raise on the Dubai person as an export? Yes or no?
Yes.
Yes? No. Because the definition says out of India to a place outside India. These goods never entered India. You might book it in your P&L as an export, but GST purpose it is not an export. The reason being the goods never entered into India, which is why I said the definition is small, but it has got a far-reaching impact. Never entered India, I cannot call it as export because it is not from India to a place outside India. So this has to be kept in mind for goods. Moving further, can I do export of goods when I have to pay GST, or can I take an option of without payment of GST? Both are available. If you are a person who is exporting goods, you can decide to pay IGST on export of goods, or you can decide not to pay IGST on export of goods. What if I decide to make payment of IGST on export of goods? This is one option which is given under GST. From October 2017, it is working seamlessly. What it is doing is, if I make the payment of tax on invoice which is meant for export of goods, I am supposed to do the same data to be mentioned in my shipping bill. That is, in my shipping bill I will say that it is export of goods under payment of IGST. Then in my GSTR1 return, I am supposed to capture the shipping bill reference. Shipping bill is the customs document with which the goods are travelling outside India. That shipping bill reference has to be computed and captured in my GSTR1 along with the tax amount. Once I file my GSTR1, this export turnover with the payment of IGST has to be captured in my 3B under the appropriated table 3.1B, zero rated supplies on payment of IGST. Once I do all this three, system will automatically transmit my invoice from GST portal to IceGate. Indian Customs Electronic Gateway, which is what is the customs portal. It will get sent there. There it will match the shipping bill details and the invoice details from GST portal with the shipping bill details and invoice detail as given in the customs data. If both of these matches within a span of 7 days, the IGST paid by me is refunded to me automatically. I don't have to even make an application. My shipping bill is deemed to be an application. So this is the option 1, which is reserved for a person who is exporting goods with the payment of IGST. Now I am not doing this. I am going into the next option of I am without payment of IGST. I want to do exports. Is it possible? Yes. But for doing that, we will have to give an undertaking to the department. That undertaking to the department is given under Rule 96 capital A. The form in which we have to give that undertaking is RFD 11, commonly known as LUT, Letter of Undertaking. Once we give that, wherein what we say is, I want to export goods or supply goods to SEZ or supply goods or services to SEZ without payment of IGST. Allow me, if I make a mistake, I will pay back the tax with interest and penalty. That is what we say and get that LUT. Once we get that LUT, can we export goods without payment of IGST? Yes, but our invoice, export invoice, must be carrying the words export of goods without payment of IGST under LUT number so and so. And will LUT give a number? When we submit the LUT application, we will get an ARN, application reference number. That application reference number shall be deemed to be the LUT reference. That reference has to be captured in the export invoice which is being prepared by us. Now in this case also, it will go to IceGate portal and get matched, but there won't be any refund because we never paid any tax. Now the next question that might come is, I have got a lot of input tax credit, but I have not paid tax on my output. What do I do with that input tax credit? That can be claimed as refund, for which there is a separate provision which we will see a little later after we finish services. So when it comes to goods, I can do export on payment of tax or I can do export without payment of tax. Without payment of tax, this LUT is required. But the LUT comes with a condition which many people are not taking seriously. The condition is within 3 months from the date of invoice of goods, the goods should have been exported. If it is not exported within 3 months from the date of invoice, then within 15 days from the expiry of 3 months, I should pay the tax, interest along with any penalty the government levies on me. Rule 96A, it is mentioned there, under this condition only we are getting the LUT. But people think that the moment I have taken LUT, I am exonerated from the responsibility to pay tax. We should ensure that the goods should have been exported within 3 months. That condition is there in case of goods. In case of services, what is export of service? Now this definition itself will have a lot of issues, because in case of goods, it is very simple that you are able to send from India to a place outside India. It is considered as export of goods. The major difference between goods and services, in case of goods there is a physical movement which can be corroborated from the customs document. But in case of services, there is no physical movement. I might as well raise an invoice and say I have done export of service. Hence, the collection of foreign exchange for that invoice is put as a precondition for terming it as an export. So just raising an invoice, I cannot say I have done export of service. It will be considered as export of service only if I receive the money in convertible foreign exchange. Else, it is not considered as export of service. One of the important difference between export of goods and export of service. In export of goods, there is no precondition that you should have received the money in convertible foreign exchange. But in case of service, it is a precondition that we should have received the money in convertible foreign exchange. It also has other conditions. The conditions being, the recipient of the service is located in India, the recipient of service is located outside India, the place of supply should fall outside India. In case of import of service, you would have seen the reverse. Supplier will be from outside India, recipient will be in India, place of supply should fall in India. We will pay RC. This is the opposite. The first three conditions are opposite of import of service. Supplier is in India, recipient is outside India, place of supply should fall outside India, and there are two more conditions. One being, the payment of such services has been received by the supplier of service in convertible foreign exchange. There has been an amendment to this where they have added, wherever it is allowed by RBI, it can also be in INR. I think with Nepal or Bhutan, RBI is giving the exemption that even if you receive in INR, we will treat it as received in convertible. And then the supplier of service and the recipient of service should not be merely establishment of the same entity. We are not two separate entities, we are establishment of the same entity. Then even if all the four conditions are satisfied, we will never be treated as exports. The head office is in US, the branch is in Chennai. It is not holding company and subsidiary. Head office in US, branch in Chennai. The transaction between the two of them, Chennai does something to them, bills to them, cannot call it as export. Because you are merely establishment of the same entity. We are supposed to charge GST. This is a situation which is given rise only because of this definition of export of service. What is export of service? This definition. In service tax also we had this definition. But there we didn't have a problem because if something is not export, it is neither taxable under service tax, we can keep it in between. In GST it is not so. If it is not an export, it is taxable. It is either black or white. There cannot be a grey in between. And for export of service, can I do export of service with payment of IGST? Yes. But there is no special incentive for doing that. In case of goods, if you do export of goods with payment of IGST, like I told you earlier, if it gets matched, refund is automatic. I don't have to make a separate application, but not so in this case. In this case, you have to pay the tax. If you decide to go to this route, export of service, pay IGST, you still have to make an application for refund of the IGST that you paid. Because there is no corroboration that can happen by the system. Hence, you have to apply for refund. The other method is, yes, obviously I can go for without payment of IGST. There again the condition is LUT. So LUT is common, whether it is goods or service, one registration, one LUT will do. But here also, the important condition that we need to look at is, if it is going to be for export of service that you have taken an LUT, then 1 year from the invoice, that is the date of service invoice being raised, payment should have been received. If the payment is not received within 1 year from the date of invoice, we are supposed to pay the GST with interest within 15 days from the expiry of 1 year. So, subscribing to this condition only, we have actually got the LUT. So, the assessee is supposed to know that just because we have applied in 3-step process, we have got an LUT. No, we have actually said yes to this condition. Any service invoice, this collection is mandatory.
But then the LUT is required for every invoice.
No sir, LUT is taken for a period, April to March. So once I apply and get an LUT, that LUT is available till March of the following financial year. It is valid for 1 year. Earlier when GST was introduced,
it contains some amount.
No sir, it doesn't contain any amount. It says that I am as a person who is going to do this kind of transactions, and I assure to the government that if I make any mistake, I will pay with interest and penalty and taxes. Hence they will give me this. There are people for whom they will not give a LUT. That is mentioned in the circular given on October 2017. That is, if you have any proceedings against you exceeding 2.5 crores by the department where you are a person who is in default, they will not accept a LUT. You have to give a bond and bank guarantee. But that is not mandatory for everybody. If you don't have any such case, you can go for this.
So every year you have to make an application.
Correct. It is valid only for 1 year. Initially they said it is 1 year without mentioning where the 1 year starts and ends. From 2018 April, it has been streamlined that it is valid only till the end of the financial year. So if I take something even today, let's say May I am applying and taking an LUT, I cannot say it is valid up to next May. It is valid only up to 31st of March. I will have to reapply and get one more LUT for the next financial year. And with respect to refund, one of the burning issues which I wanted to initially touch upon, because practical problem in export is that people get refund of their ITC, which is paid, or they get refund of their input tax credit on exports. Exports, for the purpose of export, they are taking input tax credit, they get refund. But there was a condition which still remains in section 54, subsection 3 is that if you are claiming duty drawback of central taxes, then we cannot apply for refund of ITC. You will not be given refund of ITC. This problem is not a problem beyond 1st October 2017. This is a problem specific only to July to September 2017. Why am I saying that is because 1st July 2017 GST was introduced. Duty drawback was already there in India for the goods which are exported. the rates of duty drawback continued at the same rates as it was on 30th of June, that is before GST, even after GST, till 30th of September 2017, which meant that a person could have taken input tax credit also, that is input tax credit on purchase, claimed duty drawback also, and also claimed refund of input tax credit, which the government felt is multiple benefits being taken by the same person. So what they said, how to stop it, from 1st October 2017, they recasted the whole duty drawback rules under customs and they reduced the duty drawback rates. What was 6.5, 7.2% earlier was reduced to 1%, 1.2%. And the logic adduced by the department was, earlier there were a lot of taxes for which ITC was not there. So I had to give you a huge incentive for doing exports. Now, all the taxes, if not everything, at least most of the taxes have come inside GST. So you are anyway entitled to avail input tax credit. That input tax credit you are entitled to claim it as refund also. Then why should I give you such a high amount of duty drawback? Reduce the duty drawback and said the duty drawback that I am giving it to you is only to cover your cost that might be there in your product, which is pertaining to customs duty or any kind of excise duty that is paid within India, the cost of which is included in your finished product. So the government reduced it and said from 1st October 2017, whatever duty drawback I am giving it to you, it is not pertaining to central taxes, that is CGST. Hence, from 1st October 2017, I can claim duty drawback also, I can claim refund also. But for the period of July to September, I could have done only one. I should not have done both. Had I did that during this 3 months period, many people have got notices from the department seeking, giving the refund back to the department with interest. So this 3 months period, we'll have to watch. I think after this annual return is over, this 3 months period will not matter. But since we are reading it now, before the annual return, this is one of the practical problems that one could face in refunds under GST, especially with respect to exports. The other two notifications are there, which I wanted to highlight. The reason for me talking about these two notifications is the misconception. These two notifications are not treated at par with exports. The first notification is notification 40/2017, which pertains to a merchant exporter. This is a benefit given by the government post implementation of GST to a trader. A trader wants to do export. For example, I have got a manufacturer in Tirupur who manufactures t-shirt. I have got an order from a European customer. I cannot expose my manufacturer directly to my customer. So what I want to do is, I want to procure the goods from him and I only want to do the exports. But once GST was implemented, I am getting into a trouble because if I procure from this manufacturer, he will charge me 18% GST. I will of course bill my customer where I don't have to pay GST. But what I have to do, I have to pay him this 18%, then go and stand in line and get the refund of 18%, which many of the traders requested the department to give them an easy way out. They gave this notification and said, if you are a merchant exporter, that means you will never do anything with that product, you will only do exports. Then do one thing, disclose the fact that you are a merchant exporter to your supplier. Then the supplier will be charging you not 18% or 12% or 28%, he should charge you only 0.1%. If it is IGST, if it is going to be CGST, SGST, 0.05%, 0.05%. Now, where is 18 and where is 0.1? My outflow is substantially reduced. What I can do is, I can procure it from you and do exports. Now, where is the control mechanism? The same notification says, it is not enough that you only tell me that you are a merchant exporter. Within 3 months from the date he supplies to you, you should have exported it. And in your shipping bill for export, you should capture his GST number and his invoice number. That is my supplier's GST number and my supplier's invoice number. Give a copy of the shipping bill to my supplier. It is similar to C-form or H-form earlier. So that my supplier would have charged me a concession rate of 0.1%, but he should have a document to prove that he has done right only. Because I could just tell him that I am an exporter, but I may not do export at all. Tomorrow, how will the department know that he has actually supplied it to an exporter? This mechanism has been put in place, and this has got nothing to do with exports. This person does exports, but this transaction between this Indian supplier to this Indian supplier is not treated at par with export at all. This is a separate transaction altogether. One. The next one is deemed exports under section 147. 147 of CGST Act. We saw that what is export is defined under IGST Act. So deemed export, does export include deemed exports? No. Exports is separate, deemed exports is separate because these are two present in two different legislations. One is IGST, one is CGST. So this deemed export status again in October 2017 was granted to four kind of people. One, an EOU, export oriented unit. Two, a person who is an advance authorization license holder. He is having a license. Under that license, instead of importing some goods, he is buying it locally from a person. Can he do so? Yes, invalidation letter he can take and procure it from the local person. But when he is procuring from the local person should treat him as a deemed export. That is, the transaction is a deemed export. The next transaction is EPCG, license holder. Instead of procuring it from outside India, I have the license, I am procuring it from a person within India, allowed. The last one is sale of gold by banks to an advance authorization holder. The banks selling the bullion metal to a person who is holding advance authorization. Leaving the last one, which is restricted only for a person buying from a bank. The other three are common. And here, the common mistake done by people is, they think EOU is equal to export. That is, deemed export is equal to export. Hence, I can supply to an EOU without payment of IGST. No. A supply to an EOU is deemed export only. It is not export. It is not something which can be covered under LUT. LUT covers only that export of taking from India to a place outside India. In this case, then what am I supposed to do? I am supposed to pay GST. When you have named it as deemed export and you ask me to pay tax, that is the benefit. The benefit is, if I charge GST and pay to the government, the EOU will not pay me. EOU will say, I am a deemed export. So, I will not pay you. The person who is the supplier has already paid the tax. He can claim it as refund from the government. In some cases, the EOU will say, no problem, I will pay you the tax also. Then also, the government says, I will give refund to the EOU if the EOU applies for refund. That is the sanctity or the importance of this notification. As per notification 48/2017, that transaction with an EOU or transaction with an advance authorization holder, either one will bear the burden of tax. Either the supplier or the EOU or the advance authorization holder. Whoever is bearing the burden of the tax in the transaction can apply for refund, I will give. Not both. Either of them can apply for refund. That is the only connection it has got with the term export. So this has got nothing to do with exports. But we have to know this because later the calculation of export refund procedure, this will play a part. These two transactions are not exports, these are separate.
What about the deemed export under the GST Act 1956 section 5.3? Whether it is covered under
5.3 is
deemed export?
Penalty made sale. Correct. That penalty made sale is what is the percentage exporter that we saw. Something similar. I will buy from you and I will do export. That is the notification 40/2017. The replacement or the equivalent of 5.3 is this. Now we get into the process of applying for refund of the accumulated input tax credit. What is the formula? Rule 89, sub rule 4 as the formula. And this is the formula that is given there. Turnover of my zero-rated supply of goods or services on the numerator divided by my adjusted total turnover multiplied by my net ITC. There are three elements involved here: zero-rated turnover, adjusted total turnover, net ITC. Zero-rated turnover is easy because whatever I have mentioned as export of goods or services, that is what is going to come there. That part is simple. Now what is net ITC? Which is what I want to stress upon, because the net ITC definition says, for Rule 89 sub Rule 4, it says that net ITC means input tax credit availed. It is not the input tax credit balance. It is the input tax credit availed for this period for which we are applying the refund. On what? On input and input services only. The conspicuous absentee there is capital goods. If I have taken ITC on capital goods, I am eligible to take ITC on capital goods. But for the purpose of refund application, I cannot include the ITC pertaining to capital goods. I can make a refund application only for the ITC that is pertaining to input and input services. So this is the demerit of a person going to apply for refund of accumulated input tax credit. You can apply, but capital goods related ITC you should keep it away. Or who can take a decision to go for this is a person who knows that my capital goods related ITC will not be much. That can be used for some other purpose, or for capital goods I will never take ITC, capitalized in term depreciation. So that person is the person which is best suited for this. So capital goods, we cannot include it in this net ITC. This is one. And then we have to exclude two more things also, which are, other than which, for which the refund is claimed under rules 4A and 4B, which is nothing but what we have discussed earlier. Notification 40/2017, that is 0.1% input that I have taken. That input should not be here. And then the inputs pertaining to 4B, which is 48/2017, that is EOU supply, for which I have taken ITC. That ITC should not be here. That is deemed export ITC should not be there in my net ITC. Because for these two, the refund procedure is separate. So these two should not form part. The others only can form part of this. So net ITC itself requires a lot of adjustment if those transactions are there. Then only we will arrive at net ITC. Then we have to define what is adjusted total turnover. For that, adjusted total turnover contains the sum total of the value of my turnover within the state, zero rated supplies, zero rated supply of goods and services, but excludes exempted value of supplies. Because I am anyway denied input tax credit on exempted output. So if I include it in the denominator, to that extent my denominator will be larger. So consequently my refund amount will come down. So they are logically asking me to exclude the exempted turnover from my denominator, 1. And then the turnover pertaining to 4A and 4B. My ITC should not contain the ITC pertaining to 4A transaction, 4B transaction. So my denominator should also not contain the turnover pertaining to 4A and 4B transaction. This too, if we can logically understand and do it, any refund application can go through. So the only other thing that we left with the officer is acceptability of the ITC that we have claimed. The calculation is given in Rule 89.4. We have followed this Rule 89.4 and show the calculation separately. Only the point that will hinge for the officer to deny the refund is to say whether the ITC that you have actually availed is an ITC which is allowed or not, which we can find based on the merits of the case. The other refund which is possible under GST, which pertains to again ITC, is inverted duty structure, IDS. What we have so far seen is my input tax credit has not accumulated because I am doing exports or zero rated supplies. Supply to SEZ, supply to exports. There can be another situation where I will have a lot of input tax credit also. That is, my output is taxable at a rate which is lesser than the rate at which my input is taxable. The earlier example that I gave of dyeing units. Textile dyeing unit will charge only his customer 5%, but his input will be 12%, 18% also. Then what will happen is, he will always have a scenario of only using his input tax credit for offsetting against output tax liability. Never he will have a situation of paying tax from his hand. Okay, this is beneficial. It will also create a burden because after a point of time, that accumulation will just keep on accumulating in your current asset. You will never be able to convert it into cash. There is a procedure available under section 54 subsection 3 clause 2 which says that the second scenario under which I will give you ITC refund is inverted duty structure. So here I don't have to prove that I have done export at all. All I need to do is prove that my input which I am procuring for the purpose of my output, the rate of input taxability vis-a-vis the rate of my output, the output is lower than my input. It will obviously create a mismatch of accumulation of input tax credit. For that, there is a formula again. The formula terminally will be the definitions. One small change in the definition is what I want to bring about, but first let's discuss the numerical formula, which is again in 89 rule only. The maximum amount of refund that I can claim on account of inverted duty structure is the turnover of inverted duty structure of goods or services, similar to export zero rated supplies, inverted duty structure turnover divided by adjusted total turnover. Same definition of adjusted total turnover multiplied by net ITC. So something very similar to what we had done earlier for exports. But one small change is there. The change is this amount minus. So this is not the amount you will get it as refund. This amount minus the tax that is actually payable on my inverted duty structure. Let me put some numbers, then it will make sense. That is, my input is taxable at 18, my output is taxable at 5. I am doing only the turnover. That is, my total turnover is that only. Then, my numerator and denominator will be the same. In this month, I have done 100 lakhs of turnover. 100 lakhs is inverted duty structure turnover. Adjusted total turnover is also 100. How much is the ITC that I would have availed? 18. Net ITC will be 18. They will not give 18 as refund for me. 18 minus what is the tax that is actually payable on this inverted duty structure? 5. That will be deducted. The remaining amount, the maximum refund that I can get is 13. So that is how this formula is unique as compared to the previous formula. So the product will not be given as refund. The product of that formula minus the actual duty that is payable by you, actual tax that is payable by you will be deducted. Remaining can only come as refund. And in this, the very important part is, what is net ITC? The definition changes here for this calculation. Net ITC is only the ITC that is accrued on inputs. The two absentees here are capital goods as well as input service. So many people tend to think that my input service is 18, output service is 5. Can I go for inverted duty structure? Not possible, because input service related ITC cannot be even figuring in this formula. What can come in this formula is only my input related input tax credit. My inputs is 18%, that is material inputs are 18%, output is 5, we can. But my service is 18, our input services are 18, that credit is not even taken into consideration for this refund application, so we cannot go for inverted duty structure. There are industries like that. For example, coconut oil. Coconut oil is taxable at 5% output, but the inputs, the packing materials and all the other inputs are taxable at 12 and 18% also. They are not able to go for this inverted duty structure refund, because when you do this calculation on an overall basis, net ITC I am supposed to take only on the inputs. I am not able to take the services related credit. Job work is being done at 18%, but that 18% I cannot include it in the net ITC. So they are denied the refund in inverted duty structure, but that is how the section is, and it has been clarified on 31st December 2018, circular number 79 also, that this is how we want to do also. I just put a...
So such inputs have to be reversed in the books then?
Not necessarily. What the law is saying is, I will not give you refund, but what you have done is, you have earned that ITC. You could also use it for any other purpose. You might have another business in the same registration. For that, this ITC can be used. Then, as an auditor, what we will have to tell is, this current asset will never become useful for you. Write it down to P&L, which is what we will give as a suggestion. If it is not eligible, then we have to ask them to write off.
Inverted tax structure is applicable only for goods.
Yeah, only for ITC on goods, but my output could be service. Like the dyeing unit example I gave, my output is service, but for my output, if I take inputs, input services, they will not take input services. They will allow only inputs related ITC to be given back to me as refund. Adjusted total turnover definition remains the same. I just put a numerical example to further define this process. The input is being purchased at 3 different rates. I am buying it at 5, 12 and 18, and the respective value is this. The tax is 5,000, 24,000 and 18,000. Now my input services are there, which is 18%, 1 lakh and 50. Capital goods are also there, 18%, 5 lakhs. So output, I am giving it only at 5%. My output could be goods or service, doesn't matter, but my output rate is 5%. So I can clearly say, my inputs are 5, 12 and 18 and my output is 5. So there is a classic case of inverted duty structure which is arising here. But how I have to do the formula is, my net ITC cannot be all the 5 items. Net ITC can be only 3 items. That is pertaining to inputs. So 5,000, 24,000 and 18,000. My net ITC is 47,000. Using this, if I do the formula, then my eligible refund can only be 7,000. But generally, if you take this capital goods and input services also, the refund will look very high. But that is not allowed. In some of the cases, assume that here I have told you that 5% is his only turnover. He might also have 18% turnover. In those cases, your total turnover will increase. Consequently, your net ITC's proportion will come down. Minus the tax payable on the lower rate turnover will result in a minus number. Hence, you will become denied of that inverted duty structure refund. So many people are getting denied inverted duty structure because of that. There, as auditors, we may have to qualify. You are accumulating ITC unnecessarily. At least if it is with respect to capital goods, I can say capitalize it. Don't worry about GST, claim depreciation. Income tax burden will come down. But if it is pertaining to input service and that credit is getting accumulated, neither this remedy is available nor capitalization remedy is available. We will have to only ask them to write it down to P&L. And this inverted duty structure refund, having seen the process, we should also be aware of one more notification which I have brought it out here. Notification number 5/2017 of CGST. It has been amended by 3 different notifications which I have given there also. These goods or services which are figuring in these notifications, for these goods or services, even if there is an inverted duty structure, refund will never be given. So they have figured out certain goods or services. In these goods or services if you are dealing, and these goods or services is the reason for your inverted duty structure accumulation, I will not give you refund. One of the common things that is found there is supplies to railway. I can buy a, let's say, engine or a machine for 28% GST, but that machine is now being supplied to railway. Notification says that you have to supply to them only at 5%. What would have naturally happened is I would have procured it at 28, but I am giving it at 5%. I have 23% excess ITC. But that chapter 8607 engines are covered under notification 5/2017. So I cannot claim refund on that amount. Then what am I supposed to do? You have to figure out a way in which when you buy itself, you should buy at 5. Or you should tell railway to directly procure from your customer. You should be only an agent. Then only we can get out of this. Or you should have business other than railway business. So that this excess credit can be utilized for that business.
There's no time limit which we need to utilize the credit.
Correct. For utilization of credit, there is no time limit. Only for availment, there is a time limit. For refund, there is a separate time limit, which I will deal with later. The time limit for refund is 2 years. Now, this 2 years will have to be seen from different perspectives. 2 years from when? 2 years from the relevant date is the word that is used. What is relevant date? That has different meaning in different situations. In case of export of goods, and that too, it is export by ship or aircraft, it is not the date of my invoice. It is the date on which the aircraft or the vessel is leaving India. Sir, how will I know when the aircraft or ship has left India? Possible. If we go to IceGate, nowadays the IceGate login is also being given to the assessee. You can go click that shipping bill and find out the date on which it has left India. The EGM, as they call, Export General Manifest, the date of filing of EGM, that is the date it is deemed to be leaving India. So we can find it out. Why I am telling this is, an assessee might have raised an invoice in July 2017. The goods would have got actually shipped only in August 2017. 2 years time is not July 2019, 2 years time is August 2019. That is when it gets over. So the physical date of movement has to be taken into consideration, not the date on which you raise the invoice. Second possibility is if I am exporting by way of post, then the date of dispatch by my post office shall be the relevant date for the purpose of claiming refund. And if it is sent by road, say Burma, Nepal or Bangladesh, if I am sending it by road, the date on which it is crossing the customs frontier, that date shall be treated as the relevant date. So though I would have raised an invoice today, it will take some 17 days for it to reach the Nepal border. It is crossing the Nepal border only on that day. That is the relevant date. From there, within 2 years, I can apply for refund. This is with respect to export of goods. When it comes to export of services, like I told you earlier, the tipping point or the main point which they want to thrust on is the collection of foreign exchange. So what they have told us, take your date of receipt of payment, take your date of invoice, whichever is later is the relevant date. How can this work effectively? Normal scenario, I raise an invoice today, I cannot apply for refund or not. Because raising an invoice for service doesn't entitle the transaction to be called as export of service unless and until you collect the payment. I collect the payment on 7 months later, fine. That is the day on which you are supposed to have done the export. From there, within 2 years, you can apply for refund. So a person who is claiming refund for services export of July 2017, July 2017 is irrelevant. He would have raised the invoice in July 2017. What we should ask him is, boss, when did you collect the money? I received the money in December 2017, sir. Then your period of limitation 2 years ends only in December 2019. Because only when you receive the money, from there the 2 years clock starts. If it is the other way, I have received the advance first and then I am raising an invoice. Can I take from the advance date? Not possible. In this case, only from the invoice date, 2 years. So as an exporter of service, I have received advance. Then I am raising an invoice. Date of advance is immaterial. Only on the date you raise the invoice, from there within 2 years, you should have applied for refund. And finally, in case of deemed exports.
What if it is partial advance and then the rest?
In that case also, invoice will be the second activity. Okay, what you are asking is invoice, and then finally another part is received after invoice. If you want to apply, you have to apply only after the final payment.
Final payment.
Yes. I will tell you one more scenario also that is possible. Some of the cases the part payment would have come. Let's say we will complicate the scenario. I received $50,000. I invoiced you for $1 lakh. The next 50 you never paid me. Then what we can do is this invoice date we can take as the cutoff for $50,000 export and claim refund, because the next 50 was never received. Doesn't matter. To the extent of receipt we can apply. Possible. Because BRC will be the driving document, or BRC will contain this $50,000 receipt. The last one is, in case of deemed exports, what is the relevant date? For deemed exports, the relevant date is the date of showing the deemed export in the return. EOU, advance authorization supply, all this. In my GSTR1, if I show 3B file, that is the date which is considered to be the relevant date. From there, within 2 years, I can apply for refund. In case of inverted duty structure, the thing is, inverted duty structure, the thing that we have to keep in mind is, it is 2 years from the end of the financial year in which the inverted duty structure refund arises. So it is not 2 years from the date of the month in which the inverted duty structure arises. 2 years from the end of the financial year in which the inverted duty structure arises. Which, for example, for 2017-18, after audit only we are able to find that there is an inverted duty structure. We have time up to 31st of March 2020 to apply for the refund. So the 2 years is standard, but from where the 2 years will have to be started will depend upon this provisions of section 54. Refund of tax without the check of unjust enrichment, where the government will give us refund without checking that whether there has been an unjust enrichment or not. Section 54 subsection 8 deals with it. What is unjust enrichment? I should not have taken double benefit. That is the bottom line. For this unjust enrichment, how to stop this unjust enrichment, what they have suggested is, a chartered accountant certificate may be obtained for any claim of such refund which is exceeding 2 lakhs. But they have listed out 6 different scenarios in which only for one scenario they have made it mandatory for a chartered accountant certificate. 5 other scenarios they said there is no need for a chartered accountant certificate even if the value exceeds 2 lakhs. The scenarios that are there in 54 subsection 8 is a refund of tax paid on export of goods or services or both, or on input and input services used in making such exports. So ITC refund or tax paid refund. If I am making an application under 54 subsection 8, that's it. There is no need for a chartered accountant certificate even if the value exceeds 2 lakhs. Next one is refund of unplaced input tax credit under subsection 3. ITC refund, what we saw under 54 subsection 3, no need to get a chartered accountant certificate. Department will also not check whether you have done this transaction unjust enrichment or not. They will give you the refund. Let me give an example. The exports I have highlighted here for a reason. If you see the original CGST Act, they use the word zero rated supply. From 1st February 2019, the word zero rated supply has been removed and the word export has been inserted. What is the significance of it? Earlier, they meant if you do exports, for example, my export consignment value is 1 crore. GST on it is 18 lakhs. I bill my foreign customer 1 crore and 18 lakhs. Now, there is a clear indication that I have received the tax from my foreign customer. Still I can claim refund. Unjust enrichment will not be checked because I have done exports. Whereas, if I supply to an SEZ 10 lakhs worth of item, 1 lakh and 80,000 GST, I charge. He pays 11 lakh and 80,000 to me. Now I cannot apply for refund because earlier the words that were there was zero rated supply. So earlier I could have got the money from SEZ also and I could have got the refund from the department also. From 1st February 2019 they have amended it, removed the word zero rated supply and added the word exports. That means only for exports they will not check unjust enrichment. For SEZ refund, if you are going and applying, they will ask the question, did you collect the money from them? If you had collected the money from them, you cannot apply for refund. The restriction will be placed there. So the third one, where they will not check for unjust enrichment is refund of tax paid on a supply which is not provided either wholly or partially and for which invoice has not been issued or where a refund voucher has been issued. might not sound like a normal situation. I'll tell you a practical example which I have done. A client of mine who's a consulting engineer. He was asking, he was invoicing his client, only client he has got. So he was invoicing them at the rate of 4 lakh rupee per month for 9 months, starting July 2017 till 31st of March 2018. He has invoiced. Every month GST is also invoiced, and that is also paid to the department. Then later on the company said, we never agreed 4 lakhs with you, it is only 2 lakhs. So then he realized, oh, we have wrongly invoiced them 4 lakhs. Then he said, how to correct it? He said, raise a credit note. So he accepted and raised a credit note, but the credit note was raised in June 2018. For how much we had raised a credit note is for 18 lakhs. Because he has already billed 9 into 4, 30 lakhs, 36 lakhs. Half of it we have to now raise a credit note. We have raised a credit note for 18 lakhs. How will I disclose it in my 3B? June month 3B, I have only 2 lakhs as outward supply. How can I reduce from 2 lakhs 18 lakhs? I cannot reduce. I have to report only 0. Okay, June, July, August, September. Only for 4 months I can report 0. Because a credit note issued for a financial year cannot be offset after September of the following financial year. So after September what will happen? Can I use this credit note further? I cannot do. Then what should I do now? I will have to go and apply for refund. I will tell the department, sir, 18 lakhs I have wrongly disclosed as additional turnover. For that I have also paid the tax. On that 8 I was able to adjust. Please give me back the tax pertaining to the 10 lakhs turnover which I have wrongly disclosed. For this, chartered account certificate is required. Because here there is a books and records that is given where we have to look at it and find out that what is the problem here. Then ask them, okay, give me a records, I will give a chartered account certificate. It is there in Rule 82, Subrule 2, Clause M, where it is mentioned what is the format also is there in the CGST rules, based upon which we can give a certificate. It is just a paragraph, 4 lines, 5 lines, standard paragraph.
But in this case, that 18 lakhs, whether you can show it in the return?
We can never compute it.
How can you like?
Which one? That 18 credit note, what you said. Now I will claim for this refund, and then I will say in my annual return for 17-18, I will disclose only 18. There the auditor, if there is an auditor will give, or I will disclose only 18 in my annual return. Tomorrow department officer comes, I will show him all the proof.
Annual return is still not filed.
What we have to do is take it into conjunction with that. That is how we are trying to close this problem. Saying that it is only 18 lakhs, sir. That is how we want to close it. Though we would have disclosed as per 3B 36 lakhs. As per GSTR 1 36 lakhs. Subsequently we will have adjusted only 8 lakhs. The 10 will remain unadjusted, but I have to disclose it in my annual return.
The problem is those invoices or credit notes, it is shown in the return. The department may not accept.
Which is why I wanted their concurrence first by applying for this refund, because my credit note I can show it in GSTR 1, which will flow in as 2A. What I can never do is, to the extent of the credit note, I cannot adjust my 3B. That is the issue. That is because, again, 3B is an intermediate solution. 3B is not a final solution. So 2A not being there, 3 not being there, we are in this problem. The next scenario is refund of tax in pursuit of Section 77. Section 77 read with Section 77 of CGST, read with Section 19 of IGST. They indicate only one point. Where I should have charged CGST and SGST, I have wrongly charged IGST, or vice versa. Where I should have charged IGST, I have wrongly charged CGST and SGST, place of supply. I have taken it wrongly, so I have done this. What should I do? 3-step process. 1. Pay the correct tax. 2. Apply for refund of the wrong tax. 3. You don't have to pay any interest. So even if the department finds out after 3 years that you have wrongly paid IGST payment instead of CGST and SGST, I will have to make CGST and SGST payment. I don't have to pay any interest. But unfortunately, I should have applied for refund within 2 years. They will find it after 3 years. Now I cannot even apply for refund. Let's assume a situation where it is done within 2 years. Then I can apply for refund. In that refund case, they will not check for unjust enrichment. They will give the refund without even certificate of any charge. And E, any tax, interest, if any, or any amount paid by the applicant, if he had not passed on the incidence of such tax. In this case, charge account certificate will be required. Where we have to certify that he has borne the tax, but he has not passed on the burden to the assessee, to the customer. Then he has to apply for this refund allowed. For this purpose only, in the refund menu in the GST website, you will see any other refund, there will be a button. Normally ITC refund, tax paid refund, inverted duty structure refund, deemed export refund, all this will be there name-wise. And there will be a first item which is called any other refund. You can go for this earlier discussion, point C that we discussed, and this point E, go under the any other refund option. And then any tax or interest gone by any class of applicants to be notified by the department. Nothing has been notified as yet. So these are the situations where the department will never check as to what is our
Whether there are any
incidents. Yeah. Unjust enrichment will not be checked. The incident of tax passed on or not will not be checked, and refund will be granted first.
In case of supply to SEZ units,
Yeah.
the department is asking for the acknowledgement or invoice countersigned by the
The SEZ office.
SEZ
Correct. That is mandatory. In case of exports, we are the shipping bill. In case of SEZ inward movement of goods or services, that SEZ chapa has to be there.
Yes.
Which many people have not got or they have lost those copies.
Many officers are not issuing that chapa.
Chapa. But it is mandatory when they are moving. At least now when applying for refund, many people are realizing it. Which is what I have also been stressing, because in Rule 89, Sub Rule 2, it is a mandatory provision that in case of SEZ, sometimes you are applying for refund, that chapa obtained copy only should be uploaded as a document for claiming refund.
What they said, they don't have any time to put chapa for each and every invoice. So instead, we used to give a cover letter showing all the invoices.
So they will give the chapa on the covering letter.
On the cover letter. That's a practical solution.
But is it being accepted by the GST officer for refund? If
Yes.
yes, then this can work. Maybe I'll suggest this also to my client who is struggling now.
Because we have to show invoice number, date, name of
Statement.
every statement, and we have to attach all invoices. And you should have to self-attested copies.
And he will countersign it and give it as a proof.
Yes.
Possible. But the requirement is there. It is there in the rule. Hence we are supposed to do that. So yes, any questions from your side? I have done my bit. Refund practical aspects, what are the issues? From my end, I have pushed the problem to your end. Now you will have to ask me any questions.
Refund, what we can't get refund, what we are not able to claim it, you told me to charge it off to P&L account.
No, I'll tell you, sir. If that refund is not obtainable, that is, I can carry it forward, but the carrying forward will not give any use. It will only accumulate.
How to reconcile with the ledger?
Electronic credit ledger.
Department.
No sir, see, the ITC that you applied, ITC that you took in 3D and the entry that you passed in your ledger will always match. This ITC will be there in electronic credit ledger also. Tomorrow you decide to take it off to your P&L, in that month in which you are taking it to P&L, show it as a reversal. Any other reversal is there in our 3D. There you show it, it will go off from your electronic credit ledger also. That way we can remove it.
But we can carry it forward indefinitely.
So the utilization, there is no time to it. Tomorrow even something comes, you can utilize it.
So he won't be, the client won't be willing to reverse in the credit ledger.
Correct, but that is something like this deferred tax, deferred tax asset, deferred tax liability, where there is a reasonable assurance that the timing difference will take care of it sometime only, will carry it forward. Where I am not very sure whether it will get reversed, meaning the utilization will happen, then it is better only to suggest to take it off. Good. If there is no other doubts, I think I have got only one thing to say. Thank you. Thanks a lot for being a patient audience. Post-lunch session, though it was a post-lunch session, I could see active participation and none of you dowsing off, which in itself, I take it as a response that you have given for my session. Thank you. See you all some other time. I think we have to inform them. The session has not over.
Supply to SEZ is not deemed export.
No, it is zero rated supplies.
Zero rate.
Deemed export is under CGST Act. Supply to SEZ exports are exclusively covered under IGST Act itself as zero rated.
For which, in case you don't charge GST, you have to give LUT.
Correct. LUT and refund procedure, everything is normal. Without payment also, you can do the supply to SEZ.
Service and goods.
Yes, goods and service. SEZ related dealing can all be treated at par with that. Only for this unjust enrichment check, SEZ is not included. That's it.
Can anybody come forward to present the limit of the dispute?
Who is nearby? Yes, sir.
Active participant.
Friends, we have paid 2,500 rupees as fees to the institute plus GST for 50. Comes to 2,950 rupees. We have been attending the GST program on Equitas credit morning and afternoon. We have e-waiver and refund of GST. I hope we got the money back from the faculty on attending this program, and it was a very nice program. And on behalf of the members and the institute, I am very happy to present you the